It's been a great performance.
Where is it running right now?
And it was the high. I was looking at
The pre-market.
the yearly high and low. But the pre-market is up about $3, I think. Actually, 322 now. The ask is 327, so I don't know if it's trading at this point. And I think that you mentioned this is just, I got a pretty 324, closed at 323. The bid's 324.54.
Okay.
So that'd be up about 40 just on the bid. But it got.
In a day when the futures are down by 300.
Right, and the high on the stock's like 350, 349, but I was surprised in April it got all the way down to 228. Just wow, it's 5 after 7 on the East Coast. You're watching Swap Box on CNBC. I'm Joe Kernan along with Becky Quick. Andrew's off today. Stock futures pointing to sharply lower open. Dow's down about 300 points. We're having a technical issue with our data system. We're working to get our charts back on shortly. What life goes on. In the meantime, everybody waits for Saturday during football season for the NCAA. Steve Leisman is here with the CNBC All-America Economic Survey. And these guys, Steve, Senior Economic, we're good to see you. With a look at some of the athletes' views on
it's not just athletes.
It's not all America.
The coaches as well.
Because those are funny. Those are funny interviews. You got to admit when you go with an ask.
I did that once,
When you
after one of the Super Bowls, we talked to them.
you go in and ask them, what do you think of Jay Powell?
But this is
what about quantitative easing? Like you ask them that.
They have some good opinions.
Some of them really do come back and say, I think that they've been way too
one of my
monetary policy.
You don't have time for this. One of my first investigative stories was talking to football players, NFL players, how they lose their money, why they, and it was an interesting story about money management and how they decide to buy things and get out.
So for the, would you say, 50th time, we should point out this has nothing to do with athletes?
This is a nationwide survey.
But how many times do you think? Is this maybe the 50th time
How many quarters have you done this?
that I've said?
2007.
That I've used that tired
We
joke.
took a little break during 2009. We only did one survey because of.
That's what I'd say. How many quarters?
But it's a lot of quarters, and I'm not sure the joke is old. I think Greco's back there in the control room with his hand in his head, and shaking his head and saying,
No, he's off.
Not again.
If he was there, he's off.
He's off today, so we saved him that. But Joe, here's the results. Americans' views on the economy turned more negative in the third quarter, deepening concerns about jobs and inflation on the outlook, and those sentiments, along with the shutdown, dragging down the president's overall approval ratings further into negative territory. The CNBC All-America Economic Survey of 1,000 people nationwide, finding that President Trump's overall approval dropped just modestly to 44% from 46%. Disapproval rose 1 point, but it's the economic approval that fell a more substantial 3 points to 42%. Disapproval rising 2 points to 55%. And this is continuing a second-term trend where President Trump's economic approval is running below his overall approval. He's averaged a net minus 11 in the 3 surveys so far in the second term, and that compares to plus 5 on net approval on the economy in his first term. Overall approval is slightly less negative than the first term, but now it's below. Hold on a second, Becky, you're jumping the gun, but you are right as usual. Economic approval hurt by views on specific issues and overall sour views on the economy. Take a look. The president's net approval is plus 5 on his handling of the southern border. That's his big issue there, and it's down, but still positive. Turned negative on deporting illegal immigrants, improved a bit on foreign policy, but it's still negative, and it's turned substantially, Becky, more negative on tariffs. You can see there, the president remains deeply underwater on this issue, inflation and the cost of living, not doing well there. The percent of Americans optimistic now and optimistic about the future of the economy on average this year has risen to 24 from 17. But look at what's happened to pessimistic about the economy, rising to 57% from 40% on average.
So you're undecided.
Yeah, not many people undecided on that issue. When it comes to who will be blamed for the economic fall, the potential economic fall from the shutdown, 53% of the public blaming congressional Republicans and the president, compared to 37% for congressional Democrats. That's a little wider than some of the other polls that have been out there. The survey has a margin of error of 3.1%. 40% of our respondents were Republicans, 38% Democrat. We do not solve for that result. In general, the president maintained overwhelming support of his party and equal opposition from Democrats. The key to the results is that independents are leaning really negative on the president, minus 20, minus 30. Dems are minus 90, Republicans plus 90. So then you figure out where the independents, they're minus 20 to minus 30 on some of these approval ratings. And I was surprised by these results. I'll tell you why. One is I don't see the economy as that bad.
No.
In the overall economic data.
All-time highs.
We live in this milieu where we come in other than the last couple days, and the stock market's up and everybody's buoyant. That's not the case when you talk to average Americans here, according to this poll, when it comes to the economy. They're down on jobs and they're down on inflation, and they really dislike these tariffs.
I was listening to a conversation with Christopher Waller yesterday, and he made some really interesting points just about how the labor market is probably much weaker than we anticipate. I know that we've talked around some of these issues, the feeling of participation being down, but because we are losing basically people in this country at this point, zero immigration, if you look net,
Right.
that if you were to keep it at those consistent levels, we'd probably be more at a 5% unemployment rate, and that might be something. That's why he thinks we need to cut rates more quickly, and is kind of sticking out for that. But if that's the case, it would help explain why people don't feel so good about this economy.
I think it also explains, I was listening to your Amex report on American Express.
No.
They're doing fine, and you hear a lot of comment from Fed officials about higher income people propelling the economy and consumption here. Whereas low and middle income, I think they're feeling it. Look,
The grocery prices.
I guess the president's trying to bring us through a transition here. That he has a very different idea of how the economy should be structured, and global economy, and perhaps there are benefits down the road, but it looks like the transition here, and actually, Scott.
The government surplus numbers yesterday or something.
Nah, not really. They were less. There were some specific changes in there, and September's a surplus month, and you add the 20 billion or so, or 30 billion of tariff numbers.
Right, the tariff numbers help with that.
Yeah, but the only thing is that we're up 36% since the panic of the tariffs. It's, maybe we're going down from here. Maybe we're going down from. The other thing is, I think Trump will, on any issue, will never get above 40%, basically, with most polls. And it goes with the government shutdown. No one in their right mind doesn't realize that a continuing resolution that's being blocked in the Senate by Democrats is Republican. It's just, if you do, maybe mainstream media, you hear enough of mainstream media, it's party in power, but even that doesn't explain it. It's a 24-page thing that Schumer voted on the first time. He's got his own individual problems with AOC. Well, and if you start talking about people dying, and if it's the Obama, if you don't, these hyped up super subsidies from the pandemic, which are really, it's not the Affordable Care Act, it's the unaffordable care act. Something needs to be done because premiums are skyrocketing, not because of the expiration of subsidy. But no one ever went broke. I won't finish that statement, but you can't figure out what's going on there. I mean, that's a sad poll.
I will say this, that
I want to say about polls. You remember the person in Iowa that had to resign after she took that poll? She had Kamala up 3 points, and she lost by 4.
And we were within
So your answer is your poll sucks.
No, we only get a poll when we actually when we go to the national election, we get a real poll, and we make it. November is going to be interesting in Virginia. We'll see Virginia, New Jersey.
But I have to admit, I'm not sure how much these political polls at this juncture matter. Let me explain why. The key to what may or may not happen in Congress is the extent to which congressional Republicans break with the president. There is no
Democrats break with Chuck Schumer.
That will never happen.
Let me leave that to the side.
Or Hakeem. They're the Borg collective.
But even while these numbers look like they're going away from the president, and let me just add one addendum here, which is that the Republican pollster pointed out, Joe, that these numbers for the president may not be that bad considered when they're in the subject. That's an asterisk we're putting out there. But if I don't see in these polls, because of the popularity of the president within his own party, and the fact that there are so few contested congressional districts, I'm not sure how much it matters at this point. that public opinion is moving away from the president when it comes to these issues? Because I don't know that there's a lot of it.
They're playing this out.
There was a poll yesterday. The previous one, I think there was Fox News, but Chattarelli was down 4 in the most recent poll. That's almost within the margin there. You know, you had down in Virginia, you had the Stanford, whatever the name is, unable to disassociate from this comment about killing someone's kids. And I don't know whether Winston Sears has a better chance. We have Youngkin on, of course. He's going to say, yes, Sears is going to win, but he's obviously got a force in it. But it should be interesting. And then
I would just say,
Mike McJohnson, they're picking up seats in the midterm. That's like
Well, on the statewide things, not the congressional district, but the statewide things, that's where the independents are going to matter. Independents vote economics. It's that simple.
Steve, thank you. When we come back, the future of the media business will be joined by the co-founders of the news platform Semaphore, and later, the pulse of the retail investor and the appetite to trade. Charles Schwab CEO Rick Wurster will be our special guest. That's coming at 8:10 a.m. Eastern. Swap Box, everybody. Let's run down the markets. The futures have certainly improved over the course of the last hour. You're going to see right now that the Dow futures are down, but only by about 19 points. We were down 300 earlier this morning. S&P futures down by 23. The NASDAQ down by 144. This is all coming as some of those bank stocks have kind of rebounded from some of the lows. Those concerns about credit that we were looking at in the regional banks yesterday still out there, but maybe not looming as large as they were an hour ago. We're going to talk to Leslie Picker in just a little bit about some of those problems and explore and dive a little deeper into it. But you'll see right now, if you take a look at treasuries, this morning it looks like yields are still lower for the 2-year at 3.42. The 10-year is ticking slightly higher, but it's still below 4%. 3.98. Yesterday was the first close below 4% that we've seen in about a year. Rick was telling us yesterday, Rick Santelli, that if we close below 4% for the week, that would be something he would sit up and pay attention to as well. Oil prices still under pressure this morning. You're talking about the lowest levels we've seen in quite a while. We were at $56 and change an hour ago. Now we're sitting at $57.20. So these broad gains, this kind of reemergence that we've seen, has happened across the board with all of these issues. Gold prices were at new highs earlier this morning, still at $4,344 an ounce. And then if you take a look at Bitcoin, it was at $104,000 an hour ago. It's picked up a little bit too. Along with that bid that we've seen for equities, 106,000 right now for Bitcoin.
Semaphore celebrating an anniversary today, marking 3 years since the new startup set out to reinvent how global audiences consume and trust information. Joining us now, Semaphore co-founders, CEO Justin Smith, Editor-in-Chief Ben Smith. Only one understood when I said, did you bring any cough drops? You must be a little bit younger. Are you the younger of the...
Wow.
Are they not around anymore?
They're not around.
They're Smith Brothers cough drops are not... I mean, you're not
You
related.
can bring them back.
He gave me some when we started Semaphore. So
Yeah, he did. And you like handle the news, you handle the business. And,
I do.
But you're here today, which makes me think, for the business, being on Squawk Box is such an important thing for the business. You decided to show.
It is, and listen, thank you so much for having us.
Of
Honestly,
course.
3 years tomorrow, to be a 3-year-old global news startup in 2025 and to be profitable is something that we're very, very proud of, and it's a moment that we are so thrilled to be here for. You know, the world is so unbelievably complex right now. This is what you cover every single day, and imagine being a CEO or a C-suite executive and how you're managing all this incoming change. And our view, Ben and I, when we started Semaphore 3 years ago, was that the traditional news platforms, newspapers and magazines and television channels were not necessarily built for this moment. And so what we did is we created new products that we thought were much better for these people. Number one, we went right to the question of partisanship and bias and polarization. Number two, it's a global world, and frankly, most of our American media and European media is quite parochial. They don't actually look into Asia and the rest of the world and see the interconnectivity. And lastly, we had this important insight, which a lot of traditional media do not get, which is everything needs to be short and concise and tight, but unlike others, we're short and deep and profound, and that's a really hard thing to do. It's a bit like cracking the code. Can you make content really concise, but also incredibly, incredibly deep and sort of cerebral? And I think that's what Semaphore has done across 3 years.
We can learn from that. Everyone.
I hope you're a reader.
I am, but the first thing I read about news was a Mervyn Block book called Writing Broadcast News Writing. Sharper, shorter, like
Deeper.
Strunk and white. It's
Yeah.
like, one idea per sentence. People are at home doing the dishes. Don't use a $5 word if there's a nickel word that can describe what you're trying to say. Keep it in the active, subject, verb, object, and you guys try to do that, I think, philosophically.
But it's also this straight up the middle piece. I mean, we had a conference yesterday in Washington with...
Mainstream media always thinks they're straight up the middle. I think you could go to pre-Barry White CBS. Dan Rather thought old CBS was right up the middle.
I do think a lot of the media took on this idea that the goal was to tell people how to think, and I think we think about it for our audience. You know, they want to understand how you think, they want to understand how the president thinks, they want to understand how the Democrats think. They aren't looking to us to say this is how you should think.
No, they're looking to Hollywood. I do anyway. Mark Ruffalo tells me
that comes true.
But
Yeah.
Usually I just
Comes through on the
see
show.
what he thinks. I was actually going to talk about Barry Weiss or CBS, and I was going to make the point that, yeah, Trump has got
gotten into the influence business on mainstream media, but something elected Trump. And that same group was looking at mainstream media and took it down to about 6% approval. So I don't know which came first, the chicken or the egg. I think there needed to be a catharsis or some type of shift. Maybe that's what you were trying to do.
Yeah, I mean, I think we know when you have those numbers that low, that's not Democrats or Republicans. That is everyone. I mean, there's a huge sense that in the media, you know, that people feel totally overwhelmed on one hand and just don't know what to trust on the other. And I do think, you know, we are really trying to rebuild that from scratch, essentially, by being transparent with people.
Hey, just to kind of comment further on the return that we've seen in the futures.
Yeah.
There were some comments on Fox Business. President Trump talking about high China tariffs, asked if they will stand. He said no. And, you know, he was saying, I think we'll be fine with China. And that could just, you know, look, a lot is driven from the White House these days and from the administration. And you kind of watch it play out.
You saw over the weekend, oh yeah, don't worry about those, don't worry about that 150%. You gotta take his word for it. But I think we kind of have learned that you know, he comes up with the worst case scenario, and that really is the way things turn out.
Yeah, and this is, I think, kind of the level of complexity that your viewers and that we're all living with now, where, and you and Carrie Firestone were talking about this earlier, that, you know, that you have the markets here and you have Washington here, and these decisions being made in Washington are just constantly rippling through the business world in a totally new way.
The number of global CEOs that want to be in Washington these days is unbelievable. I mean, we've got an edition, Semaphore has a new edition in the Gulf, you know, and we also have an edition in Africa. We're launching a new edition in China and Asia soon. So we travel around these places, and literally everywhere we go, CEOs saying, we want to come to Washington, we want to come to Washington. So actually, one of the things we've done, which has helped us become profitable as a young company, is we built our company around convenings of CEOs. And so we have this convening called the World Economy Summit, which is against the backdrop of the IMF World Bank meetings every spring. It's now the biggest CEO convening in America. 200 of the Fortune 500 CEOs come in person. We expect to double that next April. And many of them are CEOs from Korea, from China, from Europe, where Washington, D.C., which has never happened before, is sort of stop number one on their global business travel calendar. It's a big, big change.
Amazing that you guys decided to do that and took the plunge. It's actually working. Congrats.
Well, do you like going to Switzerland every January, or would you prefer to come to Washington?
It's so funny that you said that, because I'm told that may be in the offing again. After I had a suggestion, that guy's gone, Klaus Schwab, right? What's wrong with instead of Davos, Canary Island? Is anyone? No one is. You can't have the World Economic
Talk
Forum.
about trapping your audience.
Yeah, exactly. Exactly. In warm weather, with beautiful beaches. No, I think it's gonna, we're stuck, aren't we?
I think so.
Davos. Gentlemen, thank you. Smith Brothers, not related though.
Thank you guys so much.
Thank you so much for having us.
Miss Ben Semaphore.
Semaphore Justin.
Thanks, gentlemen.
Thank you.
Thank you.
All right, when we come back, the move in regional banks, we're going to run it all down when Squawk Box returns.
Time now for today's AFLAC trivia question. Which continents have never hosted the Winter Olympic Games? The answer when Squawk Box returns. The answer to today's Aflac trivia question. Which continents have never hosted the Winter Olympic Games? The answer, Africa, South America, and Antarctica.
Bank stocks in the United States and abroad are under pressure. Leslie Picker joins us right now to break down some of the catalysts for that. And Leslie, this has been a slow boil, but yesterday we heard a lot more.
Yeah, a slow boil indeed. Pretty much every company with a loan book was in the red on Thursday. Credit concerns very much front and center. Regional banks plummeting, alternative asset managers plummeting. Jefferies tanked once again as its name has become increasingly synonymous with the First Brands bankruptcy. Credit concerns at Zions and Western Alliance, really the catalyst that spooked the entire sector. Zions are revealing in a filing that it is pursuing a lawsuit and taking a provision of $60 million due to what it describes as a, quote, apparent misrepresentations and contractual defaults related to a borrower. Western Alliance filed its own 8K as well, saying it doesn't need additional provisions related to its exposure to the borrower, which it had sued back in August, alleging fraud. The bank believes collateral coverage will cause it to avoid losses, but Western Alliance also had exposure to First Brands, so lots of questions circling this space. Bank of America, another name to watch, as analysts point out, it too has exposure to that same borrower, although its exposure is minimal and senior in the capital structure. Even though exposure for each of Zions, Western Alliance, and Bank of California stands at under 2% relative to their respective tangible common equity, the markets are just overall on high alert about cracks in the credit markets following the bankruptcies of two auto companies last month that said private credit stocks roiling, and now you're seeing that spillover effect also in regional bank stocks. Several other regional names, including Regions, Truist, Fifth Third, Comerica, have reported earnings this morning, though, with results viewed as largely positive, guys.
Hey, Leslie, just to clarify, no problems with Bank of America. This is Bank of California that you're specifying. We
Yes.
saw the charts that were here, but you said America, and just for anybody who was listening, let's clarify that. Bank of California, go through that a little bit again for us.
Correct. Bank of California, they have minimal exposure, but it's senior in the capital structure. So they're kind of part of that same borrower contingency, but nobody expects them to have any serious issues as it pertains to that. Not Bank of America. Bank of America did not have exposure to this one borrower that's going through litigation with 3 of those regional banks, and likely some more.
Okay. Leslie, thank you very much. I have the feeling we're going to be talking a lot more about this.
Hopefully.
Well, we'll talk about what we see. We hope it doesn't boil into something bigger. But again, it is of interest and it is of notice. Yesterday, the financials were the worst performer. 10 of 11 of the sectors down, but the financials were the worst performer out of the whole bunch. It was a bad day. Leslie, thank you very much.
And coming up, the government shutdown. It's going to run at least through the weekend. We're going to talk about that and more with Oklahoma Senator Mark Wayne Mullen at 8:40 a.m. Eastern Time. Squawk Box returns in just a moment.
caution flag is out for private credit after a couple of bankruptcies. We're going to get more on the state of that market next. And later this morning, Charles Schwab President and CEO Rick Wurster will join us following the company's latest earnings report. He's going to be with us at 8:10 a.m. Eastern Time. Squawk Box will be right back.
I shouldn't say this, but when you see one cockroach, there are probably more. You know, and so everyone should be forewarned on this one.
That was J.P. Morgan Chairman and CEO Jamie Dimon warning about the private credit market in the wake of the First Brands and Tricolor bankruptcies. Dimon making those comments during the company's conference call earlier this week. And joining us right now with more on the potential stress in the system is Mark Pinto. He is Moody's Ratings Global Head of Private Credit. And Mark, a lot of questions about what's happening here, people looking for other cockroaches. What have you seen so far, and what have you found in that search?
Yeah, good morning, Becky. Maybe related to what we just heard, one cockroach does not a trend make, right? So I think what you need to focus on here is the nature of the losses, the materiality of the losses, and whether or not we're seeing a trend.
Yeah, one cockroach does not a trend make, but you know, where there's one cockroach, there's usually more. I think that's why Jamie said that. In terms of, this may not be hugely systemic. Even these companies that have warned about this have said that, you know, it may not even be material in some of these cases.
Right.
But there are questions that are being raised about, in this credit boom that we've had for this long period of time, have standards relaxed, at least in some places, particularly when you're talking about off-balance sheet issues?
Yeah.
What do you think the answer is?
We have been highlighting, whether it's both in the public markets or the private markets, some loosening of credit standards. We've seen looser covenants in both the bank syndicated loan market as well as the direct lending market. But when we dig deeper here and look to see if there's a turn in the credit cycle, which is effectively what the market seems to be focusing on, we can find no evidence. Now, that's what we're seeing today. That could always change. But if we look at the asset quality numbers that we've seen over the last several quarters, we're seeing very little deterioration at all. In fact, if you look at some of the default statistics that we follow very closely, right now, if you look in the global high yield market, the default rate is a little bit under 5%. 2 months ago, we saw 11 defaults within the portfolio of companies that we rate. Last month, it was only 8. We anticipate that next year, the default rate will go below 3%. So that doesn't indicate to us that there's really a turn, again, in the credit cycle.
Yeah, that's certainly what we've heard from the big banks in their earnings this week. And many of them, like, not even taking reserves or taking reserves off the table at this point.
Right.
Maybe that's the headline here, is you think the default outlook is going to improve next year, get even better than where we are right now.
I mean, I'm at a conference here in Washington, D.C. this week. It's called the Institute for International Finance. And you have close to 2,000 bankers, asset managers, and insurers talking about what's happening in the globe today. And one of the words that I keep hearing is resilience. I think with respect to GDP growth, we're doing much better than many people thought just 6 months ago. So again, the credit conditions, looking at GDP growth, as well as an expected decline in interest rates, we feel the credit quality is in a pretty good place today and potentially may improve. What we try to do is follow the trend lines, not the headlines.
Mark, when was the last time that you all at Moody's saw things getting worse and kind of warned about it? Like, how frequently does this happen?
I can tell you, it's interesting because when we first started to see some of the dialogue around deregulation, which, by the way, we now call modernization, or is being termed the modernization of the regulatory framework, and we saw some concerns around GDP growth, we did put the U.S. banking system on a negative outlook. So we were somewhat concerned that the conditions were arising, that we could see a deterioration in credit quality. And in fact, that has not come to pass. And in fact, our own GDP forecasts, as well as some others across the market, have been revised upward. And we still see some upward pressure with respect to, again, the GDP growth we're seeing in the United States.
Okay, just in terms of your outlook now, where you expect defaults to fall below 3%,
yes,
put that back in time. Like, what is that
this
reflective
is really
of another time?
Yeah, on average, we see default rates somewhere in the 4 to 5% range. In some of the crises in the past, we've been at 7%. Great financial crisis, we were in double digits in the teens in terms of default rates. So what we're seeing right now is a very, very benign market. Again, things could change because risk is on the move. You talk a lot about private credit. Risk is moving out of banks into non-banks, out of regulated, highly regulated institutions and markets into less regulated institutions and markets where there's less transparency. And I think that's something that the market has been focusing on. If you can't see it per se, then you may shoot first and ask questions later. So I think that's something that the market is probably focusing on a bit more in the context of what we're seeing on the screen.
That is a good counter view to what we've heard a lot of over the last 24 hours, over the last week. Mark, appreciate your time today.
No, thank you very much for having me.
Again, Mark Pinto is Moody's Ratings Global Head of Private Credit, and it was good talking to you today, Mark.
Thank you.
That's the ratings agency. He's the real Moody's. Let's just make that point.
Yeah.
Because it gets totally conflated when Moody's Analytics.
No,
I wonder what those guys at the ratings agencies say when they hear these prognostications coming from the guy at Moody's Analytics.
That was not what I was expecting to hear. That
No, I know.
These things are going to improve.
That's what I mean. That's what made me think of it. Go to the other guy. I'm sure the world's ending. Coming up, the impact of the government shutdown on the nation's major airlines. Former New Hampshire Governor Chris Sununu, now the CEO of trade group Airlines for America. The shutdown and more when he joins us next. Squawk Box returns in just a moment. Travelers are starting to feel the impact of the government shutdown now in its third week as airline flight delays and cancellations are starting to tick up. Joining us now for the latest, former New Hampshire Governor Chris Sununu, now CEO of Airlines for America, a trade group representing major airlines like American, Delta, United, and others. Thanks for joining us.
Only the best airlines. That's what we represent.
Those are some top tier, and we've had so many conversations on this set about it. I've always loved the airline. Try living without the airlines. Try passing 1,000 semis with with your white knuckles when you're trying to head down.
Complain about them.
And people complain about it, but look at the quality of the product. Right? It's more affordable than ever before. TSA lines take about 5 minutes to get through.
But the TSA,
airports are like mall shopping.
That leads us into the government shutdown discussion. That worries me. Is that what caused these clowns to finally come to an agreement last time? Was it the TSA?
That's exactly what it was. In 2019, you had this huge traffic jam on, I think it was January 25th, 2019, and all of a sudden everyone in Congress said, okay, this is a strategic national asset that we've brought into a screeching halt. I don't think that's what's going to happen this time. So there's a few mitigating factors. First, President Trump, Secretary Duffy, the FAA, they're mitigating a lot of this. So there are some slowdowns.
Mitigating meaning what, though?
So when Burbank shut down, they had San Diego landing planes in Burbank. When Nashville had a problem, they had Memphis coming in.
They're already stretched pretty thin.
And they're already stretched very, very thin. I got to say, when the President and Secretary Duffy came out and said, look, if you're on sick time, we don't know if you're going to get paid. So those TSA workers that are just working, the air traffic controllers, they're working their butts off with no pay right now. Now, the ones that might be calling out, they're not supporting the team. And I think what the president said was, look, you got to get in there. You got to do your job, or you might not get paid.
How about you just figure out a way to open the government and pay these people? That is ridiculous.
And what I think is going to happen, what folks aren't looking at is SNAP benefits. This is actually going to be a healthcare thing in the states. States, as a former governor, I can tell you a state will hold about 30 to 40 days of federal funding for SNAP benefits, for food insecurity. Those are going to start running out starting next week, late the week after. That's going to be the triggering effect. So I think the federal government's doing a great job mitigating what really caused the crisis 6 years ago. What you're going to see in the states is going to drive folks back, whether it's on the Republican side or the Senate side, the Democrat side. They'll have to figure that out. But I think the airlines are doing a phenomenal job, and air traffic control is doing a phenomenal job not falling into the trap of 6 years ago. So, and if I know I'm from the airline, so obviously I'm biased, but I'm also a Republican governor, which means I'm usually right. If I were betting big, if I was investing, I would be investing in the airlines. They're putting, what, $12 billion already in air traffic control reform, maybe another 20 to 30 billion that's going to follow that. So they're going to modernize this amazing system. Airlines are making money, making profit, even regardless of the bad job that previous administrations have done building that infrastructure. When you add that new modernization in infrastructure, I mean, the sky's the limit. I silenced Joe.
You didn't silence me. No, you didn't silence me. You watched the show. Sometimes I don't know if I want to take it somewhere, but I will. So we have had a conversation about Sean Duffy, and I just, because it's important for you, it's important when we look at it's important when we look at everything airline related, that I think maybe we get a decent picture of this guy. And I didn't know some of the stuff we talked about with him. He's not just a TV person.
He's amazing.
Yeah.
Secretary Duffy
He was in here last week when you were out.
I didn't realize that, but we had a discussion. He went up a firefighter's pole 60 feet and won the.
He's one of the greatest lumberjacks of all time. Yes, he literally is the handsome lumberjack. My wife reminds me of
fireman.
Time, but
So
he's amazingly skilled.
A veteran.
Yeah, he's amazing. The FAA administrator, right? He's not some political hack. He ran Republic Airlines. He's been in the trenches. He's a CEO. He's the guy.
Because you know what the other side, what the opposing side says about Sean Duffy, and they're pining for the days of Pete Buttigieg.
Nobody is pining for the days of Pete Buttigieg. I don't care what political party you're from. If you're in the world of airlines and transportation, nobody wants that administration back. It was nothing but punitive, massive regulations, take 10% of the airlines out of the sky for, DEI and environmental reasons, crushing the industry, completely crippling it. Now you have a president that actually ran an airline, right? The Trump airline, loves the airlines, understands the strategic national asset, and is making the real investments, and then put people in place like Sean and Brian Bedford that say, we're going to get it done. They're putting their reputations up. That hasn't happened before in a long time in government to say, we're going to go after a $30 billion high-tech modernization infrastructure project, and we promise we're going to get it done. That's real money and real leadership.
What was your approach to Obamacare when you were in New Hampshire? What was your approach?
Tolerated it. I mean, it was the law of the land. We had to find it like every other.
What should we do with it? Because people don't understand
We
it.
gotta fix it.
But they don't understand what's happening right now. They don't understand why premium. They think, I don't know. If you get subsidies taken away, they think that you're removing some type of entitlement.
At the core of all this, there's no free market in healthcare, right? Let's start there, right? The government aspect of healthcare is driving all of the massive costs, right? We talk about the premiums. The premiums are should the tax payers still be expected, no matter what kind of bills Obamacare runs up? Are we just we're expected to eat it? No, but we can't eat it. There's no money.
Well, that's what this shutdown is about.
Yeah.
In New Hampshire, more than 50,000 residents benefit from premium tax credits that come from the Ford coverage. They say the grants state.
So what would you suggest? So you understand why people.
So two things. We were blessed in New Hampshire because we had the lowest percentage of people on Medicaid, right? We had the lowest poverty rate in the country. So we were able to find efficiency and manage. Small states have a harder time because they have a smaller population and smaller risk pools. Larger states have a little better time because there's just so many people to spread that risk out. So that's why we're such big proponents of being able to buy insurance across state lines. Mix your risk pools together. Get them a little larger to bring those people. That's free market stuff.
But if you completely lose the federal tax credits, the premium tax credits, what would happen to a state like New Hampshire?
It doesn't mean everyone just goes off of
You're okay with that? Or is this a conversation? This is a conversation.
You have to reduce it. You get the private sector involved. You increase the free market competition, which really doesn't exist right now in healthcare. That drives costs down. Why does it cost $30,000 a night to stay in a hospital? I mean, sometimes you really need to stay in the hospital for it. But those costs are absolutely out of control, right? We used to talk about the $100 Tylenol, but the costs are just so much bigger now. That's at the core of all of it.
It costs $30,000 to stay in a hospital, right, in California, so that they can bill the federal government to get 70% reimbursement so they can cover illegal aliens.
Well, look, don't get me started with California. California is a thing unto itself, where there's a lot of battles. But look, as the airline guy, you brought up the right point. Is it going to be a traffic jam that gets the government to go? It's not like before. This team in Washington,
Chris, I didn't say covering them with federal dollars, because that never happens. But when you can pay for everything else with the federal dollars, you can lose state dollars to cover, which they do. Chris, thank you for talking about that.
It is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick along with Joe Kernan. Andrew is off today. We've seen a big turnaround in the stock futures so far this morning. At one point, the Dow was indicated lower by about 400 points. That was at 5 a.m. By 6 a.m., futures were down by 300, but now you can see they're almost back to parity, at least for the Dow, down by about just 13 points. S&P futures are down by 15, the NASDAQ off by about 96 points. That comes after President Trump made comments in an interview saying he thinks we'll be fine with China. When asked if high China tariffs would stand, he said no. Let's go to Don Chu. He's got a look at the big pre-market movers. And Don, this was pretty universal, the swing of stocks back towards a more positive bent.
It has been so far. Those futures moves have kind of been mirrored in somewhat, albeit by some of the thinner trading volumes that we've seen in certain Dow components, among them Goldman Sachs, Caterpillar, even American Express is a little bit of bid in the pre-market here. So we'll keep an eye on whether or not those things are moving around. As for some of the individual stocks that are kind of fundamentally making some headlines in the pre-market so far this morning, Becky, let's start in healthcare with Eli Lilly and Novo Nordisk. You can see here both shares are down this morning after President Trump suggested that the price of obesity drugs could be quote-unquote much lower. Now, Novo Nordisk is the maker of obesity drugs like Ozempic and Wegovy. Eli Lilly manufactures competitors like Mounjaro and Zepbound. Dr. Mehmet Oz, the administrator for the Centers of Medicaid and Medicare Services, said that the price of obesity drugs had not yet been negotiated, so a little bit of movement there, but causing, on balance, a downside move in Lilly shares by 4.5% and Novo by about 4%. Meantime, CSX is in the green this morning after it beat expectations across the board for its quarter. The railroad company saw better volume growth than expected and is still expecting volume growth for the full year. Management on the call emphasizing that strong performance while expressing some hesitancy around a potential merger as analysts look for clues around further consolidation in railroads. So CSX shares up about 3.25%. And we'll round things out with shares of DraftKings moving lower after a Bloomberg report that CME Group, the big exchange operator, is planning on launching sports contracts betting by the end of the year. That's citing people familiar with the matter. CME is looking to compete with predictions markets like Kalshi, which has put pressure on traditional sports books this year. DraftKings shares are now down around 8% over the past 12 months, so keep an eye on DraftKings and maybe even CME Group. Joe, I'll send things back over to you guys.
I wonder if we can glean anything from, so China, and immediately we see a 300-point comeback when we think China is it. So it's not about the private credit?
No, the private credit was the one that was dragging the
Be nice to know
financial
what,
sector down.
right, but it'd be nice to know exactly what we're worried about.
I think what you can say is this is around the volatility index. If you look at the VIX, people are nervous. They're nervous about a lot of things.
I think a lot of it's China.
But they're nervous about a lot of things. You're right.
Did gold reverse or I don't think gold.
Gold, last I looked, it was up by about the same
and
amount.
So many things, Dom.
So,
and the 10 years below, and then oils, down in the 50s all of a sudden. So
what I have been watching, guys. So again, so Caterpillar is a fairly large weighting in the Dow, right? And so we did see a bit of a move off the lows for Caterpillar shares on some of those headlines that you referred to around China and President Trump. So I will say again, many of the moves that we are seeing are on thinner trading volumes. I will also point out some of the things I've been watching in the pre-market have been around some of the regional banks. Not the epicenter ones, but some of the other ones that trade a little bit more on a relative basis, more in terms of volume pre-market. So we are seeing a turnaround in some of those regional bank shares within the S&P 500. Not necessarily positive on the session, but certainly off the lows that we've seen. But again, the caveat here, we're talking like a few hundred shares here and there, maybe 1,000, something like that. So as we get into the 8, 9 o'clock hour, we might see those volumes pick up again.
You can't connect the dots. Everything was sort of synchronized, just a general
sentiment,
uneasy
feeling.
We're going to go on. Thanks, Tom. Does it have anything to do with the government shutdown? Maybe. It adds to the uncertainty. Got to get this no kings thing out of the way, and then maybe we'll talk. Government shutdown set to extend until at least Monday after another vote failed in the Senate. Emily Wilkins joins us now with more. Good morning.
Good morning, Joe. Well, yeah, look, the shutdown is dragging on, and usually when we get to this point, when the Senate is dealing with a difficult issue, you see a small group of senators that really get together, start to hash out a plan. But as the shutdown is set to go into another week with no end in sight, you're not seeing that coalition this time around. Even as senators like Republican Josh Hawley are trying to talk across the aisle on things like health care.
What's different about this is I don't sense any coalescing. I've had conversations with this senator and that senator, but there doesn't seem to be any sort of momentum around people saying like, okay, really, we need to make a deal. And I just think that folks seem to be pretty content, particularly Democrats, with leaving the government shut down.
There have been bipartisan discussions about how to extend and reform healthcare tax credits, which of course is what Democrats are asking for. But Republican leaders and Trump have said that no real negotiations can start until the government reopens. They've remained very firm in that. But yet multiple Democrats that I spoke with said that there is a major lack of trust right now. Senator Richard Blumenthal said this time around, agreements Democrats make with Republicans could be overturned in a moment by Trump.
What good is an agreement by a gang of 4 or 8 or 12 when the President of the United States regards himself as his own law and disregards the norms and rules?
If the shutdown goes until next week, more than 2 million federal workers will be at risk for missing a paycheck. But as you guys just heard, there's no coalition at this point, and there's no off-ramp that seems to be appearing for how this shutdown is going to end. Guys?
All right, thanks, Emily.
All right, gold and silver are both pacing for their best week in 5 years. For more on that recent rally and his outlook for the precious metals, we want to bring in Don Stuyven. He is co-head of global commodities research at Goldman Sachs. And Don, you recently brought up your price target for gold, the price you expect by December of next year. What'd you say, 4,900 instead of the 4,300 that you'd been at previously? What made you say, aside from just watching how quickly things are running, hey, we better get ahead of this?
The main reason is that the drivers of this huge rally in gold is sticky inflows, both from private investors with long investment horizons and central banks. It's not driven by mean reverting, noisy spec positioning.
So it's not retail day trading type of situation?
Yeah. We're really seeing significant client interest from real money with long investment horizons, asset managers, pension funds, sovereign wealth funds. And so this big diversification rally in the gold market that started with central banks in 23 and 24 is now broadening. Central banks are not only accelerating the pace of purchases after the seasonal summer low, you're also seeing an inflow from investors with a strategic long-term allocation. And I think the risks to our already bullish forecast of $4,900 by the end of next year are skewed to the outside.
Really?
Because we don't incorporate in our base case the boost to ETF gold inflows from private sector diversification. Our bullish forecast is driven by central banks diversifying and by Fed cuts boosting ETF inflows. But the upside from private sector diversification is very large. The key intuition is that the gold market is small. It's about 70 times smaller than the US Treasury market. So only you need a relatively small diversification step to cause a lot of upside.
So you're basically saying momentum could drive that even further. This is your outlook without really considering momentum?
Without really considering the possibility that investors significantly raise their strategic allocation to gold in an environment where the policy outlook and the geopolitical outlook is likely to remain uncertain.
What is the risk to your bullish outlook for gold?
It is really, really quite high. The rule of thumb is that
what's the risk? What could take that down?
The downside risk. Okay, yeah. So the main driver of a bullish forecast is really central bank buying. So mechanically, we have about 15 percentage points of upside from central bank buying. So mechanically, the downside risk is that central banks stop buying or start selling. History suggests that these central banks' gold buying cycles tend to be very long, and they don't start selling unless you have a significant easing in either risk related to sanctions, geopolitical risks, or risk related to global fiscal policy, and neither of those risks seems to be easing in our base case anytime soon.
Yeah, I guess the risks to the idea that the tariffs would come down would basically be a change in administration, and that's not happening for quite some time.
Yes, I think what are the fresh catalysts of the latest rally? I think uncertainty about trade, credit, regional banking, fiscal policy, seasonality of central banks, buying, major investors recommending a higher strategic gold allocation, I think the main driver still over bullish forecast is central bank buying, and for that to change, you would need to see a sea change in the risk of sanctions on central banks.
Don, we got to run, but you're bullish on silver as well? You think that run continues?
We think the medium-term path for silver prices is higher, as Fed cuts should also boost ETF inflows into the silver market, but the outlook is more two-sided, more volatile, because the silver market doesn't have the structural central bank bid, and because part of the rally is driven by the squeeze in the physical London market, which is tight and which could reverse.
You can't explain silver through gold. You just can't. And some people think silver has more reason because there's all the industrial demand for things that silver goes into. But
historically, they move together.
I know, but it's
investor inflows move together.
Tenuous.
But fundamentally, to your point,
the
driver of the gold rally since 22 is central banks. Central banks are not buying silver. So we think the outlook, the bullish outlook, looks more certain.
Did the Hunt brothers have kids? Maybe it's their grandkids.
I don't know, but the recent rally is a reminder of history, suggests that silver is more volatile than gold.
Don, thank you.
Thanks a lot.
When we come back, Charles Schwab, President and CEO Rick Wurster will be our special guest. The company reporting record profits. We're going to get his outlook for the world of retail investing when Squawk Box comes right back.
We'll talk. We may even talk about that. But first, now, Eamon Javers has some news out of Washington, and he's actually on the phone, so it must be important. Hey, Eamon.
Yeah. Good morning, Joe. I can report to you exclusively today that Treasury Secretary Scott Bessent and Chinese Vice Premier He Lifeng are going to speak by phone to discuss the ongoing trade negotiations between the United States and China. I don't have any other details here on the timing of this phone call today, the content of it, or what the next steps will be. But the fact that they are going to have this phone conversation is notable because earlier in the week, the Treasury Secretary declined to say specifically at his press conference that he would be speaking to his Chinese counterpart. He said that the Chinese are in town for the IMF gatherings, that there are certain dialogues going back and forth, but he didn't say specifically that he and He Lifeng would be speaking. Now we can report to you that they will be speaking on the phone today. And the question is, whether that represents some kind of a breakthrough in this flare-up of tensions that we've seen over the past week, or at least maybe a platform where some kind of a breakthrough could happen, guys. So that's what we got.
Eamon, it's the market was down. It actually turned around, and we were pointing out that that was purely based on I think some of the stuff that President Trump said on an interview this morning about China. I guess my question is, could we expect something really positive from this conversation between Bessent and the Vice Premier Eamon? Because last weekend when the president said everything's going to be fine, Scott Bessent really chafed at that journal piece that said that they're just watching the stock market and that they base their comments on what's going on in the stock market. And again, you could say that, once again, the president today said, no, it's not, those big tariffs are not going to last. Should we believe that, or should we attribute it to watching what the market's doing? Is there real progress?
We don't know. Like I said, I don't know what's going to happen in this call. The fact of the call itself, I think, is notable, which is why I'm calling it into you guys. But we don't know what the content of that call is going to be. And obviously, Bessent did bristle at that piece. The U.S. side, of course, doesn't want it to look as if the Chinese side has more leverage in this negotiation than they do. And that's sort of what that Wall Street Journal piece was suggesting earlier this week. So it is very hard to say. And I think ultimately no large breakthrough can come until the two top leaders meet face to face. And what we're told is that meeting is still on later this month in Asia. So I don't think a Bessent Lifeng call will be the final thing, but it's certainly something that would have to happen before the final thing, if you get that.
Yeah, and they also don't want to be seen as they're basing these, major global trade, that the stock market is going to cause them to waver or change what they want to accomplish long term. They certainly don't want it to look like that, but the market does respond, Eamon. Anyway, thank you.
Yep, absolutely.
Okay.
All right, Charles Schwab reported record third quarter profits of $2.36 billion, riding that surge in retail investing. Revenue jumped 27% to $6.14 billion. That's also an all-time high.
Schwab.
Joining us right now for a look at what's ahead is Charles Schwab President and CEO Rick Wurster. And Rick, thank you for coming into set to talk to us this morning.
It's an honor to be here. Thanks for having me.
You like when I do that? You said you
I love when you do it because it's very hard to remember financial services advertisements.
The commercials, they do backflips. Try the Voyo one with the funny little but that is very distinctive because you got that guy.
It's very memorable. He's a great actor.
Carl.
Yeah.
Carl. And he does really bad. He's one of those financial analysts at a full service firm, and Schwab just undercuts him every step of the way, right?
He gets a little frustrated with this.
He does. If we're looking at the earnings, things have, it's really been a banner quarter for you, not to mention a banner year to date so far. Let's run through some of these numbers on this. Total client assets up 17% year over year to a record $11.59 trillion. Daily average trades up 30% year over year. Every number you look at, you guys are kind of knocking it out of the park, but maybe one of the ones to really focus on is brokerage accounts. 1 million plus new brokerage accounts for the fourth consecutive total. That's a pretty big deal. What's happening? Why are these people coming in besides maybe the advertising?
I think they're coming in because we're delivering for our clients. And we don't make our clients make any trade-offs. We have a great digital app like others, but they can also call in. We took 7 million calls in the last quarter of clients asking questions like, hey, I watched Squawk Box this morning and people are talking about credit. What's the deal? Should I stay invested? We had hundreds of thousands of people walk into our branches in 400 communities across the country. So the fact that we're there for clients, making a difference locally and helping them achieve their financial dreams, that's what's driving more and more clients to Schwab.
It is a hardcore fight right now between all the brokerages that are out there, whether it's Schwab, whether it's Robinhood, whether it's Morgan Stanley. You all are the number one in retail trading, no close second. I think you have 7.4 million daily average trades versus 4 million at Robinhood. Morgan Stanley has less than 1 million. But there is a war at this point to try and win these customers. What do you do in that fight?
Well, everyone's coming after us because we are the leader and there isn't a close second. And what we do to win the fight is show up every day and make sure we deliver for our clients. And I think for traders, what we offer can't be matched. The benefit of what we do is we have 1,000 former trading professionals that wake up every day and answer the phones for our clients. We put on 35 hours a week of live trading coaching for our newer investors. And we have what we think is the best platform in Thinkorswim, which we acquired from Ameritrade. So we win by delivering the broadest experience and the best experience in the industry, and we're going to keep doing that.
I was kind of surprised at the demographics you have that are coming in. It's younger than I would have anticipated.
It is younger. It turns out Schwab is pretty hip. We're on YouTube, TikTok. We're actually the most followed financial services company on YouTube, which often surprises people. And we're winning with the young investor. A third of our new to firm households are Gen Zers under the age of 28. And they're coming to Schwab because they want to engage in their financial life. They want to have a plan. They want guidance along the way. They want access to our research and education. And we're providing all of that, which is why we're winning with the young investor.
Your stock for the year to date, I think, is up about 26%. And by the way, that coincides with when you took over the company. So congrats on that.
Thank you.
What are the hardest things about what you're working with right now, though? With competition that's tough up there, right now you've got the market going in your favor with all of the new highs that we've been hitting. How much is that at risk if you get into some trouble, if you have these lower days, higher volatility days? What happens? You said you get calls from all these people. What are they asking about right now?
Yeah, we have 46 million client accounts, so we see a range of behaviors. We have a lot of active traders. Those active traders, they've been buying dips, selling the rips, actually. And we have a lot of long-term investors who, when they call, we talk to them about diversification. We talk to them about not timing the market, but time in the market. One of the interesting things we've been talking to our clients about more recently is that the S&P is as concentrated as it's ever been.
Does that concern you?
Well, we want to talk to our clients about the power of diversification. The top 10 stocks in the S&P today are 38% of the index. That's more than double where it was 10 or 15 years ago. And so the benefits of diversification and thinking about your portfolio are as important as they've ever been. And those are the kinds of things that we're talking to our clients about every day and trying to help them because we're in the outcomes business. We're trying to help our clients achieve their financial goals.
Diversification into what, I guess, becomes the question.
Well, you can buy a broader variety of indices, different stocks, you have bonds. Bonds are actually cool again with rates coming down. Clients are more interested in actually owning bonds versus being in cash. So we're talking to clients about a variety of asset classes.
You're adding new things too. I think crypto ETFs are on the lineup, and you're looking to private assets.
Yes, we've been active in both. So in crypto, we do offer crypto ETFs, Bitcoin futures, closed-end funds. In fact, our clients own 20% of all the crypto exchange-traded products in our country. So they've been very active. We've seen visits to our crypto site go up 90% in the last year. It's a topic that's of high engagement. And for privates, we have made private investments available to our clients. We've done through third-party managers like KKR and Apollo and folks like that. And we've also stood up a team of alternative experts. If you want to invest in alternatives at Schwab, you're going to need to talk to a professional and make sure they're right for you and to make sure you find the right strategy for you.
How much demand is there for those alternatives? Like, has it been what you expected in terms of the demand going into it? Has it been stronger or less?
That's about what we expected. There's a lot of interest in privates. I think anything that can potentially offer some diversification to clients is of interest to them right now, and that's why privates are top of mind for many retail clients.
Rick, let's talk about the credit issues that really roiled the financials yesterday. You're a bank as well as a brokerage. You see loans that are out there. What questions do you have from your retail traders, but also what do you see just in terms of how fragile any of this is if there were bad loans that were being made as credit standards relaxed with good times?
A couple of thoughts. First, our bank was built for investors. We don't lend. We only lend to our clients, and we only lend against their assets. So we have never really had a credit issue in the history of our firm, and we're not lending to clients. We're investing in government-backed securities. Now, when I look outside at the industry to others that are making those loans, I don't think we're seeing anything yet that's systemic. You don't see it in high yield spreads. Volatility's up a little bit, but we're not seeing the indicators that would suggest this is a broad-based credit issue yet. And also the economy, I think, is hanging in there. Unemployment is still relatively low, so it's hard to see at this moment it being a systemic issue.
No, I was gonna wait till the end of the year. I have golf stuff to talk to him about, so we could get all the substantive issues out of the way.
How many calls did you get yesterday from clients who were wondering about what to make of these credit issues and the pressure on the financials? We're sitting right near all-time highs for the major averages, but you do have little areas that feel like there are questions that maybe feel a little bubbly, and there have been a lot of questions raised about those things. The pullback we saw last Friday, the pullback we saw yesterday, again, from near all-time highs, but what do you get? What do you hear from your clients when that happens?
The big thing we hear is that clients' wealth is higher than they expected to be at this point because markets are up so much.
Yeah.
And we've ripped since April. We're up 35% off the April lows, and so a lot of clients are coming through our door saying, "Gosh, I have more money than I thought I would have. How can you help me diversify that?" Or I've got a really concentrated position. I've made more money in NVIDIA or Broadcom or Tesla. How can you help me get out of that position without paying big taxes? Those are the kinds of questions that clients are asking us. We try to steer clients away from saying, should I be all in or should I be all out? Those are really difficult decisions to make because one, you have to be right at the time you get out, and then you've got to get back in at the right time. It's really difficult. But we can help clients with a lot of ways to protect their assets.
What are ways that you tell them if they say, I'm really up in NVIDIA, what do I do at this time of the year? Are you telling them to balance it off for tax purposes against something else, or what do you?
There's lots of strategies that they can take. They can collar it using options. We're offering exchange funds for clients, which allows you to exchange a concentrated position and get a diversified index back without any tax consequences. There's new long-short strategies that you can use to offset the gains in those positions so you can reduce the size of your position over time. There's lots of things we can and are doing for clients, and our advisors, our 16,000 advisors that we support, are doing for their clients. I'd say it's the hottest issue at the moment is what do I do with my big gain in some of these stocks that have really run.
Those are some first-class problems to have.
They are, yeah.
How's Chuck?
Chuck is doing really well.
88.
He called me last week, Joe. You'll appreciate this.
Yeah.
And he had a little, little spirit in his voice. And I said, Chuck, what's happened? He said, well, I just played a great round of golf. And so I said, Joe, the natural question, did you beat your age? He said, yes, by 13 shots.
Wow.
How about
75?
that? He shot a 75 with 2
the-
bogeys.
Charles Schwab.
That's Chuck Schwab, yeah.
That's the only goal anyone needs to have in life, because either you live old enough. If you're horrible, you live to 99 and shoot your age. Yeah, that's right. If you're horrible, you live to 99. And if you shoot 75 when you're 75, you have a lot of time to play some golf. So you're doing okay. But I wondered about it. And you were captain at Villanova of the golf team.
Yeah, you wouldn't know it if you watched me golf.
Well, what I was going to say is to all the Charles Schwab shareholders, he's like at 25 now, so you never play golf because you're in the office 18 hours, like working on, trying to maximize profits for Schwab.
100%. The only time I go on the golf
What
course
is your handicap now?
I'm a 5 handicap.
You're 5. Yeah.
But the only time I go on golf is I'm trying to get my 12-year-old interested in it. So I take him out, and the main thing is to help him learn patience, because you have to be incredibly patient to like the game of golf.
You do. And you have to be a bit of a masochist.
Yeah, exactly.
A good walk spoiled.
Yeah.
And you must get to play Pebble. And I guess, what Chuck did for Pebble will last forever, I think, and those other guys that with the par 3 and everything else.
He's the most generous man in the world. He's done so much for the game of golf. He's also, I think, done more for the financial services and the retail investing industry than anyone else in our country. So
when you got hired, did he know that you had been captain of Villanova, or as you were?
I don't think that he knew I was a golfer, but as I was getting to know him, he took me out for a round of golf, and I was incredibly nervous.
Yeah.
And I hadn't been playing any golf, and the first 8 holes I went 4 under par.
Oh.
And he said to me on the walk to the 9th tee box, he goes, "Do you ever work, Rick?"
And that's when you started shaking.
Yeah, I didn't play as well the back 9.
Words I've never said
in my entire life. On the first 8 holes, I was 4 under par. I did that. Yeah, I have never.
I had it going. I was lucky.
I have never said that. Right.
Well, Rick,
Yeah,
we
come
are
back, please.
very happy that you're here, impressed with the results that you put out, and we hope you come back soon.
Well, thanks. I love your show. Thanks for having me on.
Yeah, we appreciate it. Rick Worcester, Squawk Box will be right back.
Coming up, this would have been a big week for data, but the government shutdown has delayed some key inflation numbers and initial jobless claims, among other things. Up next, Steve Leisman has some substitute numbers that may give us at least a little bit of a picture of the employment situation without having those data. Squawk Box will be right back. Welcome back to Squawk Box Futures right now. They have turned totally around except for on the NASDAQ. Actually, the SP still down. It has come back a lot. And the Dow is down 380, 350, 380 now is up.
At 6 a.m. they were all
Pretty bleak after yesterday. We lost all those early gains, and the day before we lost all the early gains, and now we're inching back closer to 4%. A lot of things were at weird levels that we haven't seen in our treasuries, gold, oil, 10-year, all those things. Steve Leisman's here. He has no explanation for any of that, but he can at least tell us about.
I just want to say one little word of caution before I get to the thing I'm actually here for, which is everybody should not be so quick to try to relive the great financial crisis.
Oh, yeah.
You know what I'm saying?
In terms of reporting on those things?
Reporting and even some of the commentary that's out there. Here we go again, here we go again.
We had Moody's on today who said, no, the default outlook is actually improving.
Yes.
It's down 5% right now. He expects it to be down 3% next year.
I lived through it. I think I reported well through it, and I know enough about it to know it's a unique situation. There could be bad stuff happening, but to get there is a big deal.
What I will say is this morning, the change in sentiment came after President Trump made some comments in an interview
So
saying,
there's a
don't worry
tariff-
about China.
there's
So
a
there
tariff
could be
piece to this. That's a good point.
the China issue that really could be more.
Tariff piece with some
And
cheers.
that was last week.
And I want to make one other quick point. I'm sorry, guys, in the back. I just make this one point. We knew this was going to happen in terms of the commercial real estate loans. You don't remember the reporting I did a year and a half ago when everybody said all the commercial loans were going to blow up, and I said, no, that's 2 years down the road. And this is about when we're going to think, but not blow up, but they had a couple extra years to refinance it. This is, we're getting in 26 and 27 are cliffs in terms of refinances.
Here were issues of fraud.
Right, but I'm just saying, if you're going to extend it onto this issue of the refinancing of some of the outstanding commercial real estate loans, which is some application of that, that's next year and the year after. It wasn't this year. So anyway, that's not what I came here to talk about, as Arlo Guthrie said. Haver Analytics, the economic data provider for CNBC and a lot of Wall Street and the economic world, has figured out a way to add up all the state reports on jobless claims, seasonally adjust them, and come up with a proxy that's pretty close to the government's weekly jobless claim report. Not perfect, but here it is. Week of October 11th, 217,000 versus 228, so going down. It shows a decline here on the weekly jobless claims if you use this proxy. When it comes to continuing claims, we're up 1,942,000 versus 1,920,000. Those are two numbers that are both estimated here. Unlike the government, not all states are included. We're missing this week Massachusetts, Tennessee, Nevada, and Arizona. They're imputed. Nevada. They're imputed because they have not been publicly reported yet. But the numbers overall, they were close to the official data. Take a look at this chart. The government and Haver data differ, but the key is that directionally, you can see here. I don't know why the blue line did not show up, folks.
I see it
It's
on
not,
the
it's not,
ends.
that's
It
not,
ends.
that, something is wrong with the chart system. I'm very sorry, folks. You can take that down. But over time, trust me, they run together along with other private sector jobs data. The later report supports the conclusion that we've had for a while, that it's a relatively low fire, low hire economy. So not at the moment any indications that much has changed since the government stopped publishing. You got to always be wary that when they do start publishing, things end up being different. But right now, we're kind of running right around that same 200, 220 level. Goldman Sachs does the same thing, came up with similar numbers.
No, I didn't mean to interrupt that. You know how long that's been my pet peeve. You can actually look at it. There have been major controversies from people in Nevada about people who can't pronounce. They go crazy. And I've seen President Trump say, is it Nevada or Nevada? Or Nevada? He goes, it's Nevada. Of course it's Nevada. And it's not. It's just not.
Well, however you say it, get your darn claims in so that we can put it into the total.
At the end of the day, going forward, just don't do it. Those are more of my pet peeves. That's my single best idea. Let's bring in
Rick,
which I also don't like. Single best, right? Because it's either the best or hey, Rick, Leisman's here. Did you? He had said something totally ridiculous. No, trying to get you guys.
No. Actually, I think his jobless claims numbers would probably be spot on. My real issue is that if that's all you have to look at, and arguably it's one of the better real-time indicators of the labor market, once again, it doesn't really jive with some of the Fed speak, especially with Chairman Powell this week, so worried about labor. Now, I'm not saying there aren't other metrics that show a much bigger deterioration. I'm just saying that it doesn't seem like it's a fait accompli in terms of writing off the jobs market. And if we look at what's going on with equities, that age-old relationship between stocks and treasury yields really is coming into play because of something called flight to good collateral. I didn't say flight to safety, even though that's kind of what it is. But it's all about collateral. It's all about bad leverage. It's all about historically tight spreads that led to buying some paper and dealing in credit issues that were far from excellent. And I think it's all coming home to roost to some extent. But I couldn't agree more with everything everybody's been talking about today, trying to compare this to the great credit crisis. I mean, it's like slamming the closet door and saying it's like the San Francisco earthquake. It just isn't in comparison there. But we are at 1 month highs on SOFR. That's the secured overnight funding rate that replaced LIBOR. We have all the futures contracts going wild in Chicago. And I think it's something to pay attention to. Yeah.
Rick, I want to stop you just so everybody understands what you're talking about here. When you talk about highs on SOFR, and I do want you to continue, but I just want people to understand, what we're talking about is a clamor for high quality collateral. When that number goes up, it's a sign that there's a bit of tightness in the financial market. There is some wariness, some concern. Go ahead and continue. People to understand a higher SOFR is the same thing as, for example, a higher GC repo rate or something like that. It's a sign of a lack of credit or quality collateral out there.
Yeah, a bit of funding issues reaching that you have to pay up when everybody's reaching for the good collateral. And it's really evident. Show that chart again of SOFR. If you look at what happened on September 17th when the Fed cut rates, you saw what it did. It went lower. So this is reversing that to some extent. And I do think that the relationship with stocks is also key. And it gives us the clue that this is nothing like the credit crisis. Because to see equities go from down 3 or pre-opening down 350, 360 to up 50, it was up 80 a few seconds ago, and see the Treasury complex, the 10s were 393. They're now flirting with 4%. And that'll bring me to my final little comment here. Listen, as a technician of the past and a trader of the past, you can never hang on to ideas or notions about the market. You have to be fluid and open-minded. I still believe there's going to be a lot more upward pressure on long-term rates, despite all the issues that would force it lower just because of debt and deficits. The fiscal year ended in September, $1.22 trillion to service the debt. That should basically be enough said right there, but I really still believe that if we don't close above 4% for the week, today's a weekly close, high priority if you're a technician, I would go home long looking for lower rates as well. But I would be very, very trigger happy to reverse because I still think long rates are going to be stubbornly high.
We don't have anything to disagree on. I just want to point out that Chair Powell earlier this week.
I could find something.
You probably could, but let me just make this point here. Chair Powell talked about the idea of ending quantitative tightening in the coming months, right? In part because he mentioned some tightening in financial markets.
Exactly.
I don't think this is a critical issue right now. Some of the tightness we saw was around the turn of the quarter, September 30th. There's a clamoring for funds around then, high quality collateral. Not sure what's happening now. Maybe some of the disruption you could talk about with Leslie Picker may have something to do with it, but it's a bit of a clamor, or not a clamor, it's just a grab for high quality collateral right now.
Okay.
Great.
Good.
Have a good weekend, guys.
Thanks, Nick.
Yeah.
Yeah, well, I had it for you. And the way they characterize it on AI is, Nevada is pronounced with the VAD rhyming with bad. It's preferred and strongly defended.
Who's the police on this, though?
Joe.
Me. But it's
You're
strongly...
the police.
No,
you have a badge.
No, the people in Nevada, they've been written. There's been articles like Brian Williams once mispronounced it, and it was a whole article written from people in Nevada. They don't like it when foreigners don't know how to pronounce their state. And anybody not from Nevada. Yeah, exactly.
All right, let's get back to the regional banks and the impact of credit fears. Leslie Picker joins us right now with more. Hi again, Leslie. We're again trying to dig through what this all means and what the implications are.
Yeah, and just to point to some positive news, Becky, we're getting a slew of regional bank reports this morning after yesterday's volatility brought back those deja vus that you guys were talking about of 2023. The markets are acutely focused on credit quality and how these regional banks' loan books have performed in the quarter and their expectations for the future. The bank earnings are really providing a sigh of relief this morning. Truist guiding that its full-year net charge-off ratio was at the lower end of prior guidance. That's a positive sign for the health of its balance sheet. Shares there gaining this morning. You can see up 2.5%. Huntington also reporting better than expected guidance. Comerica and Fifth Third, which are merging, of course, also moving higher on their respective results as well. Now, these reports, of course, come as investors are really on edge about just the broader financial sector. Yesterday's sell-off was reminiscent of the spring of 2023, which saw several failures. The decline in the KRE more than 6%. Underperformed the IWM by 700 basis points on a two-day basis. That's the worst gap going back a decade, according to Barclays. Fears were sparked by Zions, which disclosed issues with a borrower that caused the bank to set aside more in provisions. Zions lost $1 billion in market cap yesterday after reporting a $50 million loss related to that alleged contractual default that it intends to fight in court. Western Alliance and Bank of California appear to be embroiled in a similar situation, although neither of them expect additional losses. Western Alliance says collateral will cover it. Bank of California has really minimal and pretty senior exposure to that, but it's definitely an area to watch as investors seem to need little excuse to press sell on regional banks, alternative asset managers, and more in this current environment, guys.
Leslie, thank you very much. We're going to watch very closely. Leslie will be all over it, and we will be right back with Republican Senator Mark Wayne Mullin. Stick around. Yeah.
The Senate adjourned yesterday after failing for the 10th time to pass a continuing resolution, dragging the government shutdown on until at least Monday. Joining us now, Republican Senator Mark Wayne Mullen. We're talking off camera, Senator. You think I'm crazy. It's Friday, you know what I mean? This is your problem. I made it sort of my problem, but I was saying to you that the notion that somehow that people have been convinced that CR, a continuing resolution, is a time to negotiate, or where you're supposedly allowed to negotiate appropriations issues, and if you don't get it, you're going to shut down the government. That is not normal.
Yeah.
And mainstream media at this point is saying, oh, I see it. Republicans are refusing to negotiate, but at least Josh Hawley is reaching across the aisle. This is just to keep the government open. Then you start talking about appropriations and these bigger issues afterwards. How did you lose this fight?
Well, I don't think we've lost the fight.
How did polls show that they blame Republicans?
Well, polls are as good as a person that's get on the sample poll. But I love the passion. I honestly love the passion and the frustration you have, because we have the same issue. Only thing is, my mama told me a long time ago, you can't argue with crazy. And when you're dealing with the situation and this is how crazy it is. Remember this continuous resolution that is clean, meaning that
they voted on. Schumer backed it once.
Schumer wrote it.
Right.
Remember, this is a CR that we voted on back at last September to keep the government open when Schumer was leader of the Senate and Biden was in the White House. This is the same one they voted for in December, same one they voted for in January before President Trump was sworn in, and the same one he voted for in March. There is no right or policy. There is nothing to negotiate. It's a plain, simple CR. If there were some Republican policies that was on this, and there was some give and take, that's fine.
Right.
But they're saying, accept our $1.5 trillion to open it up for 2 weeks, or we're going to stay shut down.
It's pure and simple blackmail that they will
Agreed.
not do it without Republicans doing what they want. And if the shoe was on the other foot, it was a couple of years ago, I guarantee you, the media would be going insane that Republicans had shut down
I'm never been a fan of anybody shutting down the government. It's the wrong way to do business. But I will say, from their perspective on this, it reminds me of my little brothers. I had one brother who was a year and a half younger than the other one. When they were little, Brian, the younger brother, bit Bobby. And my uncle yelled at him, "You can't bite him." And Brian ran off crying, and my uncle chased him down and said, "Why are you crying?" He said, "Because if I don't bite him, I can't win." Like, that's what the situation is.
That's actually I was thinking the same thing. You got to do whatever it takes to win a fight. but know you can win when you
all's fair in love and war.
Yes, but
the ends justify the means. There's a lot of expressions.
Yeah, I've never been a fan of government shutdowns, no matter who does them. I think it's terrible for the people who get caught in the middle.
Yeah, in 2013, I got caught up in the government shutdown, the Republican shutdown. Yeah. I swore I would never do that again, because it was the stupidest thing we did. Because people don't realize how much it costs the American people. Right now, we have 750,000 employees furloughed. They're sitting at home costing American taxpayers $400 million a day.
We're going to pay them whether they're working
regardless if they work or not. No one's going to work for free. Everybody's going to get back paid.
But in the meantime, they have a lot of pain and suffering that's going through.
Because they're in uncertainty. A lot of them live paycheck to paycheck. Okay. But then you even think about all the contracts, the federal contracts we have around the world, and state buildings, the highways, the roads, the defense, that are all stopped right now because no funding is going to it. There's penalties in every one of them. I bet once we get into this, we'll see that that Schumer shutdown is costing us close to $1 billion a day to do nothing. To do nothing. And they can't explain why they're voting against it other than it's politics for them.
Right. Well, Republicans have come this far, and it looks like Trump has resolve, not and Mike Johnson and John Thune. They're talking a good game. Will they stick to this, or because Democrats are going to have to eventually say, okay, you're right, we can't.
So,
or do they fold and then
no, we're not going to fold. We're not going to give an inch, because where do you give an inch at? There's nothing to negotiate on our side. That's why we're saying. So it's easy for us to say we're not giving an inch, because there's nothing that prevents them from opening the government. They could open it in 5 minutes if they chose to. What I think is going to happen is, I thought they would open it up after No King's Day. The Democrats that I'm talking to, they're somewhat trying to be reasonable. They thought they said Schumer didn't think the optics of opening it before the No Kings rally was bad for them for primaries. So I thought they were going to reopen it. But yesterday you had 11 Democrats vote against the defense bill that they voted for in committee. They voted against on the floor. Now I think because President Trump made a very smart move by paying the troops, that took that negotiating off the table, left the federal employees still for Russ votes to look underneath the hood and see who actually needs to be working and who doesn't need to be working. it put the Democrats in a bad situation, and their only hope now is that the insurance companies sent out these letters saying they're going to raise premiums by 1,000%. Is what they're claiming, but they also claim that millions of people are going to die because of one big beautiful bill, which that didn't happen. So I think they're waiting for a stronger hand to negotiate while they're
That's
holding
like
American people
1st.
hostage.
Those insurance letters will go out.
Think about that.
First.
The government would be shut down for almost 9 weeks by then. It's absurd. It's absurd what they're talking about.
You don't see some grand bargain. The president might even finally say, "Okay," that's what Senator Kelly said he wanted a couple of days ago. If the president assures Democrats that there will be an extension of the pandemic era Obamacare subsidies, they'll accept that. If the
We
president
can't assure
gives
that
his word.
because there's
The president couldn't he?
No, he can't. Well, he can't assure how people are going to vote. No one can guarantee an outcome.
I mean, he's got a lot of sway.
He's still. That's a very.
I mean, I don't want him to do it, but
yeah, it's very tough for us to say that we're going to vote to extend a premium tax that not one Republican voted for 4 years ago. Democrats were in complete control of the government then. They purposely made the the premium tax to expire because it was COVID related. And remember, this was supposed to offset affordable health care. If affordable health care was actually affordable, then why do we need a $40 billion subsidy going to insurance companies every year?
Look, Democrats have just said, and maybe we do need taxpayer-funded health care for everyone, but they should just say what they want, because that's what we're doing. It's just going to cost more and more.
But what do they want at this time? See, Joe, the problem is they don't know what they want. The party's in disarray. The party is at the lowest approval rating it's ever been in history. They have AOC and Bernie Sanders, who are socialists, and Mondani, who's a communist, who's running the party now. And then on the other faction of the group, you have Jasmine and Talib and Omar.
We're going to have to leave it there. Senator Mullen, thanks for being here. Squawk Box.
Good Friday morning and welcome to Swap in the Street. I'm David Faber with Sarah Eisen and Mike Santoli. We're live at Post 9 at the New York Stock Exchange. Jim and Carl have the morning off. Let's give you a look at futures as we get ready to start the final trading session of the week, a half hour from now. And you can see Futures are mixed. That's what they tell me in my ear. I kind of know that anyway because I was looking a little while ago. Let's get to our roadmap, of course. It begins with a significant turnaround in stocks. In fact, they are recovering what had been some steep losses overnight. Turning higher, in fact, is perhaps investors
I'm here.
off some of those concerns that we'll be discussing about bank and bank credit.
Plus, shares of Eli Lilly and Novo Nordisk on the move as President Trump calls for lower costs of GLP-1 obesity drugs. And Goldman Sachs saying, don't worry about the AI spending boom. We'll explain the latest.
All right, let's start with the markets. One day after the KBW Regional Banking Index had its worst day versus the S&P 500 since March of 2023. Our viewers, of course, may remember that. That's when Silicon Valley Bank went bust, followed by First Republic, a couple of others as well. A lot of concern there, sort of more about their bond portfolios, the liquidity on the deposit side. And
Sarah.
Commercial real estate and commercial real estate. This time, Mike, and yesterday, I think it may have taken some people perhaps by surprise, but much more focused on sort of what we don't know and what may be off balance sheet and non-deposit taking financial institutions. But I saw that Zions and Western Alliance headline at around 10:30, and frankly, I did not expect that we would end down the way we did.
For sure. It obviously sort of picks at a little bit of a raw nerve for the market, which is,
This guy's the bouncy guy.
Bankruptcies of First Brands and Tricolor and Jeffries and the fund that people wanted redemptions from. I don't think it really builds to anything that says it's either some kind of major cyclical downturn in credit quality or something systemic, but it's very opaque. It's parts of the credit markets that you don't have a clear window.
From Washboardjim with a sneaky snake trading strategy.
Credit spreads, and that looks fine.
All right, talk
what the banks
about
are telling you, which is in general
sharp
consumer and
patterns,
business credit seem
moving averages, and being in the now. So who's scared? I'm not scared. I'm not scared one bit. I think this just gives me plenty of opportunity. I love this chick. I love her too. And I love that Chinese women, and I love him. Now these girls are a little too young for me, so I don't love them. But I appreciate them. I love her. I love her. I hate him. Bolton. Oh, I love her, Judge West. And I love Don Don. I love Don Don most of all. And there's my girlfriend Nancy. What are they doing? Nasty Nancy? How dare you? How dare you? And I love my transsexual girlfriend. And I love Schumer. And I especially love him, John Fetterman. I love him a lot. Now I got a confession. I complained when the Democrats voted for him and he just had a stroke. The guy couldn't talk. So why'd they elect somebody like that just couldn't talk? And then he got over his stroke and he turned out to be probably one of the best Democrats I've known in years, besides Nancy. I mean, so I gotta, I need to bite the bologna sandwich. Because I was very wrong. So Jimmy put out a video last night, and we're going to listen to it. Or yesterday.
For this little bout of anxiety around all this. I also think even broadening out beyond that is, look, we got to new highs in this.
And I want everybody to go to it and hit the like button and say, Jimmy, you talk about chart patterns, moving averages, being in the now.
Very low volatility rally to
Good
highs
morning,
last
retail
week
traders.
because the premise
For I am
was Fed's gonna be
Washboardjim,
cutting at least
the
a couple more
founder of
times
this.
into an economy that is in good shape and poised to reaccelerate. Anything that complicates that picture, you probably with record highs and with
Gonna make a
valuations
correction
rich,
here.
is maybe going to cause an excuse for a little bit of a step back. So whether
This guy ain't worth listening to. He never really, I don't know why they got him, why they gave him the job. I really don't. I'll take his job. Good morning, retail traders. For I am Washboardjim, the founder of the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being in the now. And I wish everybody a great day, and follow me live on YouTube. And I do hit that like button. Also subscribe and ring that bell. You'll get my future updates. Have a great day. Does anybody want to listen to it again? Because this is narcissistic Jim. Woo! I'm going to go make my coffee, and I will be right back. And I love Rosie.
Narcissistic Jim, with his ego and his wit, doesn't give a damn what you think of him one bit. The market takes a dip, SPX Jimmy will buy. Bitching at Molly, careless is the apple of his eye. Burp it up, Jim, let it fly, let it roar, let it roar. Stocks tend to rise with a fart from his core. Narcissistic Jim doesn't care what you think. He'll burp and fart out loud until his room stinks. Candles on his screen bounce like titties in the night. Burps get so loud the neighbors say that boy ain't right. Bull or bear, calls or puts, doesn't matter one bit. Jimmy's face can't wait for Nancy to come and sit. Fart for a dip, ass making noise. Burp for a rip, cheers from his boys. Jimmy is grinding away on his washboard toy. Burp it up, Jim. Let it fly, let it roar, let it roar. Stocks tend to rise with a fart from his core. Narcissistic Jim doesn't care what you think. He'll burp and fart out loud until his room stinks. Lots of fun he had, his ego's ablaze. Burps and farts collide, the room is so amazed. Narcissistic Jim, the legend, the king, playing his old washboard till that closing bell rings. Narcissistic Jim. Narcissistic Jim. Narcissistic Jim.
Whoa! Sarah, goodbye. We really don't care what you say.
The future's absolutely reversed when, and that was on another network when, as you just said, he made those comments.
A retaliation against the U.S. attempts to restrict China. Fortunately for a lot of these chip stocks, they're just being right now, I feel like, used almost as bargaining pawns in this broader geopolitical mess that we're seeing still occurring between Beijing and Washington. But Micron still generates about 10% of its revenue from mainland China and Hong Kong, which was down 25% short from 3 years ago. But I mean, it's also not nothing. So it's considerable revenue for a name that has basically been trading as if we were guaranteeing all of this growth. Because I mean, Micron has been, that was our fourth best performer.
Oh boy.
Up 140%. I remember that about a year ago, China, when we had the tit for tat about, maybe de-emphasizing allowing chips to be sold over there or giving the low range ones instead of the high range ones. China was the first one to come after Micron because Micron's based here in the U.S. and does most of their business here and most of their manufacturing. So that's interesting, but this stock was $61 about at those lows in April. We're up 229% from those levels. So giving up a little bit of gains today. Go ahead.
Which I think is I think that that's probably not, not to say that it's healthy, but I think that anytime you see a pause in a name that's up 140%, and more notably than that, that's all been in the last 4 or 5 months, it's okay to see some of these headlines weigh on shares because, from a valuation standpoint, this name is loftier than it's been in quite some time, and nothing has really fundamentally shifted. We still need to see Micron really prove that it's able to fulfill these mass orders because supply chain has been their long-standing issue, not being able to fulfill the demand they see.
Yep, we'll continue to watch that story. And remember, those memory chips and the chip makers in general, but mostly the memory chips, there's really
Speak to you too, Magnificent.
And that's actually the legacy parts of the business that are doing really well. And then you throw in high bandwidth memory, which is their growth engine. So everything going well for Micron, but down a little bit today. Let's move over to a different story, and this is Eli Lilly.
Good morning, Randy. Good morning, Angel. Good morning, Jesse. And good morning, Magnificent.
President Trump, in an interview, addressing questions from the press, and he was like, "Oh yeah, fat loss drugs prices are coming down." I think he said it that way. Fat loss drugs are coming down.
Fat loss drugs will be much lower.
And then Dr. Oz had to come in right away and said, "We haven't done any of the negotiations, but the stocks are under pressure today based on this commentary." Remember, they make most of their profitability here in the States, whether it's Eli Lilly or Novo Nordisk, but they're under pressure today.
They will, and I actually like that he responded very quickly to that, them saying they haven't negotiated this yet, saying, but they will. They're going to come down pretty fast, which I think that we could all imagine him actually saying that. But Ozempic right now amongst those drugs selected by the CMS for these price negotiations under the Inflation Reduction Act. But Trump's comments do come amid this wider push really to lower drug prices for Americans, which are higher in similarly wealthy countries, but also Ozempic. I mean, the price parity of that drug overseas is actually specifically with Ozempic ridiculous. But in May, Trump did sign this executive order that was really pushing pharmaceuticals to lower those U.S. prices on these so-called most favored nation pricings, or of course MFNs. But those prices are no longer higher than the lowest price paid in a comparable country. And Nova did say they've engaged in these discussions with the U.S. regarding the MF order. But right now, solutions they're trying to say are focused on basically patient affordability and access. They will continue.
660 is the pivot point.
It's down about 60% from its peak in mid-2024. Amid, I think that you have to.
So we're going to go over the watch list. Going to go over the watch list. Volume high for this morning, which is Regetta. Regetta has a snake, fallen wedge, breakout, pullback already. So I don't know. I'm not really that bullish on this one. I'm going to extend these to the right. So if we do, we'll just follow that channel right there. If we break $50, it might not even touch 50. Got my coffee made. Put a little water in here to cool it down. This is Mexican, organic Mexican beans. My favorite. Not my favorite. My favorite's Blue Mountain. I'm going to order some, I think. Get a 5-pound bag. Pass it out Christmas. A lot of people drink Folgers, the cheap stuff. They don't know what good coffee tastes like. I bought, a few years back, I bought grinders for everybody and bought them beans. Oracle had a good run breakout yesterday. Man, look at Oracle pulled back this morning. Damn. Well, if I'd have saw that, I would have bought some shares. Maybe. NVIDIA. NVIDIA had a pullback this morning. What's wrong with these things? TSM had earnings and pulled back. That's probably the sheetrock guy here this morning. Oh. Rise and shine.
Yes, sir. Good morning. I'm Chad with Falcon Assist.
Yeah.
Drywall repair, right?
Yep.
All right. Mind if I
You wanna
take a
look at it?
Yes, sir.
You're Chad?
Yes, sir.
I'm Jim.
Jim.
Yeah. So this is the bathroom. They had the thing we traded. We got something cut it out.
Okay.
You need anything in here besides get the stuff out?
If you wouldn't mind removing that stuff. I don't know. Everything's good to go.
Do I need to lay a blanket down here or something?
No, sir. No, sir. I got one out here.
Okay. I'll just leave you alone.
You're good. Tool in a minute.
Well, that's fine.
Other than that,
No better, bro. You want to shut the door, though, or?
I probably will if you don't mind.
No. I'm not gonna do it. Put some smelly sauce on it.
There you go.
That smells good.
What brand do you go for?
Huh?
What brand do you go
I
for?
got Coach.
Coach. Aquageo for myself.
Yeah. Lady likes attention.
That's all she says.
I think the leak stopped, but I'm not sure. They fixed it. Does that look like a tough job right there?
Oh no. I'll have you patched up and probably painted today.
Oh, well. You got paint that matches this color?
Yes. Yeah, it's actually all the same color. That was the crazy thing. So I was doing some other repairs. The facility was a lighter gray. It's all the same. Yeah.
I might see if I can get a little bit further.
Yeah.
Extra paint so I can touch up little spots like this. Around the place. Yeah.
I think so.
Okay, guys, I got the sheetrock guy here working on the shower, so there might be a little noise. So I was going through the watch list. Well, we got, what is it called, OPEX or something today? So we might have a little volatility. Unless they shook it out yesterday. We had it all yesterday. Oh. Belch. Google pulled back this morning. And then we got Coin. Coin's had a good sell-off. And AMD, man, they've all bounced back up. See, that'd have been a perfect spot. 224, I had 228.80. And we got Nike. Meta was upgraded. Ooh, man, Meta hit support this morning. 697.50. I jumped on that one. Big time. I like it under 700 a lot. And remember, they've been calling and begging for a pullback. These guys have for months. And when shit hits the fan, they all start to freak out. So you got to think the opposite of them. That's some of the hardest things to teach people about fear. Until you see it, and then it bounces back up, and you say, shit, I was scared to death. I thought the market was going to tank. They've been begging for a pullback. And we had that OPEX thing yesterday. I think that's what they call it. I never did let it deter my trading. Options expiration calendar. OPEX. In finance, the term OPEX is referred to two distinct concepts. Option expiration, or operating expense. The meaning depends on whether one is a short-term options trader or a long-term fundamental investor. It happens every third Friday of the month. He's cutting sheetrock right now, cutting a square. So, and let's see where the SPX is. My favorite trade of the year. VWAP's way back down here at support. So we could see 663095. We got the 200 right there, and we're hovering the 63. I don't know how the 9 would work on this or not. I'm going to put the 9 in here. So there's the answer on the 9. I don't think it's going to really make a difference for me on the /ES. We'll see if it follows. So I might just take it right back off. So on the 5 minute, oh man, look at the crows we had yesterday on SPX. $6,600 is going to be support. If we can maintain 6,600, I think we're good. We had a tweezer bottom Tuesday or Wednesday. We got a nice hammer right here, 2 hammers. We hold that support. Off that hammer, we stay bullish. Now this is on the hour. So somewhere up in here is going to be resistance. And we'll hit the 200 for a support line. And it matches up with this candle's tweezer top right there. So we hit that. And that's where we open up at. We might not open up too much, but next resistance to break will be the 66.44.23. Perfect. Yep. Let me see. I'm going to erase one of these. Erase number 4. No, I should have kept number 3. Right there. 66.43.14. That's a beautiful spot. That's a pivot point. So that's probably where we'll stop. Where we'll start. My guess. 66.43.14. Put not a penny more, not a penny less. Oh, we're about ready to open. Prepare ye in the name of the Lord. Well, we didn't open up there. We opened up below. Let's go to the 5-day. 5-day, 5-minute. So we got a head and shoulders right at 6,600. Let me put that trend line on here. I bet you they're expensive too. Oh God. They're very expensive. You have to go all the way down to 66.80 or 6,700. They got 8,000 contracts there. So let's see what that does. Okay, the 6,700s. At 270. 6,700's at 270 calls. Damn it. Till right now I'm God. Okay, Jim. Calm down. We'll see if the market's bearish or bullish. When I was up 50 bucks, I could sell them right here and be satisfied, but then we have a breakout. They could be worth a couple bucks a piece. $360. All right, now you're hitting the 9, so this is where you want to take some profit. Do you understand? $4. What'd you think about that, Randy? I sold 4 and kept 1. I think I'll sell the last one right now. Means we're coming up to the 200. Okay, I'm going to talk about this trade. Why I took it. You think I sold early? Yeah, because I could have got 450, 460. Randy. Okay, I'm going to tell you why I took this trade. From Washboardjim, the founder of the Sneaky Snake trading strategy. Burp it up, Jim. What the hell's going on here? Damn, 470. Woo! It would have paid off to keep that one. That's left $500 on the table. We're at double top SPX. Now let's see if we pull back here. Randy. Okay. This is definitely an exit idea here. So we've got, at open, we have an inverted hammer. It came back and found support with a tweezer bottom, and I jumped in the trade. So I decided to stick with it, and then we had a little breakout. And once we started to approach the 200, I exited the trade. So in about 3.5 minutes, I was out of this trade. Now it's going to come back. Where's support at, Jim? You see this here consolidated area right in here for about 5 minutes? You want to put a line to that, to the top of that candle. And that's going to be your support to stay bullish. So a tweezer bottom with a double top exit idea, or to the 200. And then it ran up and hit the 200 EMA. So we hit support. These things are back at 370, so I'm going to jump back in the trade. Unless it decides to sell off. Now, that's the chart pattern. That's the moving averages. And that's the exit idea. So now you have 3 black crows at 370. $360. I'm going to jump in this trade. That didn't hold. So we wait until this crow, wait until the third crow finishes, and then see what happens, what candle shows up next to it. Did you get out, Randy? So Randy sold it too because he had a triple top resistance. Now we got 3 black crows. We want to see what this candle does. Could have an inside harmony at 350. No. We wait. What am I doing? So I was explaining chart patterns, the moving average, and being in the now. So we know that the sentiment out there is the fat cats are wanting this pullback. And I think nothing has changed, but the only thing that annoys me is the government shutdown. So people are going to be, your liberals definitely, the work for the government, are going to be slow down on their spending. But they'll get that money back. When they open up, they get a big fat bonus check. And these people already make 60 to 80 grand a year. So they got money. They love government shutdowns. Now, I know something that a lot of people don't know. A lot of them employees were called back to work. You know, they no longer have their easy office job. So they're pissed. They got a little spoiled during COVID because they still made bonuses and got the big salary and got to work from home. And they really got lazy. Now they have, going back to work, they have to show accountability. And I've been told that it is a big difference in what they're doing from working at home from being on the site. So get ready for a double bottom here. I'm going to get back in the trade. And if we stay, there we go, right here. 275. We'll see if I'm right. If not, I have to hurry and stop back out. So you got to still act like a bear until this gets over with. And then we're going to have a real big rebound in the market. So I think it all just insinuates nothing to do with China, or plus we have peace now, and the market doesn't like that. I broke a tuning peg on my ukulele yesterday. I was so pissed off. So I'm going to go out and buy some real fancy ukulele tuning pegs. I'm going to make some phone calls today and see who can do that. Put some real nice ones on it. I mean, that broke my heart. You can see. See where it broke right there? So I got them at 275, the double bottom. You got a hammer and a hammer. And this thing dips real hard, I'm going to get out of them. Because I made enough here to $500. Well, I actually made more than that. $650. Let's go. Let's see, I'm going to watch this. I'm going to keep this on watch. We'll go through some others. So the bottom of the orb's at 6604. I might wait until then if it dips on down. 6604. Schwab's way behind. Toss is way behind on a. No, it might not be Toss. It might be something's not right here. Might be Tasty Trade behind today. Or I'm too far out of the money because these things should be up a little bit more than they are. $3. Yeah, there's something definitely wrong here. So I might sell. We're at the 200 on the what is this? Fuck, what's going on here? Oh, that's a 63. Okay, they're equal. $3. Take some profit off the table. $3.60. Woo! Take it off. I sold too early again? What are you talking about? Randy's going to get a spanking. To the 200 EMA. Well, let's form a blowhorn. Well, volatility, it makes sense. Good job, Jesse. Good job, Jesse. Prime. Washboardjim with a sneaky snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. A week out? Oh, that's a good idea. I think I will. I think I will. The 20th? Are you talking about the 20th? On the 20th? Yes. $4.10. I did sell too early. We have a triple top coming up, folks. Does anybody want to listen to another song? Call Me Everyone. Who wants to listen to another song? Let's do it. Let's do it. triple top chart patterns, moving average, and being in the now.
Opening bell is the sound that makes it go down. Sneaky snake, chart pattern, moving averages, and being in the now. Being in the now. Jimmy salads and sipping chai tea. Checking out the cleavage on Schwab TV. Magnificent Jesus, Rob and Randy, Living Goose, Rich Nixon, Michelle, and Funky, stingy with his grace. We got a lot to prove. Patience is the key for Gamma John moves. Opening bell is the sound that makes it go down.
560
Sneaky snake,
chart patterns, averages, and being in the now. Being in the now.
buying the pullbacks, riding rockets and rips, protecting our assets, pouncing on the dips, market maker shakeouts, standing our ground, waiting on our setups to capture our crown. Stingy with his grace, we got a lot to prove. Patience is the key for Gamma John moves. Opening bell is the sound that makes it go down.
Sneaky snake, chart patterns, moving averages, and being in the now. I just hit 66, 43, 14. That was my next resistance. Thank you very much. For I am Washboardjim with a sneaky snake trading strategy. If you're ever in doubt, give Washboardjim a shout. Sold the last one here at $6. I kept one, Randy. Now, he's right. If you pay, Randy, listen to this. I've been calling the lotto for the first half of the day, but, and I don't play the lotto afternoon because they lose too much on the SPY. Now, the SPX I do because they're too expensive if you go out the next week on the SPX, and I'll keep playing them all day. But after scalping period, which is right around 10 o'clock or sooner, I'm on the next day. Am I correct? Say yes, Randy. So where's support at? It'll be the triple top breakout, right? So you want to set your alert just right above the triple top breakout, and usually probably right there on that candle right there. Go to that next bodied candle and set your alert right there on the 1 minute. I need to rearrange my boys down here. They're getting a little squeezed down there when I get excited. Okay, prepare ye in the name of the Lord. My alert's going to get ready to sound off. Too much information? Get ready, my ding-a-ling just went off. 3 black crows standing in a row. Now, if we want to stay bullish, we will reverse right here. Oh. Yeah, I've got a real bad problem here with Tastyworks today. It's usually the other way around. The timing's not the best. So 3 contracts are being set up for the 67. I wonder if I should go up. God, they're so expensive. 25,000 contracts at 6,700. Okay, we're at the 200. Prepare ye in the name of the Lord. $3. Here, let me cancel that. He's doing some sheetrocking in my apartment. They're at 490. God darn it. What the heck did I just do there? $470.
That was a difficult one, I won't lie.
Well, it was a difficult one.
So,
Yeah.
Up there in the ceiling, they also have a metal panel that goes across.
Yeah.
And that creates a half-inch gap right there. So I have to shim it. Well, those shims aren't wanting to stay still for me, so it's constant maneuvering on it. So once I got those finally set back into place, everything set just on point.
Well, I sure admire you guys.
That one was fun.
You ever do work on the side?
I do.
Do you?
Yes, sir.
You might want to leave your name, because I'm going to build me a little cabin up north on my property, small one. And I'm going to want it sheetrocked.
Okay.
And so it might be 6-7 months.
I got plenty of time.
Next spring.
That's awesome.
So leave me your name, phone number, and I'll put it in my book.
Yes, sir. Yeah, I'll grab a
It's up by Collins, Missouri.
Sorry?
It's up by Collins, Missouri.
Never been that way.
Yeah.
That's happy, though. I'm happy for you on that. Let me grab some mud real quick.
Okay. $5. I'm gonna get out here. $470. I'm tempted to shut this thing back down again. because it's kind of taking its sweet time. I don't know what the deal is. Ah, darn it. Yeah, I'm gonna shut this fucker down. God darn it. Yeah, I gotta shut this down because this is taking too long for me to type in. You see why I got out of that? Head and Shoulders. Someone say yes. And then after this, I'm going to shut this down and reboot it, 'cause I've been having some issues with this early morning crap. Another tweezer bottom. A lot of people panic when they look at the 1 minute. I don't, because it's so clean. A lot of people don't think it's clean. They don't want to take the time. God darn it. Jesus. Oh well. Triple top. Boom. Congratulations, Washboardjim. $7.30, $7.20. God. No. I just have one. This is a different trade. Spank. Who wants me to give Randy a spanking? Randy gets a spanking. So yesterday, everybody was kind of down in the dumps. And I had a good day. I got stuck in 2 trades and had to cost average out, but I had a green day. And I want you to remember next time it seems like it's a horrible day, the next day could be twice as good. And I've seen that over and over and over and over and over. Unusual bad days like yesterday. Because I think if you listen to these broadcasters and these fat cats, they'll try to scare the heck out of you. That's why I can't stand listening to Marley. She'll pump a stock that's broke out, and then whine about one that's dipped. And I think just the opposite. I'm not going to trade a stock that's broke out. Compared to, I'd rather trade the same thing when it has a sell-off. Because your odds of winning are a lot higher. I mean, I've seen it over. I mean, I've had like a $2,000 a day loss and make $4,000 the next day. But I got to where, I just didn't want to take any more losses. So I get one bad trade out of 50 now that where I just have to sell. Where I used to get every other one or two bad ones with the one good one, and I just kept selling at a loss, a small loss. I was in another room yesterday, and the guy got pissed off because he got stopped out, and the thing bounced on him. I can't tell you how many times I've done that. But with small accounts, you can't take the risk. So I see, but small count ends up getting smaller and smaller and smaller. If you don't get on a winning streak. You see the trend line right here? You want to run that trend line all the way up there, and then you're still bullish. You actually got two of them. I'd almost run one from here to here, and one from here to here. So let's move this out of the way. And then I'm gonna go get something to eat. I've been up all night and all I've had is chocolate. I haven't had nothing nothing in my stomach. I think it's either going to be a burger or some soup. So you got a support right there off that trend line right there, or you got a support right there, and that coincides with that head and shoulders. So that's a shoulder support line. There's two reasons why I'd rather take it there, and only one reason why I'd take it there. So if this market wants to stay bullish, it's going to bounce right here. And we're at 490. And I'm going to have to get closer to the money on these calls if I want them to work. So the SPYs are definitely cheaper. We're at support right now. So if we bounce from here, you understand? You got a head and shoulders, and you got that trend line. So I have two reasons to buy it right there. $470 to $540, just like that. Tesla went nuts. You got good news. Oracle's pulled back to support.
I got a fan running in there.
Yeah.
And I will be back probably in an hour to to check on that.
Okay.
So,
Todd, what was it?
sorry?
Todd, what was your name again?
Chad.
Chad.
Yes, sir.
Okay.
Yes, sir.
Thank you very much.
Very welcome.
You're very professional.
Very. You from Hawaii?
Yeah, I lived there
Nice.
for about 6 months, about almost a year. I was a custom picture framer. So I got a job working out there building picture frames.
Very nice.
And I did that for 18 years.
I
Now,
think that's
yeah, I paint too.
memories of it all.
Yeah, that's some of the memories. I've got a whole wall full in the back here. I'll take a look.
Ah,
I got my GED and got my diploma.
congratulations.
Business management.
There you go.
So I changed my life around.
Yeah, man. It's the way to do it.
Now I own a janitorial business.
Very nice.
I sit here and day trade stocks in front of the crowd.
Okay, okay. It's not bad at all. I've always been curious about that.
Yeah. You got a card?
I do.
Oh, that'd be plenty there. I'll put that in my file. You from around here?
Republic.
Republic?
Yep.
Yeah. I lived out there for when I was 4 years old. I owned a farmhouse.
There you go.
Tornado hit out there. A tree went into my bedroom one time. I'm 65. Yeah.
It's always something.
All right.
I'll be back in about an hour. I'm going to let that run for you, and we'll see you from there.
Okay, thank you very much, Chad.
Very welcome, sir.
Yep. They gave me a card. I don't need to. Hello. My letter to the IRS. You guys suck. Where the hell's my... What did I do with my page? Things just don't disappear. Huh. God dang, am I a musician or what? Okay, I'm pissed off because I can't find my page. That's funky. Things just don't disappear like that. I did not use invisible ink. Huh. Well, I don't get it. Yeah, I'll go back and look at it later, but it fucker ain't here. I never seen anything like it. Jim. Wow. Okay. Whatever. There it is. I put it on the wrong. I didn't put it on that page. Okay, I'm gonna go pee and look at the job he done. I'm gonna have some soup. But I'm tempted to clean this chart up because it's looking pretty dirty. We're back at support. So I called this bounce off the shoulder line. This is a head and shoulders. And if that doesn't hold, it means we come back down to the previous resistance level of the double top, where the 200's meeting. So that's my two confirmations, the 200 EMA. That's probably where I'd wait for it on the SPX. Because we failed these two support levels right here, see? First one we hit, second one we failed. So it's either going to hold here and bounce up or pull back. And might pull back to the orb, which was established first thing this morning. So when I get back, I'm going to clean this chart up. I didn't get to look at Tesla. I got to pee real bad. Let's see if Marley's on here.
Across the board. Lots of maintained buy or buy equivalent ratings. Guggenheim also raising their price target up to 400. They're saying they're keeping a buy rating as well. They said, quote, they came out of the financial analyst day even more encouraged than before.
Sent Oracle to another room.
They said that they see revenue
Now that I see her pumping it, I don't know.
AI training deals that are, quote, comfortably profitable today and are likely to be more so over time. So a lot of optimism just generally expressed. Barclays also raising their target to $400. I do want to walk through one interesting thing in Bank of America's note. Their price target was unchanged, had a buy rating, an unchanged price target of $368. So not a street high, but above the average of $336. Now they said after having attended the analyst day, that they were impressed by the impressive targets for fiscal year 30, like most of the notes mentioned. But they said the margin associated with the EPS target is what they say appears achievable. But what is less clear is how Oracle can stand up data centers fast enough to achieve the top-line growth given supply constraints across land, building, energy, and GPUs. Then they go on to say, however, the firm believes that Oracle is well positioned to continue capturing share of the large and growing AI infrastructure industry. So I think, Sam, as we're speculating over what some of this downside movement could be, that may be a concern. Certainly one we've had other guests on our shows talk about is how fast can we really achieve this data center build out in terms of top line growth, given that there are other factors at play here that are out of Oracle's hands.
Yeah, it's really interesting, isn't it? Because among all the analyst reports that you're seeing coming in, I mean, a lot of the commentary, if I hit Control F on the word encouraged, I mean, it shows up multiple times. The analysts walking away from the event feeling very, very positive. It does sort of feel like the only bump in that, as you mentioned, does come from the Bank of America there with that sort of caveat. And it's interesting, isn't it? Because just a couple of weeks ago, we were talking about that information report, which had sort of sent jitters through the entire sort of AI space about these razor-thin margins, and that had sort of brought into question, this whole circular financing conversation, the AI bubble narrative, whether that was set to pop, etc. And then, some are also talking about whether we've sort of hit a capex boom sort of peak now, and no doubt we'll start to see that in the next several earnings report. I'm just wondering, what also sort of stands out to you from what the analysts are saying, given the reaction in the stock today and also the run-up that we've seen recently, particularly this year, and particularly off the back of that last earnings report.
Yes, one note I went looking for when I found out we were talking about Oracle was something from Rothschild and Redburn, because I'm sure you remember their sell rating and their street low $175 price target. So considerably below the average, more than $120 lower than where we're currently trading, and no adjustment yet in the wake of this analyst day. So that was one thing that stuck out to me. I expected to see them somewhere in this shopping list of notes, and they are not here yet.
Yeah, it's certainly interesting, isn't it? But look, as far as the price targets, significantly raised, now
okay, here we go.
31 to 400. More firms have buy and equivalent ratings of overweight and outperform now on this name. Thank you so much, Marley, for getting us across all of that. Okay, we're going to be taking a break now, but we will take a closer look at the sectors on the move this morning and what is moving markets also overseas for this Friday morning trade live. We'll be right back.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and example trade ideas, minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com. Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to what moves the market. Download the Schwab Network app and stream anytime wherever you are. Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Believe me, when it comes to investing, you'll love Carl's Way.
take a left here, please? But there's a Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get up here.
Where are you going?
Schwab. Schwab, a modern approach to wealth management.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Hey, Dad. I have a question for you.
Dad.
When did Granddad first?
How come Grandpa doesn't sleep
Granddad
with me
hadn't had much
anymore?
job before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Hello, everybody. Welcome back to Morning Trade Live. I'm Sam Bartis, coming to you live from the floor of the New York Stock Exchange. It is time now to take a look at the sectors that are moving markets this morning, and I'm joined for that by Kevin Hinks over in Chicago today. Happy Friday to you, Kevin. What are your overall takeaways for
Okay,
the
SPX.
today?
My overall takeaway, Sam, good morning, is that it's already been a long trading day. If you watch the overnight markets, which I do, it's already been a roller coaster. So I'm getting a little fatigued of the roller coaster, but we're going to power through. We'll make it to the end of the day. But right now, looking at the market, it's a pretty solid recovery when you think about where we were, like almost a 28.99 on the VIX, Dow futures, S&P, NASDAQ that were significantly lower that have come back. So now
SPX.
this is a pretty unchanged mixed market. Right now I've got 5 of the S&P sectors higher. I've got 6 lower. Nice recovery in financials as some of the banks have recovered from that sell-off yesterday. So this is still a market dealing with the overall higher levels of implied volatility, but at least right now, as we get to the 10:40 on the clock, it's a pretty mixed day, but it's one of those unchanged days, Sam, where you look at the market, it looks unchanged, but it's been all over the board so far this morning. So lots of volatility, though it doesn't show up in the net numbers right now.
We've certainly seen plenty of seesaw action this week. Everything from some of the credit concerns, as you pointed out, with the banks, and then obviously the US-China relationship throwing a bit of a spanner in the works there, particularly when you look at just how volatile things have been. But it does look like this morning developments are constructive on both of those stories, with some of the easing concerns around what's going on in the financials, but also this expectation that the US and China
2:30
will be
to 10.
holding these meetings. If you look across the sectors, what sort of stands out to you also around the Mag 7? It doesn't look like anything sort of jumping out. We're looking pretty range-bound, all but Tesla, which is over 1% higher. But anything stick out to you today, Kevin, about that?
I think it's interesting to watch the Mag 7. Why? Because there's looming earnings on the calendar coming up. Now, remember, you have Tesla on the 22nd, but then after that, October 29th and 30th, you're going to get 5 of the Mag 7 names coming out with earnings in those 2 days. You won't get NVIDIA, the 7th name, until mid-November. I think November 19th is what I have on my calendar. So those are starting to trade now in anticipation of the earning events that are coming on the calendar, Diane, or Sam. We don't get a lot of economic data. We're going to hope springs eternal that we'll get that CPI data next Friday, the 24th. But you're right. I think what's taking over this market is positive comments from the Trump administration, a little bit of de-escalation in terms of the banks. Remember, you've got Scott Bessent talking to the China vice premier today, setting up the meeting in 2 weeks with President Trump and Xi Jinping in South Korea. And so all these things, it seems like the tensions are coming down slightly. A good flow of positive news have, at least for now, the markets all that to get us to unchanged, Sam.
Yeah, certainly the difference a week can make. You mentioned the earnings. I believe we've heard from 51 names on the S&P 500 that have reported so far, and right now we're looking at an 82% beat on expectations as far as the companies that have already been out with their earnings. So that's certainly interesting. What are you expecting as far as volatility today ahead of options expiration?
Well, the market's already, the VIX has already been up towards a 29. It hit 28.99 this morning. As it sits now at 23, still escalating. Remember, if you use the rule of 16, a 24 VIX implies a 1.5% move a third of the day. That's using the rule of 16. It's a pretty good benchmark for VIX. So what does that imply? Volatility's here. Choppy markets moving. I would expect movement. I would expect swings between the day. We've already had a couple of them. As we hit today, the market was up. Then it turned
back to the 200.
Now it's firming up here and going green in the 3 and 4 indices. So all things considered, bullish or bearish, I would say choppy is the right answer, Sam.
Okay. Certainly has been the theme of the week, choppy to say the least. Kevin Hinks, always appreciate your insights. Thank you so much for joining me today. Let's widen our scope and take a look at global markets right now. And it was a rough day for global banking stocks, feeling the negative follow-through from Thursday's sell-off on here on Wall Street. European lenders getting slammed in the session. Names like Deutsche Bank and Barclays, as you can see here, HSBC also sinking as credit worries spread to that region. Chinese stocks also coming under pressure to end the week. The Hang Seng and China's blue chip index both seeing their biggest drops since April. However, I've just seen the Hang Seng index futures now jumping over 2% on these developments around China and the US. China. A critical week coming up in China with its latest GDP print, which will be out, and a major policy meeting, which is closely watched by investors in Beijing. BYD getting.
I'm going to reset this.
Also after it announced it would be recalled.
I just got out of them again, but I got to redo this. Thing's pissing me off. So we're going to reset it. We'll see how long it takes for it to.
Raising some concerns about quality control and EV safety as BYD expands overseas in markets like Europe. And South Korean equities bucking the trend, hitting another record high, helped by optimism that the country would be close to a trade deal with the US. The South Korean Kospi has been an outperformer in Asia this year. Coming up in this time for Inside Out, we'll take a closer look at cybersecurity stocks and bring you an example trade when Morning Trade Live comes back.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
we're back on Morning Trade Live. Let's talk cybersecurity stocks. It's been a good year for CrowdStrike, Zscaler shareholders, with each stock up on 50% over the last 12 months. Palo Alto Networks is positive during that time span, but as you can see on the chart here, it's lagging behind the other heavy hitters in that segment by a margin. Let's go inside out on cybersecurity. In that segment, joining us now is Alex Hammerstone, Director at Trusted Set. Thank you so much for joining us today, Alex. What's your take on the cybersecurity space? I mean, it's been pretty hot. You can see it in those charts. Just give us your take on where you see things right now.
I think you only need to watch the news to see that it's going to continue to expand, you know, and not just with the number of breaches, but also seeing a number of kind of new requirements coming out of states and, you know, governments and things like that. And I think it has no sign of slowing down as an industry. But I think what you're going to continue to see happen is really these organizations that consolidate. Companies are really looking for more value. I think gone are the days of old when people would just buy kind of multiple tools and different things. And organizations are looking for that value and outcomes. And companies that are able to provide that are going to really continue to stay ahead.
So on that note, let's talk about Palo Alto, because obviously we heard about the news acquiring CyberArk, but as we saw on that chart, I don't know if we can bring it up again, I mean, it is lagging behind the others. Is that got to do with it? Because, you know, the thinking here is that very much this could become a sort of one-stop shop, and I suppose, you know, that's the goal here, to obviously give clients, you know, everything that they need and address all their cybersecurity concerns right now with some consolidation in the space.
So I'm a huge believer in the platformization. I'm a huge believer in kind of a one-stop shop for a lot of reasons. You know, one of which is much easier to, you know, have staff that kind of knows how to use certain organizations' user interfaces and methodologies and things like that. You know, I'm not here as a market expert, but I will say, you know, kind of keeping an eye on things, it's the market doesn't always seem to kind of follow the fundamentals, you know, especially lately. So I don't know about the effect on the short-term run, but I think long-term, you really are going to see, you know, companies that are able to provide that one-stop shop doing much better overall. I really think that's what, you know, organizations are looking for from their service providers.
Yeah, and a lot of the reason why, obviously, cybersecurity in this space has been so hot, and we've certainly seen it as far as an investment theme, is because of this whole thinking that, you know, even with some of the macroeconomic challenges, the geopolitical headwinds as well, that the IT budgets are there. I mean, this is not negotiable, it's not optional as far as trying to prevent risk out there, particularly when you're talking about this huge demand for artificial intelligence. So, you know, when you look across this space, do you believe that that is set to continue as far as the spend is there and the demand?
I absolutely do, and I think one of the big drivers is over time. You know, a decade ago or 5 years ago, when we talked about cybersecurity, we talked a lot about breaches and loss of records and things like that. But the conversation has really changed to also include availability. So when you see these big stories of, you know, very large companies, you know, having their production and systems down, you know, for weeks at a time and costing tens of millions of dollars, you know, it's really impossible to avoid the cybersecurity spend. You know, organizations, again, are not just focused on breaches. I mean, we're still focused there, but the focus is so much on availability and the drastic effects that loss of availability can have on a company, and they just need to kind of keep up with the cybersecurity to prevent that and lower the risk as much as they can.
Great chat, Alex. Thank you so much for joining us today. We've got to wrap it up there. That is Alex Hammerstone, Director at Trusted Set. Appreciate your time. Let's trade it now with George Siller, Senior Markets Correspondent. And you've got an example trade. Good morning to you, George, from CrowdStrike, sort of neutral approach. Talk us through that one.
Yes, if you take a look at CrowdStrike, Sam, you know, the stock attempted to break out of a trading range around the $515 area, which corresponded to levels back in July. So last week, the stock attempted to breach that, it did not. So it actually may be retracing back towards the 50-day moving average below the current price. So with that said, until it breaks out of a trading range, we're going to trade what the market is giving us. So I'm going to structure a neutral trade here for CrowdStrike going out to November monthly contract, about 35 days to expiration. And I'm essentially going to sell an iron condor, which capitalizes on a bi-directional movements of the stock contained within certain ranges. So I'm going to sell 540 550 call spread that's above the current price and below the current price, I'm going to structure a 440, 430 put spread. So altogether, by structuring this four-legged trade, you could earn about $3.75 a share in credit, or $375 a contract. So in essence, the whole premise behind the trade is to stay range bound within the context of the short strike. So the short strike high is 540, and then 440 low. So it's about $60 to the high side, $40 to the downside. So it's slightly skewed for a bullish movement because, again, the stock may break out at trading range. But with that said, your max profit is what you earn in terms of credit, 375. Your break-even levels are 543, 75 high, or 436, 25 low. And the opposite of the $10 wide spread in terms of your credit is about $6.25. That's your risk. And that only occurs if the stock rolls out in either direction past the long strikes of 550 high or 430 low. So this allows us time and flexibility. Because the earnings for these names, both Palo Alto and CrowdStrike, are not necessarily in the near future. They're actually in mid to late November.
A little bit of CrowdStrike there and a neutral example trade for that name. Let's switch gears to Palo Alto Networks, which obviously is the underperformer across the space there in the bunch. A neutral to bullish example trade for us. What do you see there?
That's right. This is a little bit different because one of the things about Palo Alto is it recently broke about a trading range high of 205, and it seems to be retesting that in the last week alongside some of the market pullback and volatility we've seen. So with that said, I'm going to use that 205 level as a support area to structure a neutral bullish trade in this case. And we're basically structuring a trade like the Iron Condor, but we're only using the put side of the spreads. But in this case, we're going to be selling 30 delta puts versus 20 delta puts for the Condor just a moment ago. So in essence, I'm going to be looking at selling the $200 put. These are for November, by the way, as well, monthlies. And then I'm going to be buying the 190 put below that. So altogether in this trade, you can earn about $3.50.
God, this thing's still waiting to shut down.
So the whole premise again here is
I'm looking at the 6,700 here.
$200 level between now and expiration in 35 days. Your break-even in case it does breach that level is 196.50, and you're earning $3.50, and your max risk is $6.50. That only occurs if the stock gets 190 or lower by expiration. But if you look at the probabilities here, it's a 38 delta put, $200 strike, which implies a 62% probability of profits, plus you're earning about a 53% return on risk on this trade. So the probabilities, return on risk makes sense, and the technical also pattern fits the narrative behind this trade.
George Tillers, thank you so much, as always, for getting us across those example trades in the cybersecurity space. That's going to do it for us here on Morning Trade Live. Thanks so much for joining us. Download the Schwab Network app, available in the Apple App Store, and tune in 24/7 on schwabnetwork.com. Trading 360 with Molly Caden is coming up next, and I'll catch you at 3 p.m. Eastern on Market On Close.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way you're going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Oh, hot.
I'm Deb Linus, live from the New York Stock Exchange, where the market moves we're on it, getting the reaction
Today's lunch,
and sentiment in
chicken
real
barley
time.
soup
Stream Schwab Network
with
at
Texas toast.
schwabnetwork.com.
Do, 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 do.
Good morning. We're 90 minutes into the
Morning.
day. Welcome to Trading 360. I'm Marley King, coming to you live from our Chicago headquarters. Here's what we have
You
coming up
girl,
for
you.
in today's show. In our 360 spotlight, we'll take a look at this week's market action, recap all of you, then also talk about some options trends you should be focused on as we look ahead. to
Please
next
don't.
week. Then later we'll be joined by Chairman and CEO
Do the
of
opposite.
TD Technologies. They're a quantum company that recently announced the first ever quantum safe Bitcoin. Then in our 360 round, we're going to discuss the airlines, the earnings we've already received, the ones we have coming, as well as the outlook for the upcoming holiday travel season. Before we get to all of that, let's take a look at where
No.
we stand. A choppy morning so far to start.
Oh, God, here she goes.
1% right now at 66.19. The Nasdaq, you're trading down 0.25% to 24,598.84. On the Dow, unchanged at 45,951. The Russell 2000 under pressure again today, down almost 1% at 2444. The 10-year just holding above that 441 right now, up almost 1% on the day so far. The dollar slightly higher as well, up almost 0.2 at 98.26. We're seeing gold dipping below that 4,200 to 4,200 threshold. We're at 4,236 here, down off of those new record highs that we saw yesterday.
No.
Down about 0.9% at 4,267. Crude oil trading 4/10 higher, 57.23 a barrel, but still the lowest level we've seen in months. Bitcoin trading down, way down today, 105,270, almost 3% off, really dipping and approaching those lows that we saw during that flash crash we had last Friday, a week off of that now, and still not recovered here. But I do want to bring in our first guest and talk about our first story. We're talking about American Express and their earnings that they released earlier today. Kevin Green joining us, our senior market technician here on Schwab Network. So KG, walk us through Amex's earnings. You know, shares up more than 4% on this news.
Yeah, nice little rebound, especially after yesterday's slide when it comes to the financial stocks here. They beat both on the top and bottom line and provided better guidance than the street's expectations. The adjusted earnings per share actually came in at $4.14. The street was looking for around $4, and the revenue actually came in at $18.4 billion. The street was looking for around $18.1 billion. And when you're looking at the provision for credit losses, they actually have that at $1.29 billion. The street was actually looking at around $1.4 billion, and they did actually re-rate to the upside.
Okay, it went down. Finally. The SPX, I scalped here for almost 70 cents. And that snake pattern. So this one here, we had a snake breakout pullback up to a triple top. One of them, two of them, three of them. Now we're coming with three black crows right here. So if the market wants to stay in rhythm and been trading with patterns all day like it has, we should reverse here. But I want to make it real clear. The first hour and a half of the day is scalping time. You see, I took my lunch after I had 4 good trades within an hour and 5 minutes. Because through experience, I know we got a double bottom. Through experience, 3 black crows with a double bottom. So through experience, I know that there's cycles that go on throughout the day. Trading cycles. The first hour and a half is scalping. The second, everybody's kind of taking a break, going to lunch. I used to say it was a time where the fat cats left and left the interns to watch over the trades. You got to think like you're in New York time. So it's 11 o'clock. And many of them fat cats are out to lunch, got plans, got dinner date. They're done trading for the day. They leave the office and they go do what they got to do. That's why I kind of got this scheduled down pretty good, where I just have my lunch. After I get done with my scalps, take a little break, play a song, make a cup of coffee. I'm going to make me a coffee here in a second. Then I'm going to look over my watch list. I'm going to look over the watch list. I'm going to see if there's anything I missed, anything that's pulling back. I want to keep. That's why I turn on CNBC or Schwab, because I want to listen to how they're talking and pick up on any news that I might miss out on. I can't listen to CNBC, and I have a hard time listening to Marley, because she's a pumper. I mean, she'll talk about a trade, but she won't tell you the entries and the exits, and then usually when she's talking about them, they're at their resistance highs, and I just don't like her style. Her breath changes with the wind. She's cute. She got nice boobies, but that's all she's got going for her, in my opinion. Then these guys that trade these options, I don't understand how they do it. If they're just buying a put, I didn't know you could just buy a put. I mean, I always thought they were all calls. Vertical and these condors, and it's way out of my league. There's Marley. Maybe I'm just super biased because she took over.
That big pullback up.
She acts like she owns the joint, and I don't like that. For her just being all of a sudden being new to the scene. She didn't, I mean, she jumped right in there, boy. Like, I guess she might have been working there for years behind the scene and maybe the head honcho of all the other girls. But she's always looking at that stupid computer, listening to these guys and not paying attention to what Rick or others have to say.
This technology since the wheel, fire, the internal combustion engine, etc. But at the end of the day, you need, it's kind of that picks and shovels idea. You can't build these data centers, you can't expand the capabilities, you can't grow that business without chips. And AMD is another company just like NVIDIA. Back when I was at my computer company in the 90s, love their technology, love the CEO at AMD, and I just think if we can get a continued consolidation zone here, getting people are going to look back at this as an amazing buy opportunity, even if that stock is up a lot in the last week or so.
All right, Rick, so as we take a look at AMD and its performance, not just in the past week, but you can certainly see off of our April lows here. What are the technicals showing us?
Right, and as we often say, just because something is high doesn't mean it can't keep going higher, and who knows when that could stop. And when we look at our recent price activity, large gap to the upside here that took out our old highs pretty significantly. We topped out previously around 186, so that's been left in the dust here. Our low point after our gap comes in right around 203, so that's the first boundary to keep an eye on to the downside here. So the short-term shape that we have here is kind of more of an ascending triangle.
Triple bottom on the slash ES. You could have a trade here.
And then we have a rather steep, in this case, trend line going across the low. So increasingly anxious buyers and consistent sellers. What the hope would be if you were bullish in this name and looking to trade this pattern is that eventually the bulls would push up above that resistance level and trigger the cascade of orders that results in the breakout and all the push above that level that runaway price activity here. But if we were to look at our moving averages here, yellow 21-day exponential moving average lines up fairly closely with our lows near 203. The moving average comes in at about 201. We did see a little bit of bearish divergence on the RSI. We saw that RSI made
I feel like going up the store and getting some creamer.
Price was making 2 new peaks, but RSI was actually trending lower. Now we have fallen out of that overbought area once again here, but just very slightly. We're still very high in terms of the bullishness of momentum here. So, 241, 240, that's the obvious point to the upside that the bulls would want to break out. If we do start to move beyond that point, the +3 standard deviation channel comes in right around 253. Our volume node area, not really too much to work with here given how little time we spent in this range here. But our +2 channel lines up with this volume node near about 222, and then to the downside even further, 203 as we mentioned, would be the final point to watch before we could fill that gap.
And right now trading at 229.61 here on
Right now trading at 229.61.
Your new scale power, really impressive performance year to date, up about 145%. But in that same time period, they've had 2 massive downside moves of about 40%. So why are we bullish on this one?
Well, kind of going back.
One day I looked at Marley in the eye. She looked back at me. She looked back at me. She's talking about AMD. She looked back at me. She looked back at me. She said, where have you been all my life? Let's get married and I'll be your wife. She said, I'll make sure that you're warm. Marley, short skirt. You're nothing but a flirt. You're nothing but a flirt. I told her, give me some time to think about it. I'll come calling on you. I'll come calling. Molly looked back at me. We just made some history. Well, I told her that I might wait, 'cause she's jailbait. She's jailbait. Okay, what I said. You're too young for me to take you to bed. But she looked back at me. She looked back at me.
Whoa! Trading activity is
Marley.
Here between about 36 to 40 or so. That was the really heavy trading range to watch here. Our +1 standard deviation channel comes in around 51.40. So that's another potential stopping point on the road back to those old highs here, 53.50, as we said.
All right, Rick, so let's go back to Tim now and talk about this last pick, the metals company. I wasn't as familiar with this deep sea mining company, but when I was taking a look at their chart, a very interesting start to the month they've been having, a meteoric rise. Then Wednesday they had more of a 10% drop here. You know, what's your pick here?
Well, so this is the most speculative of the bunch, obviously. As you said, very volatile stock. But, you know, as you're watching the news flow with the saber rattling or whatever you want to call it with China, I'm a big believer that there should be rare earth metals refining, exploration in the U.S., and really the catalyst for this idea, I've been watching the chart for a while, but on the flight in, listening to the Sean Ryan podcast with Gerard Barron, I was going to say Gerard Butler, but he's one of the founders of the company, very great thinker, was really inspired by a lot in that podcast.
TMC.
Broke down the availability of these rare earths in the ocean. Basically just go down and pick them up. I think that as that story continues to spread, especially one thing he talked about was how pro the administration is to his business. Basically, he's like, this is finally what we've been waiting for. So this dip back to that previous breakout level, I think is an amazing potential opportunity here. And last point I do want to make, I know I do this almost every week, but love Rick's breakdowns. One of these weeks I'm going to disagree with the guy, but both of those on the chart analysis agree across the board.
All right, we've got one more technical to walk through though, Tim. I think you'll probably be in agreement, but we'll see. I'll check back in at the end. But Rick, walk us through the technicals on this one. You know, in the last 12 months, up more than 700%. So certainly seeing that boost in terms of the market thinking that regulation is going to favor a company like this.
Yeah, maybe not the most exciting name for a company, but the chart more than makes up for it. Here you can see that we have these high points here, the $8 level. We faded from that area, then we stabilized kind of around this old consolidation area near 5. Now, we had a kind of a small cup and handle type pattern, was what it looked like it was shaping up to be, where we had this gradual bottoming out.
Is there a question?
Re-entry back into that resistance area. What you would typically be looking for with that would be a brief pullback and then the push.
Anybody have a question for Washboardjim?
Plays through those old highs here. So, you know, these setups, they don't always work out the way you're hoping they might here, so just just something to keep in mind, and certainly our crystal ball is going to shape out that way. So in this case, we had our big breakout to the upside. 1135 is where we topped out. Now we have found ourselves back at that $8 level here.
CES 65.
Roughly at the spot of those old highs. So this seems like an important area to watch going forward for the bulls to hold
65.44.
Here we can see that we are also near our yellow.
Is that where the orb is?
Moving average that lines up with that $8 level. Once we start moving a little bit lower, you can see we have here our 63-day EMA lining up with old highs and lows here, and one of our volume nodes that you'll see in a second here, our shaded area, 670. So a little bit of bearish divergence here once again. We have crossed out of that.
Oh, it's actually above it.
Still above the 50 midline. Kind of a similar story with all these stocks here, as Tim said in the beginning, kind of seeing pullbacks after extensive rallies.
We might hold here. We're at the 200 EMA on the 5-minute.
You can see that the volume really starts to
with a double, triple bottom.
Level here, so we're kind of in that point right now where we'd be re-entering the heavy trading areas here. So if we were to hold out,
You said a little under the orb.
The gap would be filled at 853, and then the +1 standard deviation channel comes in near 984 to the downside. Right around 730 is our heavy volume node, relatively speaking, and our linear regression line, our line of best fit.
All right, so right now, Metals Company trading down about 7% at 807.
Confused.
But I do want to check back in with Tim one more time, see if he's still on the Rick
Got her job
Dugan
complete.
train in terms of his technical thoughts and also any final thoughts you have.
Bathroom job almost completed.
But yeah, I mean, I knew it was a very speculative stock, like you mentioned, up 700%, I think you said. I mean, but again, I still agree. I love the way he breaks down the charts. Very similar style the way I do it as well. So.
Well, that's why he's our lead market technician. Thank you both for being with us. Tim Bowen, of course, Chief Technical Trainer at StocksToTrade.com, and Rick, our best of the best lead market technician. Thanks again for being here.
Did you type 45? You took.
Market action, including what volatility is telling us heading into next week.
I'm so confused.
We'll be right back.
Oh.
Sometimes, you know.
Let's see where we're at. You gotta give enough time to dry.
Same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech check, options corner, futures focus, technical analysis. Morning movers covers it all.
You need to crack that door if that helps.
Every trading day at 8 a.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The platforms and tools webcasts are designed
Okay, I said 35. You said 35? You sure you didn't say?
Resources available from Schwab. You'll learn tips and tricks to help navigate
You changed that
Schwab.com,
number.
Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting
35 would be the 200.
It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Try back in about 30 minutes or so.
Yeah.
And it's still got a little bit of wet spots on there, so I can't see it just yet.
Yeah.
Morning
I'll be
trade
here.
line that breaks
I'll be
down
here
the
for
macro moves driving
till
the price
3.
action. From
Till 3,
Fed
okay.
policy
Yep.
to global
I'll see you
growth
back here in
to
a
inflation
second.
trends.
Okay. Yes, Chad.
Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the
My ceiling is going to get
the
painted
macro,
today.
Weekdays at 10 a.m. Eastern on Schwab.
A bounce here is warranted, though. Correct.
Stay connected to what moves the market. Download the Schwab
Correct.
Network app and stream anytime wherever you are.
And I'm watching the SPX. Oh, how'd that move?
Schwab Network,
Ah,
where
I moved
real-time
it.
market coverage meets expert strategy. From the opening bell to the closing bell.
Oh, we got
we've got you covered.
another one right here.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in
Oh, we
sales,
also got a triple bottom.
Not the same rate of change on EPS.
Follow the biggest headlines, live
On the
analysis,
on the
breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time.
We could drop a little more, like you said.
Accuracy and
We
precision.
could get one more
I think one of the
pullback.
most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable
It's a bull
data,
flag on the.
traders, and trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Welcome back to Trading 360. I'm Marley Caden, live in our Chicago headquarters. It's time to spotlight this week's market action with our next guest. Joining us now is Tim Quast, the founder and CEO of Market Structure Edge. Tim, thank you for being with us. You know, I'd love to just get your general thoughts on the volatile week we've seen so far.
Marley, nice to see you. It's not every day I get to talk to an Emmy winner, so it's nice to be with you. So here's it's a question that is predicated on the idea of understanding how the market works. You know, we watch the VIX fear gauge. The way I think about that, though, is the problem with the VIX is that it tells you what's already happened. By the time the VIX moves, it's too late for us as investors and traders. So
Imagine how those SPX has a head and shoulders.
What I call the 1, 2, 3 rule. So the tracking instruments of the S&P 500, and the S&P 500 is 90% of market cap.
Hey, Tip, you clean this up.
IVV from BlackRock.
Because it's getting kind of foggy.
They have a propensity to move about 1% a day. And then that's the number one in the 1, 2, 3 rule.
We got a megaphone.
The underlying stocks have a propensity to move 2%. That's how Jane Street makes $20 billion a year trading baskets of ETFs. Momentum stocks have a propensity to move 3%. So when those things are working well, the market is stable. When they break down, that's when trouble brews. And that happened about October 10, when the volatility of SPY doubled.
Just see the farm girls
those are the
live.
things we think about from a trading perspective.
So if you think about that, and we're starting to see a
chick from
breakdown,
Jamaica.
and the VIX is not the best fear gauge, what should investors be watching instead if we're already in the middle of the breakdown of your 1, 2, 3?
Right, that's back to SPY. I'd use SPY, Marley.
Just see the farm girl.
So if you at home, you can do this. Track the volatility of SPY. And the 50-day average heading into October was 60 basis points. Well, that's half the long-term average. And so it's counterintuitive because you think, well, we look for increases in volatility. Well, that won't tell you in time. So what that will tell you, again, you're thinking about how does the market work and what is the money doing? What that tells us is that the mechanism
This
that
guy's
enables
talking about
firms
the
like
SPY.
Jane Street to make effective markets in
I wanna see if we come
ETFs
down here
versus
and
the
hit this
underlying
bottom here
basket is becoming
on the SPX.
uneconomical. That is when we look for volatility. Now we look at other things. We look at demand and supply, demand-supply volatility. That combination will tell you. But what you look for, investors and traders, isn't an increase in volatility that will tell you if trouble is coming.
Well, she's
You look
cleaning
for a
fish.
decrease in it.
I was wondering what
And
she was
then
doing
there's
up
a
there.
context that matters, and we can talk about that.
Well, certainly. Let's talk about it. First, I want to talk about when we see some of these upticks. You know, we're now a week removed from this crypto crash, although crypto prices considerably under pressure again today.
Next time I go to Jamaica,
You know,
I'm going to
and
get a
I've had
date
some
with this
people
chick.
equate that to seemingly like the 1987 stock crash in terms of its scale. What are the markets telling us with that kind of volatility, you know, and now having the added component of you offering the context of us being actually needing to wait to see it recover?
Yeah, so it's interesting that you mentioned the 1987 comparative. That move, I'm old, so I know. The stock market was down roughly, call it 20% in a day. Cryptocurrencies, a particular
Jimmy said,
group
"Hello,
of them were
baby."
down about 20% on Friday the 10th. Cryptocurrencies
that guy
are not
from
part
Missouri.
of the regulation national market system, which
Keeps
is
calling
our
me
area
baby.
of
What is he
expertise.
trying to
But I
say?
can tell you this:
Fallen wedge.
One of the key things that you can do as traders,
Okay, get ready.
equities and
Spy.
cryptocurrencies.
Randy.
You could look at short volume, not short
Got a
interest.
falling wedge.
Short interest is a 1974 measure, but short volume, which is widely
Actually, I'm
available,
gonna do it
we
off the
track
shoulder
from
line.
FINRA and the exchanges, is
Oh,
the
there it is.
2011 data set associated with the modified uptick rule, and it surged.
See, it's not a falling wedge there.
In financials and crypto stocks, right in the first part of October. That could be a tell that will tell you these things will happen. And once volatility, this
There
is the
it
key.
is.
Once you have volatility, then you look ahead for context. Well, what's coming? Well, that is this week. This week is a consequence of what has already occurred and what is
Okay.
occurring today. And Marley, you and I
Let
will
me look on
probably
my
be the
chart.
only people who mention this. Is options expirations. Monthly options expire today.
I missed a
Index
triple
options
bottom.
reset yesterday. And they matter because
We got the
there-
two
there are
oh we got the
trillions
V.
of dollars
What the
behind
hell
it.
is this?
Index funds and ETFs use them to true up their tracking
What
versus
is
a
this?
benchmark. Hedges are set. Counterparties to all of the selling of options that
Oh,
occur. Like
it's
if
got
you're,
the VWAP
you're a
on there.
retail investor and you are short
Well, that don't
gamma,
make sense.
You sell a call. Somebody else wants the opposite outcome. And for monthlies, that is occurring right now against
It's
a
the
backdrop
VWAP.
of dramatically higher volatility. Well, throws all the math off. The market
What's
is
this?
mathematical. How do I know?
That's the VWAP.
It's 100%
Oh, different time
electronic and
frames.
100% nearly algorithmic. Algorithms are mathematical
I'm
constructs. So we have this risk, and Monday, new options trade. Does anybody show up? We'll see, but you have to be aware of these things, traders.
So the SPXs
since
are.
we're likely
getting,
the only ones who are going to
I'm
talk
gonna move
about
them
this,
up.
let's dive into
No
these
more
options
6700s.
expirations. You know, with the expirations, also seeing the surge in derivatives trading as well. How is this influencing the market right now and also adding to the volatility that we're seeing?
It's, you could say the tail wagging the dog, Marley. I don't think people
6650s.
appreciate the size. Take just one category. Take 0 days to expiration options, zero DTEs, right? A very popular instrument.
They're still
retail-
expensive.
Retail traders. And if you isolate that one group of options,
That'd be the
which have
next
an investment
one.
horizon of a day or less, just like Citadel has an investment horizon of a day or less. The
We could only afford one.
trading in those every day is $1.2 trillion. Well, that's more trading than the entire U.S. stock market. On a
Oh,
notional
we're at the
value
orb.
basis,
Shit.
which is a little under $1 trillion. Well, that is just daily. Those just, there's no asset movement associated with those, but they depend on the movement of the underlying assets for prices. So if we have volatility, you have this massive derivatives overhang in the market. They can get marked to market. Then you have monthlies where counterparties who are hedging their exposure, having bought options from retail traders, will try to protect themselves from volatility. And these are the things people don't think about. We all think about, well, what did Donald Trump say about trade relationships with China? Or are there concerns in regional banks? We think those are the things that move the market. Well, they absolutely are inputs into the pricing of derivatives and equities, but they're not the mathematics of the market. The market is all about the relationship between options, ETFs, and the underlying basket of equities.
SPX
And
off the
right now,
orb.
that is central during monthly
I
expirations.
missed it.
So
I didn't
with
notice
zero
that until
DTEs,
now, or I
let's
would have
stay
took
with
that
this
trade.
Because of the high notional value.
Or this
Also,
candle
estimates
here.
that 60%
Tweezed your bottom.
of zero
Damn.
DTE trading is retail investors. How
That's
is
600.
that
That's $390
influencing
right
this
there.
more than sevenfold
400.
increase in the last half of a decade, influencing market performance? And also, how should investors properly be watching it for clues about where the market's going to go?
Well, that's a big question, Marley. Well, I would put it in this.
Yep, I'd have took that.
We have
Same
to
thing with the /ES right off
there is
the orb.
a disproportionate relationship between the derivatives and the underlying assets. So there are 130 stocks with 100 billion or more of market
That was missed
cap,
opportunity.
And they have 75% of all market cap.
Back to the 200.
90% of market cap. Incredible concentration. There are 11 stocks with $1 trillion of market cap. Do you know what the weighted market cap of the Wilshire 5000
Dadgummit.
index is? $1 trillion. You know what the weighted market cap of the Wilshire large cap index is? $1 trillion. Now, look at the derivatives. There are 4,000 ETFs trading in the U.S. equity market. There are millions of options. There are over 3 million index products. And all of these tie back to a very small underlying basket of securities. So, traders and investors, if you have exposure to options, it is very important to understand the demand-supply balance. We focus on that at Market Structure Edge, the demand-supply balance and derivatives expirations. If there is volatility into those, that is a tell for you to seek safety and let those things sort out. But it's important to recognize derivatives oftentimes drive outcomes in the market now.
Well, Tim, we appreciate you taking the time to talk with us today on Trading 360. That's Tim Quast, the founder and CEO of Market Structure Edge. Coming up next, we'll be joined by the chairman and CEO of BTQ Technologies to discuss all things quantum computing. Trading 360, we'll be right back.
Stay connected to the markets with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com
And on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Trading 360. I'm Marley Caden. It's time now to turn our attention to quantum computing. And for that, I want to welcome in our next guest, Olivier Roussy-Newton, the CEO of BTQ Technologies. Olivier, thank you for taking the time to be with us today. First, could you just start by telling us a little bit about BTQ and what your company does?
Yeah, sure. So I've been working with my younger brother on BTQ Technologies now for about 13 years, and we started off in the field of post-quantum cryptography, where most of our work is based. We've also branched out into quantum computing related verticals, but we're primarily focused on near-term monetizable post-quantum encryption technology products and services as global governments basically mandate these technologies internationally.
Okay, so for our viewers who aren't familiar with post-quantum encryption technologies, can you explain a little bit about what those are?
Sure. So, essentially, there's, Google's, Intel's, IBM's, IonQ's, all of kind of like the larger internet companies of the world, specialized quantum computer companies of the world, along with nation states such as China and Russia. Everyone's kind of racing towards this goal of quantum supremacy, which is, building a quantum computer that can solve multiple problems, but one of the problems that will be the easiest to solve and quickest to break will be our existing encryption standards around the world.
Okay, and so you've just had a major milestone that I want to talk about and also like for you to explain. You say it's the first ever quantum safe Bitcoin. What does that mean? And also, why is it important for investors who are watching today?
For sure. So, I've been in the blockchain space for, close to a decade and a half and built numerous businesses. And, Bitcoin, for instance, its value proposition is predicated on its encryption. But its encryption, ECSDA, is one of the encryption standards and formats. The U.S. is actually deprecating that technology out of conventional use in 2030. So, Bitcoin as a store of value doesn't really have a meaningful store of value
plans available in
if
your
its
state.
underlying
It seems like you might qualify for. So I just wanted to confirm, do you have Medicare Part A and
in
B?
the next few years?
Not yet.
So,
Hello.
what we've done as a company is demonstrated a quantum safe version of Bitcoin, which we will continue to do, and it's part of a spectrum of our
Hello.
products in the digital asset kind of ecosystem. As we see that, my personal belief is that quantum technologies will
Hello?
be utilized at scale, primarily in the digital asset ecosystem, not in just decentralized assets like Bitcoin, but also in the proliferation of stablecoin technologies, where we also have a product called QSSN.
And how real is the risk that a powerful quantum computer could one day steal Bitcoin or crack a blockchain or break into the crypto space?
So, I would say a year or two ago, no one was really paying attention to this, and a lot of people, prominent, I would say, kind of Bitcoiners or people in the digital asset space, obviously don't want to,
Medicare Part A and Part B. Do you have it yet? Not yet.
Of Bitcoin, Ethereum, and the rest of the digital assets.
I need to make a decision.
Now that more research is being done, a lot of which is that BTQ is funding.
Not eligible until
we've gone from
November.
a little over a year ago to having kind of a 5 to 10 year horizon to now actually seeing potential encryption breaks across Bitcoin.
They're going to charge me up the ass.
Digital assets within a 1 to 3 year time span.
So that's in the pretty very near future, as we're looking. So with that said, if you have the quantum safe Bitcoin, the first ever quantum safe Bitcoin, or potentially even a quantum stable coin network, how big of a leap is that? And also, could this potentially future-proof our entire digital asset ecosystem?
For sure. So, obviously we operate a business. So we basically have two kind of verticals within digital assets. We have centralized digital assets.
Hey, old man, are you eligible for Medicare yet?
Such as Bitcoin, Ethereum, Solana, and the likes. But we've basically built.
It's almost like a Darvis box.
Something like a SWIFT or DTCC. Called QSSN, stands for Quantum Secure Stablecoin Network.
Yeah, I'm going to call it a Darvis box. It's kind of an ascending triangle, getting ready to squeeze.
Which has, I think 2 weeks ago now, formalized the equivalent of the Genius Act that transpired in the U.S. some months ago. And we're working with all major companies in the Korean ecosystem launching stablecoins to make sure that all of their assets are issued in a quantum secure manner. And that's what I touched on earlier. The biggest use case of quantum technologies will be, not these moonshot projects trying to do very innovative things with these very expensive machines, but, we see ourselves delivering kind of fundamental value that's regulated and mandated by law, and will spread across, basically the world that is digitizing currencies.
And quantum computing is still in its earlier stages, but you mentioned the potential of a pretty tight timeline where encryptions could be broken. So what kind of time horizon should investors have when they're looking specifically at BTQ?
Yeah, so we're generating profits and scaling rapidly. In my last two blockchain related companies, kind of generated over $1.5 billion in revenue. I like to run profitable companies. I think the work that some of the other quantum computing companies are doing that are largely kind of based on research and development are exponential technologies and very critical to the space. So
Okay.
we have very kind of immediate deliverables of monetization across some of our product spaces, but that's not to say that we aren't investing in research and development and productization across specifically quantum computing attributable assets as we see the capex coming down in some of these computational form factors, and we're extremely excited about the prospects of the future. So I mean, there's things in the short term, but there's also things in a long-term time horizon.
Olivier, we appreciate you being with us. Very exciting, absolutely fascinating conversation. Thank you for sharing with us. Olivier Roussy-Newton, the CEO of BTQ Technologies. And coming up next, we've got our 360 round. We're taking a look at the airlines as earnings season is getting underway and also discussing the holiday travel season as it's approaching quickly. Stay with us.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren, planning for their college educations. Someday it'll be their turn.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
Welcome back to Trading 360. I'm Marley Caden. It's time now for the 360 round. For that, let's bring in our panel to discuss the latest airline earnings. Joining us today, Tom Essay, the founder of the Sevens Report, and David Nelson, chief strategist at Bell Point. Thank you both for being with us. David, we'll start with you. Just general takeaways from Delta and United, whose earnings we've already gotten so far.
By and large, the earnings were decent. Delta had probably the better quarter, and of course it popped on the news. I think there was a lot built into expectations for United, and of course they got hit pretty hard. I think investors need to know full well when they enter these securities that they are cheap for a reason. They can be pretty volatile.
6650s are at 1400. It hit my first resistance, well, second. The orb, and then 66, 39, 26.
That can hit them. Health of the consumer they can't control, and fuel right now, which is okay, but again, a commodity they can't control.
And Tom, coming over to you now, what were some of your thoughts, key takeaways, and who did you think was the stronger performer?
So I agree. I think that Delta was the stronger performer. I mean, they both posted good earnings, right? They both beat versus expectations. Revenue was good and guidance was boosted. So you can't ask for a lot more than that. The problem was the United commentary on fares, right? So their revenue per available seat is down year over year, about, I think, a little over 4%. That's a concern because these planes are full, right? And so they
Head
can't
shoulders.
get a lot more full. So they have to make more money per seat, and that implies some fare weakness, and that's why you saw United drop despite the really good results. So I think in that context, Delta had the better report, although the United commentary put kind of a bit of a shadow across the larger airlines.
Yes, certainly. And David, coming back to you, what do you think the biggest risk investors aren't giving enough weight to right now in the airline stocks is?
If I was a CEO at an airline right now, I guess what I want to have on my screen is some kind of barometer that tells me what the health of the consumer is. The shutdown duration, nothing they can control. So far, it hasn't had much impact, but with each passing day, that's going to get worse. Air traffic controllers will probably have some walkouts pretty soon here. It'll be interesting to see if President Trump does what Reagan did back in the 80s when he put military controllers in. Fuel prices, you're always watching that, but I would be watching the OEM delivery cadence because right now they have discipline on capacity, but that's being forced on them because of the OEMs not really being up to speed on the amount of planes they can deliver, and they need that if they're going to expand and grow.
And Tom, coming to you, with the airlines we haven't heard from yet, what are your expectations from those who are going to report still? Who do you think our winners will be and who will be our losers?
So I think that United and Delta have been the winners all along, and I think that they will continue to be the winners. I think that your point-to-point names, your Southwests, your JetBlues, I think they continue to struggle. I mean, if you're seeing the larger airlines that have all of the pricing capacity of first class and then like kind of first class light and then all the other ones, if they're struggling with fares, I worry about what some of these other point-to-point airlines that do not have as good margins are also going to experience. So I think in this group, United and Delta have been best of breed. I think they continue to be.
Well, thank you both for being with us today to talk about the airlines. Of course, we've only gotten United and Delta so far. We'll have Alaskan Air, American Airlines, Southwest, all upcoming. But Tom,
what kind of insurance do I have at the Cox Hospital?
Thanks again. And I want to thank all of you for joining us today on Trading 360 as
Full
well.
coverage.
I'm Marley Caden. You can download our free Schwab Network app available in the Apple App Store and tune in 24/7 on schwabnetwork.com. I'll be back with Market on Close for you alongside Sam Bottis at 3 Eastern, 2 Central. But stay with us because Fast Market with Diane King Hall is coming up next.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you
Yeah, it's
broaden
very
your knowledge
expensive.
of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate schwab.com, Thinkorswim, and web-based
Well,
platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. schwabnetwork.com.
gonna hit the head and break the head and shoulders. Yeah.
I'm Sam Bottis, live from the New York Stock Exchange. When the market moves,
I gotta go wash my shower out when he gets
getting
done.
The reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
I got a new friend. Come on, baby. 200 EMA, it's done. You can do it.
Welcome to Fast Market here on Schwab Network. I'm Diane King Hall. Happy Friday, everyone. Coming up on noon Eastern.
Come on,
New York
SPX.
Stock Exchange. Stocks have been trading mixed so far today. Let's get right to it with a check on the major indexes as we hit the lunch hour. You've got a lot of plus arrows. The S&P 500 now on the plus side by nearly 0.2%. Leading the gains in the S&P 500, that would be consumer staples, but it's followed by energy and financials. We'll especially get into financials in a short while because different place today than where we were yesterday, especially with the pressure from the regionals. Yesterday feels like that's in the rearview mirror, at least for a day. The Dow right now better by just shy of 0.5%. NASDAQ 100 has a gain of 0.2%. Small cap still under some pressure, down 0.75%. Here is the roadmap for today's show. We will look at example option strategies for Alphabet, Google after a price target hike from Guggenheim. Plus, the team from Lightfolio will be along with sentiment data on Dollar Tree. And Oracle is on the target list of several analysts after Oracle's Analyst Day. Now that we've got the roadmap for today's trading action, time to bring in my co-hosts and trading veterans. We've got Tom White in our Chicago studio and Kevin Hinks joining us live from the CBOT. You know, we've got you covered from exchange to exchange and beyond. Okay, guys, there's some cooling of that rhetoric around trade and what we're fighting about between the U.S. and China. President Trump and Tom, I know you flagged this earlier, saying that in that interview with Fox Business that high tariffs are not sustainable. Tom, what's your take first?
Yeah, just a really choppy session going into October monthly expiration. Volatility across the board. We were down over 1% to start the day. And, you know, and it's all based on a lot of headlines. I think
Bingo.
There's no real depth or liquidity to markets right now. Everybody's kind of scratching their heads trying to figure this out. Government shutdown into its third week. That's not helping, right? I think the prediction markets are stating that it's going to be 40 days before we get some
$1,800.
A lot of the consternation that started out today was based
So let's
on
talk about this trade.
saw a couple
Are we ready?
$1 million loss from Zions Bancorp. Well, that stock's up 4%. Getting
Someone say yes.
Out of Baird today. So maybe a lot of those concerns on the regional bank front kind of going the way.
It's all about the triple top and the triple bottom.
Some of the other releases, whether it's Comerica, Regions Financial, and some of the others in the regional bank space, they're pretty positive as far as earnings goes, kind of following up with what we saw from the major money center banks and the investment banks. So that's kind of allaying some of the fears that are out there in the overall market. But I'd just be cautious because every time you turn around, it seems like S&P 500 futures are moving 10 or 20 points either way as people try to figure out this rhetoric. But Besant's meeting with his counterpart from China today. Maybe we'll get some positive news from that side of it as the tit for tat in the trade war continues between China and the U.S. But yeah, just a lot of volatility. The VIX is still near the 23 level, and with markets just below all-time highs, Diane, that's a pretty remarkable setup when you're seeing volatility this high and equities at or near all-time highs.
So this is Washboardjim, the master of the sneaky snake trading strategy, where he talks about chart patterns, moving averages, and being in the now. So we have what you call one of the best setups you could possibly get into when they happen. You have a triple bottom off the orb,
Scott Bessent,
3 white soldiers, breaks out to my called resistance at 65.50, which was a triple top. So you got a triple bottom to a triple tops. Do you understand? We had a head and shoulders right here, and we hesitated for about a minute, couple of minutes. This is on the 5-minute time frame. So I traded the bodies. Now, if you'd have took the wicks, you'd still be waiting to exit $5 more.
on China with
Do you understand?
About a meeting with Xi, about the phone call with Besson today. So I think there's a fair amount of good news out there to alleviate. I think the bank issue is
Someone say yes.
You saw some analysts step in, but boy, this market is whippy and thin.
2 yeses.
Trying to figure out if it's concerned or it's looking forward to earnings. Very
Randy says stay long.
Guys, have you seen the details of the American Express earnings?
But you always got to be the one in the class
Don't worry about the
that disagrees with the teacher all the time.
Spectacular. Card spending up 8.5%. Retail spending up 12%.
I got one in here that can't stand my singing.
Out of American Express. So, we're trying
I thought I've already weeded all them out.
data on the U.S. consumer. There it is. So overall, I think some of the market yesterday are starting to dissipate a bit. You're now seeing the S&P almost up
Very good.
0.3 going into midday. So things are, the overall temperature.
And we could go to the 200 too. We could break your number.
Is now 23.5, still in that area of about a 1.5% move every third days, but much less than it was this morning when things were looking a bit ugly.
Well, I wish I had some creamer.
Yeah, and listen, Cap, that, a great point about
I'm thinking about, well, I got to wait for the sheetrock guy.
Has that really expensive annual fee, which personally
He'll
I
be
can't
painting my
stomach.
ceiling next.
Tom, let's talk a little bit about Micron.
In fact, I need to take that.
Under some pressure today, and this comes after the Reuters report saying it will stop supplying chips to data centers in China. But that comes really following that ban that happened. Tom, what's your take on this one?
He's a painter too.
Yeah, I think if you take a look at their last earnings report, where they grew revenue 44% from year-ago levels.
He's a painter and a
margins
sheetrocker.
are increasing. The legacy sides of their business, whether it's DRAM or NAND, the pricing's actually increasing. Now, this is a highly cyclical segment within the chip
So I'm gonna
space, but
take this.
the big driver has been
Oh,
the
I
high
could put it in my
bandwidth
file
memory
book.
chips, right? That's
Yeah.
where they're going to start making most of their profitability. But when the
way
legacy
I won't
sides of your
lose it.
business are still doing well, China only represented, I think, roughly about 10% of their business.
I've got a
I don't
collection
think
of,
it's too much. I think the pullback from yesterday's all-time
business
high
cards.
was 136%
I'm going to take a picture of my very first one if I still got it in
A little
here.
bit of a pullback and a little bit of consolidation.
I got one I've
in this
always
name because
cleaned
It's been a parabolic move over the last
that
month
I
and a
did.
half or so to these levels. But everything seems to be setting up well. And as long as those investments into AI and tech continue at the pace
My
that
old
they
address
are,
on it.
maybe the outlook's good for here. One item of caution on a name like Micron, or you could throw Seagate in there, Western Digital in there in the memory chip spaces. They are highly cyclical. So when it turns quickly, and outlooks get cut really rapidly.
Say, guy, you want to help me put up some sheetrock?
Right now, everything seems to be setting up well for this company, even with maybe pulling back on some of their sales to those China
Drywall, flooring, paint,
That's
and
a
more.
good point, Tom. I mean, Kev, to Tom's point, I mean, the stock was already up more than 100% so far this year, and it's been strong year over year. What's your take on this for Micron?
Yeah, and Micron, if you watch the stock, it really trades to extremes. But you know what? I don't know. I read the same note that you guys all read this
Pictures
morning.
plus.
And the first
I
thing
don't think I have one in here. Picture frames
they
plus.
weren't gonna, sell any more chips to China or these companies. The first thing I thought of was they probably got so much business they don't
Jason
need
E.
to,
Bruce,
right?
Cooper's
They
hair
probably got
clippers. I'll
other
never have
people
him
that
cut
can
my
fill
hair
that
again.
demand that they're not missing.
I hope you're not listening.
If that's the case, align, and also you throw in the price target from 195 to 240.
Bonded and insured.
Maybe there might be enough business where they don't need the China business to get that done. That's the first, thing that hit me about this article. Maybe they don't need to, right? So yeah, Micron's one of those stocks that goes on runs. Both
Double
the
top
upside
on the
like
spy.
it is now,
That is
and
correct.
like I mentioned, on the downside as well, they can really punish this thing when supplies and inventories get high. So yeah, this is a good, this is pretty good news for Micron when it says we basically, almost dismissing the China business. Interesting.
Okay, I want to circle back to the banks because you mentioned that earlier, Kev. The regional banks, they are under the microscope today, but it's like the reverse of yesterday, or like it's like a sigh of relief happening now after that pressure we saw yesterday, you know, to catch some people up. That was after those disclosures of alleged loan fraud. One of those we know that was the hardest hit, Zion Bancorp. It's receiving an upgrade today. Shares are moving higher, not enough to bring everything back that it lost yesterday. But Tom, what's your take on this one?
Yeah, well, you lose $1 billion in market cap in one day when the stock was down 13%. You start digging into the numbers, and I think that's what this Baird analyst did.
Be a circle,
a $50 million
being
broken,
broken.
a bad loan.
By and by, low, by
it's an
and
impact.
by.
And then you start listening to the rhetoric from Jamie Dimon on JP Morgan Chase, who's saying, hey, if there's one cockroach, there's probably a lot. Yeah, he's a risk manager. He always says dour things like that. So you can't take that at full context. But at the same time, you know, there are concerns. We've been talking about that on the commercial side, the loan parts of their business. A lot of these regional banks deal with that in the cities that they're in. So maybe there's something to it, but as we all know, when things like this pop up, Diane, and most of the other regional banks have reported really good, solid results, whether it's Regions, whether it's Huntington Bancorp and some of the others, Comerica, they're still reporting good earnings at this point. But at the same time, you've always got to have it because when the market grabs a hold of a story like this and then it starts to snowball in effect like we saw a couple of years ago with the regional banks, that can cause a problem. Now, that doesn't mean it's affecting the whole sector as a whole, but you've still got to take it into consideration. There's probably going to be some near-term volatility in these names over the next couple of weeks.
Kev, Tom brought up a great point. This is what I thought about when I, was looking across this. Is it, this reminded me of 2023. Different reasons, obviously, but there's that skittishness about potential case contagion. Kev, what's your take?
The general take here from the market, and I think why the stock is rallying, is a $50 million bad loan shouldn't cost you $1 billion in market cap. And so everything I read this morning says this is way overblown for the price tag on what they lost. So, and the rest of the banks aren't showing any contagion. This is not, Jamie Dimon, I have a ton of respect for Jamie Dimon. I think he's one of the greatest bankers in the United States and in the history. But, boy, he can play the Grim Reaper like nobody. He can play the ugly risk manager like nobody's business. And so he made some comments that may have fueled this a little further. So, I think there's bad news that happens on small banks all the time. There's bad loans. Small banks go out of business. You can look at the numbers. Every year there's a couple, anywhere from 2 to more that go out of business. So I don't see this, but you have to trade the market that you're in. I don't see this as terribly bad news. And the stock of Zion Bancorp certainly overreacted to this, but you don't know, right? What happens in stocks, commodities, they go to the worst case scenario and then work their way back. I think that's what you're seeing now.
Okay, it's not working its way back. Weight loss drug makers, they're losing some weight today. Hear me out. Just after President Trump took a jab at them yesterday saying prices will come down. Consumers like this. Tom, you like that one. Consumers like this. Investors don't. What's your take, Tom?
Well, it's not surprising, he spit something like that out during a press conference. The fat loss drugs stocks, they're going to come down. They're going to come down quickly. Mehmet Oz, the doctor, that's in charge of Medicare, Medicaid, immediately came and said, hey, we haven't done anything as far as negotiations goes. But if the administration puts you in the crosshairs, there's probably going to be some disruption as far as pricing goes. And maybe there should be, Diane and Kev, because you think about it, we've been subsidizing the pharmaceutical industry for the entire globe for the last 50 years. And maybe that needs to end at this point. The margins on these products are pretty elevated at this point. So, list price of $1,000, they sell it for $500. That's going to cause some problems. That's why you're seeing the stocks both down 3%. Eli Lilly, about $150 off of their all-time highs that we saw last year. So maybe some disruption needed here in this space, and that has investors concerned a little bit.
Yeah, and Hims and Hers is down as well. That's a sharper drop, down double digits, but that also can be pretty volatile because it was already up more than 100% year to date, but also down off the back of this. Kev, what's your take on this with the weight loss drug makers?
You know, it's funny, I noticed the same thing Tom did. President Trump makes a broad statement, and Dr. Oz comes out and says, hold on, we haven't really negotiated anything yet. So he was kind of patting down some of the enthusiasm about these lower drugs. But that's kind of what, you know, presidents do. They talk aspirationally about things like that. And then his staff and his you know, people have to work out all the details. But I think that's a general good thing for the U.S. consumer because these are very popular drugs, as you know, to get the overall prices down. And it sounds like they're going to try to get this covered as well under insurance. So that's another good thing as well. So it's overall good. It's not good news for these companies because their margins are going to come down significantly, but it's pretty good news for the American consumer.
All right, let's put a pin in that conversation. We got bull versus bear coming up. The guys will get their example trades put together for Alphabet Google. It is getting some love today from the analyst community. We will have more Fast Market after this break.
Alrighty. Do my Johnny.
Whether you're an experienced investor or just getting started, Charles Schwab offers a
It's
website
been a while.
that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Double top.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Fast Market here on Schwab Network. Alphabet Google is getting a vote of confidence today from the analyst community. Guggenheim boosting its price target to 280. That's up from 210, while keeping a buy rating on the stock. The view from Guggenheim is that the digital ad market looks solid, and they expect heavyweights like Alphabet Google to capture more ad dollars. The stock is up about 6% this week, and it hit an all-time high on Thursday. All right, let's put on.
She probably turned into a lesbian.
Our co-host Tom White and Kevin Hinks. It is bull versus bear time. Before we get to the example trades, we have to talk about Alphabet Google and kind of where it stands. It's just in a very different place than where it was earlier this year, especially when you think about the antitrust ruling that's way in the rearview mirror now. Kev, what's your take now?
I think two things. Number one, and extremely important, is the antitrust in the rearview mirror, right? We always knew that would happen, but we weren't sure. We thought it would probably happen, but you're never sure of these things. And the other thing, some of the notes I read, it looks like digital advertising is really starting to concentrate with the big players. Now that's good for Google Alphabet with with YouTube. That's also really good for Meta platforms as well. So both of those it favors going into earnings. So it looks like a lot of the things that were holding Google Alphabet back seem to be going away, like antitrust. Now, if they can just get back to the core businesses that they are in, all of them, right? If you think about it, they are in all the major businesses out there that we talk about on a daily basis. You know, this stock has been cheap for a long time. Now it's rallied, but is it still cheap is the real question. That's what everyone has to figure out. But a lot of the bad news, a lot of the things that were holding this stock up seem to be in the rearview mirror, Diane.
Good point. Tom, what's your take?
Yeah, as Kevin and I have always mentioned on this name, the death of internet search is not gone by any stretch of the imagination. And that was a big problem for Alphabet in 2024 when it was lagging its Mag 7 compatriots in this space, especially in the tech space, where those valuations for PEs were down to like 16. It was cheap considered, compared to the other Mag 7 names. Now it's not cheap. Now it's getting more in line with some of the other names within this space, whether it's Microsoft or Meta platforms. If you look at their cloud growth, this is key. They're over 31% growth rate last quarter from year before levels. That's better than Amazon, which was at 17.5. It's better than Microsoft's Azure, which was at 29%. So they're gaining market share in that important cloud business and search. Think about this, Diane and Kevin. When you used to, Google search, you'd have to scroll through 10 pages. Now it's popping up with their Gemini model.
You working on another job
right
too?
There, the first thing you see after you do a Google search. So they've got AI built in. So are they going to lose market share in search? Probably not, because they've got their Gemini model right there. The first thing
There
you
you
see
go.
after you do a search on Google. So
It's about that time. I had mine already.
Alleviating some of the fears.
I've been up since 1 though.
2024, but I mean,
Like I said, I have a cleaning business, so I get up early and do that.
Yeah, it's had a good run.
Okay, and I love that point you made. So I do like that it's built in now, because you don't have
the
to do as
IRS
much
building.
digging to find, especially
You know
any
SRC?
chunk of what you're looking for is just right there in the
Union.
AI feature that
The-
it comes
the
with now.
office.
All right, Cav, let's get right to it. Let's get to your trade example for Alphabet.
By Chestnut.
Google.
So for Google Alphabet,
21 years with
educate
them.
our viewers a little bit.
21 years.
They have an earnings event
Very
coming
nice.
up in the 29th of
Very
October.
nice.
So
My uncle worked
what
with
we're going
them
to do
for
here with
about,
this call calendar, focusing on
it
the
was about
260
15
strike,
years.
is to go
Yeah.
after the
he was
earnings
working
event.
over there
So
at
go out to the
Levi
November
with,
7th expiration. Buy the 260 call
Yeah.
there.
Yeah,
Sell
he was working
the
over
week
there before
previous
that.
to the earnings event, which is the October 24th.
Seems to enjoy it.
And
Yeah.
that will set us up for
I'll
a
be back.
potential rally.
All right,
Will
enjoy
also
lunch.
Allow us to extend duration into the elevated implied volatility of that.
Like give the
earnings
man a
event
tip.
week. So this is a little bit more of an advanced strategy, because you're going
Pay for his
past
lunch.
the event, then before it, and then right into it when you extend duration. So November 7th, after the earnings event, buying the 260 call, selling the October 24th 260 call, with the intent to extend duration into the earnings event. So paying about $635, that seems pricey for this calendar spread, and it is if you just look at it on its surface. But if you think about extending into the earnings event, it's going to chop a big chunk of that net debit out. So this is really a couple week spread that sets you up. For the
5 minute had a fallen wedge.
Yeah, Kevin, that's kind of the point that when you look at the risk profile on a trade like this, you're like, oh, I'm risking, $635 on this 2-week wide call calendar to the upside, but you've got
With
to
a
throw
double
that
top.
caveat about the earnings cycle that is.
We
in
probably
there,
come down here now.
within there, but let's break this one down.
It's only
November
11:25.
17th,
Jeez.
options buy the 260 call, sell that same 260 call in the nearer term, October 24th weekly options. That
Oh,
expire
she's eating her fish
7
already.
days, paying roughly about a $6.35 debit, probably trading about a dime or 20 cents above that right now because the stock has moved higher. But the idea here is, you can see from the risk profile, you want the stock to continue to move higher, about $7 at or near that 260 strike. You've got a range right now, probably about 253 on the downside, 268 on the upside, to potentially remain profitable. But as Kevin mentioned, when you're doing a calendar like this, you're buying something 21 days out, selling something 7 days out.
got red
as you get closer
snapper.
to expiration over the next 7 days, say the stock moves higher or even stays
Don't need
here,
the bones.
you're going to have that ability or potential to roll that short option on the 260 strike that you sold in the October 24th options to the next cycle, to the October 31st weekly cycle, which is earnings, which means higher implied volatility. So you're going to get a big chunk credit out of that if the stock's at or near the 260 line, and that's going to get rid of most of the risk.
This
on the
chick's kinda
position,
crazy.
if not all of it. So you've got to take that into consideration. That's why the risk profile doesn't look that great on this one initially, but once you do that first initial roll or adjustment, that'll expand it. And at the same time, the stock moves up towards 260, that'll expand the price of this calendar also. So there's the bullish side of our bull-bear debate here with Kevin's 2-week wide call calendar. I went a little bit different. It's not necessarily bearish, but we always talk about direction being bullish, bearish. Well, neutral's is direction too, and that's kind of what I set up in my example trade here. Is after this parabolic move to the upside, I looked at selling something, but it avoids earnings. It expires on October 24th. This is a 7-day example trade that I've got here, where we're going to buy or sell an iron butterfly or iron condor on the platform there, but we're going to call it an iron butterfly because we're selling the same call and put on the same strike. So October 24th, we're going to buy the out of the money 235 strike put, and then we're going to sell the 250 call and the 250 put, and then we're going to buy the out of the money 265 strike call. So a $15
This is Trend Spider platform.
Neutral, short iron condor or iron butterfly we call it, because it's got that same common strike. You can see here, you want the stock to remain near 250, right? You're going to collect about an $8.20 credit. It might be about $8.30 because the stock has moved higher. I looked at this when the stock was trading right at 250. But that credit that you collect is the max potential gain that you can have in this trade, $820 per spread. Now, what are your risks? Well, your risks are if you go up towards
It's a falling wedge on the 5-minute,
break evens on that. You're risking about $680 either way. That's above 265 or below 235. So there's your risk on this trade. You need some consolidation on this one. Your break evens, Kevin, on this one, about 241.80 to the downside, 258.20 to the upside on this
It's a
neutral strategy
5-minute
that
on
takes
a
advantage of
falling
positive
wedge. 5-minute on a falling
Yeah, by
wedge.
definition, this is a bearish trade.
It's a
Tom,
5-minute
because
with a
the
double
strikes are below
top.
where the stock is trading
It's a
right now.
5-minute
It's actually
with a
very
double
range bound,
top.
but it does
yeah.
have a slight short delta on this trade.
yeah.
So you're looking for more. Yes. Would you like ideally for it to go to 250? The answer is yes, you would. However,
The guy says he
right
doesn't
here
like my
is fine
singing.
too. If it just sits in this area,
Kinda breaks my
you're
heart.
actually fine as well, Tom. So yeah, 250 with
Takes a
side
lot of
trading,
practice to get that good.
252, you're
If you know
targeting
what I'm saying.
250. It's slightly lower, so you've got a short delta, but range bound would be just fine, Tom.
Yep, and you put that short strike where you think it's going to go over the next week. So
Sure
if you
does.
think it's going to go up towards 255,
It's a
you could use
falling
the
wedge
255,
with a double
as the body
top.
of the short iron
It's a
butterfly.
falling
And I
wedge
think one
with a
key thing,
double
Kevin, that we have to talk
top.
about is the fact that on a trade like this where you're short the 250 call and put, you've got assignment risk going into earnings. So remember that, where you're going to want to probably close this ahead of
Oh,
expiration
that's a triple top.
over the next 7 days. But the idea is
Whoa.
it consolidates around 250 and positive theta or time decay works
It could
in
be
your
a triple
favor.
top.
And if volatility comes in, that'll
But I'm
also
not gonna
help,
call it a triple
where
top.
This short iron butterfly contracts in
I think I will
value
go
when
into
you
the
buy it
kitchen and
back
make a
cheaper,
cup of
Diane.
coffee.
That's the whole point of this. You buy
Or
it back
espresso
less
coffee.
than what you collected the 820 credit. But there's your bull bear debate or bull neutral bear debate.
You know, that's not a bad idea.
Bear, yes, potentially slightly sleepy bear there with that strategy, and
It's
also
a
one
double
avoiding
wedge
earnings
with
and
a
one kind
double
of taking advantage of
top.
the window around that All right, guys, good stuff. Coming up,
It's
cash
triple
tags.
spot
Team from
with
Lyfolio will be
double
along
top.
with new data on Dollar Tree. Keep it right here on Schwab Network. Fast Market. We'll be back after this break.
SPX with a fallen wedge.
Hi, I'm Alex.
I'm Jane. And I'm his mom.
Uh-oh.
You could have
Magnificent wants an A+.
Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it.
I know you
Getting
ain't
the
gonna like it.
reaction, the strategy and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
He'll have something to say, watch.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading
Stingy
questions,
with the
no
grading.
matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat.
Woo!
Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started,
Woo!
Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere.
May a
at schwabnetwork.com.
circle be
Welcome back to Schwab Network. I'm
unbroken.
Diane King Hall alongside Kevin Hinks from the SIBO. Time now for our cash tag segment. For that, we want to bring in our next guest. That is Megan Brantley, Vice President of Research at
Does anybody live
Lyfolio.
near
Taking a look
Letitia
at
James?
Dollar Tree today. Dollar Tree's had a great year in terms of the share price, Megan. But let's get into the data that you have because you all obviously look out over
You think
the
she does a good
consumer,
job?
And I think it's even more important now given the data blackout that we're in. What does your data show you about how Dollar Tree stacks up against peers or rivals?
So when we look at Dollar Tree versus other value perceived peers like a Dollar General, even like a Five Below, we really see some underperformance, not only in consumer sentiment, also in just forward-looking demand. We like to measure that in web visits, so just consumers who are curious, seeing what these stores have, seeing what prices might be. And we're seeing a bit of a split signal here, and we're seeing kind of a clear line in the sand. And this differentiates from what you just talked about whenever you consider the stock price. I think stock is up about 27% year to date. It's up off of lows from earlier this month after a positive reception to its investor day. And so we're starting to see some divergence here. So for us, we're seeing signs that consumers are trading down, or a pocket of consumers are
Seen the
trading down.
snake.
Certainly
Good
some of those
job.
consumers are going to Dollar Tree, but we're just seeing signs that more of those consumers, when they're trading down, they're more likely to go to Dollar Tree
Great work.
competitors. They're more likely to go to Dollar General. They're more likely to go to Five
When you
Below.
recognize
They're
the
more likely
snake,
to go to
you're ready
Walmart
for a
or,
shake and bake.
even potentially Amazon as Amazon's delivery range expands. And so we're seeing a little bit of divergence forming just in
So
what
remember,
consumers
snake,
are saying and what
break
they're
out,
talking about,
pull
and,
back, creates a
how
pattern,
the investor
and then
outlook
boom.
looks for Dollar Tree. So for us, this will certainly be interesting to watch heading into
This is a
earnings
fallen
and
wedge.
longer term into the holiday season, because we're starting to see signs of a little bit of
With an
consistency,
inverse hammer.
consistent underperformance, contrasting with that a little bit more of an investor, bullish outlook.
Megan, I'm reading the exact
I'm going to walk into the
that
kitchen
your data is saying, which
and
is
make an espresso
they've been doing better lately.
out of the espresso
but the
coffee
numbers,
beans,
like
and I
sales
have had.
growth and margins are all
How many have
starting
I
to
had?
deteriorate and slow down. And
6 or 7.
we talk a lot about Lyfolio when your
I'm gonna
data
say 6. I've
diverges
had 6
with the
cups.
price of the stock. but your data's
I
pretty much
measure
in
and see how many
line
cups I
with
get
what's
out of this.
happening. Sure, there's been a
For the first time in my life, I paid, I got the least amount of coffee because they were out. And it was about,
two different analysts saying things aren't
I'm going to
getting
say a
better, they're
quarter of a
actually
pound
starting to deteriorate. Is that what you guys
of
are seeing?
beans
Because
for
your data here,
$3.38.
in both charts you have, not great, Megan.
And it's
Yeah,
14
this
bucks
is
a
one of those
pound.
names where, you know, if you're asking us to bet on a name that's going to capture, you know, potentially
13
steal market
something.
share, to potentially
Almost 14.
overperform, to be a name that we like long term, we look at that consumer demand. That web data really helps us predict that forward-looking
Could have been a
demand.
quarter.
We see that heading down and
Might have been a
you know,
quarter.
to the right. You see that on the chart right
Quarter
there.
of a pound.
And then also whenever you compare it versus peers, you know, you don't like to see
Oh,
a split
no,
like
not
the
a
one we're
pound.
recording, where we have
Or is it a
you know, a
pound?
bucket of peers who are you know performing better, and then you
It has to
have
be a pound.
Dollar Tree, which is losing momentum. So this just tells us that while management is touting changes it's making, you know, it's talking about
I'll be working on
improving
cup
its
number
inventory,
7.
trying to get better items or better performing items.
And this
on
one
the
I'm going
shelf,
to put a
you know,
little bit of
improving
water
its
in, not as much.
multi-price assortment.
We'll
So,
make it
you know,
stout.
more items beyond
Enough to
that
give me a
$1
headache.
bucket, which certainly could help. We just haven't seen that gain traction with consumers yet, and for us,
So
perhaps
this is
the
Trend
long-term
Spider.
indicator of
You can
forward-looking
create
demand
different
is
watch
consumer
lists.
sentiment, and we really haven't seen that move.
It has
forward.
watch lists
When we
already
hear,
created for you, like
consumers
this one
talking
here is the
about Dollar
2%
Tree, you know, for a couple
or
of years, it
more
kind of had a
above.
viral novelty element going for it, where
Got
consumers like
Humana
to
in
go
here.
and, you know, get things before holidays, you know, fun little knickknacks or decorations, but you know, we're not seeing that that
It's
spark
balanced.
like
This
we
is
were
5
before.
minute.
Here we're seeing consumers who are talking about stores that
You
maybe
got GILD. I
advertise,
used to
perhaps
trade this
unclean.
one.
You know, they're
D-Dog.
talking about, you know, the sizing of some of the items in Dollar Tree has been lackluster.
Go back
You know, they
15 minutes
you know,
on
they
this
may be
baby.
selling something for $1, but you get like 2 items. So
D-Dog's had
in
a
this
pretty good-
package,
here's a
smaller
snake.
package or volume, I should say. And so
With a
I think that there are
big old
certainly
knife.
some room for improvement for Dollar
We've
Tree.
got a
like you mentioned,
hammer.
Kevin. We just aren't seeing that improvement in the
Inverted
consumer
hammer.
end quite yet.
Megan, let me ask you this though. I have heard with this year that
GM,
we're
which
seeing
I
a
don't
trade
trade.
down with consumers in general,
refuse to
and
trade
that
it.
was benefiting or has been benefiting the Dollar Trees and the Dollar Generals of the world. Are we reaching a point where it's more just Dollar General? And look, Five
Shop was another one that I called out this week.
It's curious to me that is the standout there. Is there a trade down that's still happening with consumers that does benefit a Dollar Tree or Dollar General?
Yeah, certainly. And Dollar General, I think,
Walmart.
has been one on our radar. If you want to talk about improvement and material improvements in the consumer sentiment, that's been Dollar General. It's improved, you know, not only its, you know, perceived novelty options, but also it's essential. So it's grocery, it's fresh produce. You know, consumers are saying, I can actually go to Dollar
Joby.
General now and get the
Ooh,
things I
Joby.
need and feel like they're getting something of high quality. We've seen
Joby.
improvement in the way that they talked about stores and just the shopping experience at large. So I think that there are certainly winners in this bucket because the consumer continue to be bifurcated in our data. We look at these high earners and we see them continuing to spend, continuing to grow their spend. And this is present
That's
whenever
what I
you
thought
look
I
at a
saw,
report like a
falling
Delta,
wedge.
like United. You know, they talked about their premium travelers continuing to spend and being resilient. But then when we look at these lower income consumers, you know, we start to see that spend pull back a little bit. And, you know, there certainly
I do mine a little
benefit
bit
name
different
like a
than
Dollar
this.
Tree, who, while it certainly has captured some of those higher earning spenders that are trading down, its core base of consumers who are reliant on it for those values just don't have as much buying power as they have had in the past.
All right, Megan, we will leave our conversation there. That is Megan Brantley, Vice President of Research at Likefolio. Thanks a ton for bringing in latest perspective there, especially to get more consumer information. Now, for the trading perspective on all things Dollar Tree, I want to bring back in Tom to our conversation. And Kev, I know you've got the example trade on this. A lot of insights there. Kev, or Tom, I want to get your take first before we get to Kev's example trade.
Yeah, if you take a look at that
Joby's a toughie.
they gave at
I
Investor
like
Day,
it.
12
I like
to
the company.
15%,
And I like the
compound
future
annual
of
growth
it.
rate they're expecting.
I need to get this to Vegas because it's back here at my 15 bucks. That's what I have for
so far
support.
just this week. So they gave a good outlook here, but you know, if you take a look at Likefolio's data, maybe not the most positive thing. And what type of impact are tariffs going to have into
Regetta
historically
Computing,
strong
Joby
fourth quarter? I think
Aviation,
that's what you've kind of got to digest here. They don't report earnings until the
meet
beginning of
the
December.
zero revenue.
We won't get any
Oh,
further clarity on that, but they gave a good
zero revenue.
outlook. But does it hold? I think some of the analysts that came out
Oh,
maybe
God.
had their price targets a little bit, Evercore being one of them.
Once they start making
set lofty
revenue.
goals, and who knows if they're going to meet them. But Kevin, if you look at this one, 9% gains this week, but it's been lagging. It's still
If this was a
down,
moneymaker, I'd
up
be
about
buying this right
27%
now.
this year. But remember, this stock got down to 60
I wanted to go
bucks
long
at the end
in
of
it,
2024 when they were struggling.
I'd almost
How do you want
wait
to look
for
at this one from
15.
an example trade?
Yeah, like Folia's data was pretty powerful, and some of the analysts I read that talked about, yes, they've had some good news up until now, but those good news is starting to deteriorate. So when I looked at Tom, they don't have earnings till December 3rd, so we don't have to worry about earnings anytime soon. So I went to the November 7th expiration, bought the 90 put, and then sold next week's October 24th 90 put, just almost the exact opposite of what I did in Google Alphabet, Tom, except this is on the downside here. Just a 2-week 90 put calendar trading. I put it in for it's like $1, trading about 98 cents, so it's right at $1 right now. So a relatively inexpensive way to play in terms of a net debit, and you do get to extend duration on this trade and chip away at the net debit even more. So a downside play, giving us about 10 short deltas in Dollar Tree.
Yep, let's break this one down. Kind of same setup that Kevin had with his Google Alphabet call calendar, but this is on the put side with some downside exposure.
Vegas gets the Spank
that's
Award.
Relatively inexpensive here, but let's break it down. November 7th weekly options that expire in 21 days. Buy the 90 strike put out of the money to the downside by about $5, and then sell that same 90 put in the October 24th weekly options that expire in 7 days. You're going to pay roughly a dollar debit. There's your risk, $100 per spread for that downside exposure. Now, you want it to go at or near 90 for maximum profitability on this, but you've got a range probably between about 95.5 on the upside, 85.5 on the downside. So you don't need that big of a move to the downside for this thing to start to expand in price. And I think one of the key things I saw on this, Kevin, was the fact that, the stock rallied 9% this week after that investor day. Implied volatility levels relatively muted in Dollar Tree compared to the overall market and a lot of other names that have expanded. The IV percentile rank only about 18%. So buying calendars in a low volatility environment lowers the entry point price and your risk on these type of trades, Kev.
How
Right.
dare
Remember,
you,
when you buy a
Miss
calendar
Vegas?
spread, you're buying Vega. So your hope or your assumption would be volatility either to go higher or at least bare minimum hold these levels. And at this level, IV percentile around 18, at least you're buying low in terms of rather than buying high implied vol, Tom.
And that's the idea. And Kevin, as Kevin mentioned, you got some assignment risk on that short option, but you do have that opportunity to potentially roll that short option over the next 7 days, creating credits, expanding potential profitability. Also, Diane. So Kevin,
La, la,
flip
la,
the script
la, la,
on
la,
us.
la,
He had a
la.
bullish example on Google, but a little bit more bearish that sets up with like Folio's outlook here for Dollar Tree.
He's keeping us on our toes. All right, good stuff, guys. Coming up, we've got the breakdown. Oracle, it's under heavy pressure today after its analyst day. We'll take a look at that one on the other side of this break.
Anybody got a chart they want me to chart up real fast? For I am Washboardjim, the founder of the Sneaky Snake trading strategy.
connected to the markets in the Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com.
And on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Fast Market here on Schwab Network. I'm Diane King Hall on floor of the New York Stock Exchange. Before we get to the breakdown, let me give you a check on where markets stand as we get closer to the bottom of the hour. Similar to the top, we are seeing mixed markets, but largely on the plus side. The S&P 500 better by just
Does anybody have a chart they want me to show up?
top of the hour. Down
President Trump's about to speak.
0.25%.
All right.
100 approaching a gain of roughly 1/3%. Small caps, the laggard, down about 1%.
MFA.
Oracle.
MFA is on its way.
After its much hype analyst day in Las Vegas. Now the company touted its
MFA
ambitions. It outlined
is
big
on
growth
its
over the next
way.
5 years, saying it intends to grow.
Shares of the banking and financial sector stocks are trading lower amid overall market weakness as President Trump, on a social media post, said that he is considering to increase in tariffs on the Chinese products.
Into a bit more time now for the breakdown. For that, we want to welcome in George Sillis, senior market
So I don't see
correspondent.
nothing in here in the news.
Getting ahead today, but I mean, the analysts seem
Is this
to
a bank
like it,
stock?
off the back of its analyst day. How do you read through this one?
MFA.
Yeah, okay,
Let's
so
go to the
it's kind
hour
of a difficult
time
one
frame.
with Oracle because, one would say maybe it's having its own NVIDIA moment, and
Mortgage.
it's kind of surreal, to be honest with you, when you talk about these numbers and
Mortgage.
the
Well,
analysts that,
if
of course,
they
the investment community has with Oracle,
decide to
sort
stop
of incredulous when you
quantitative
consider even
easing,
going back to
that's
the
not good
September
for
analysts-
mortgages.
I'm sorry, the September earnings day, where and Kevin
Powell
and
would
Tom
rather
alluded
keep
to
your
this, I
interest
think the
rates at a
market
very
making
high
move,
rate,
which is a 1 sigma move.
so
is
he can go
$20. It was
blank
basically
himself.
a $100 move. It's a 5 sigma move. So those moves are really surreal. And I think what's happening
'Cause I
now
think he's
is
a
we're seeing
weasel.
digestion of these numbers. And today the stock is selling off quite a bit. And the reason being is if you look at the analyst day, the analysts are still very bullish. If you look at Stifel, they
Well,
maintain a buy rating at 350.
I'm liking that.
Barclays, Jefferies,
Got a head and
both
shoulders on the
increasing
daily.
400. One of the things that came
Let's
about
go over
with
to
this
this
analyst
chart.
day is recalibration
MFA.
of next year's EPS.
I thought it was a
Right
feed
now,
mill.
it looks like based on fiscal year 2026,
There used to be a
the analyst
feed mill
consensus
close
prior
to us around
to
here.
the analyst day that Oracle just
Have I
had
charted
was
this
around
before?
$8.02. So they've
'Cause
just
we're
moved
definitely
it down by 2
at
cents to $8, and that
an
also
inverse head and
created
shoulders.
a backdraft, if you will, or a drawdown in the 2027 EPS. So we're
I'd say
actually
it's
seeing
almost meant
the price action
between
sort of
here and
recalibrate on a
890
model basis,
to hold.
considering the estimated 2030 revenue target for Oracle actually increased
Between
to
here and
$166
890.
billion. And if you also consider
Volume
when they announced the
has
earnings,
not been
the
that
big
great.
move, there was a $455 billion RPO, or remaining performance obligation.
Definitely between here and
They actually
890,
increased that to 500,
892.
So what's happening here, Diane, is today.
That's sitting alert
a couple
above
things.
892.
First off, the market is really jittery with some volatility.
And we're in a Darvis
right now.
box.
There's any reason to sell. If there's any reason to sell,
So
they will.
resistance
And
is going to
Oracle
be
gave us some
930 to
reason
break.
because the EPS for
Let me
next
see
year is
for
ratcheted
sure.
down just slightly.
934.
But nonetheless, they extended an increase in
Actually got
their
a head and
revenue for
shoulders right here,
2030
so
as
we're going to
well
make it
as
930.
The RPO. And that's why you're seeing, again, the movement down today, quite aggressive, but nonetheless, the analysts
So
are
if we
still
break
bullish.
930, it'll
So
go
it's kinda
higher.
like saying one
Let's put it
step
that
back,
way.
you know,
And if you wanted to start
perhaps
buying it,
make 2
I'd
steps
get close to
forward. And you
892
have to also
or
consider,
small
I brought up
position
that
here.
earnings day for a reason, because that was such a large move for such a large company.
Does that make sense?
Unfathomable to see that thing just continue from there, and it is pulling back and retracing close to a rising 50-day moving average, which suggests to me
It'd
that might
add
be an
on if it
opportunity
dipped on down
pinpoint or
to
pivot point
892.
for investors to rescale in after that huge move to the upside and digestion of really what's going on, which is pretty incredible, considering once again that Oracle's sales last year,
That's probably
at least
what
in
you
the
were
last
thinking
four
too,
quarters,
wasn't
only 59 billion. Expecting again 166 billion by 2030 with an RPO.
I'd hold on to
nearly
it until it
500
broke
billion.
down
So
below
these are huge numbers.
890.
Again, stock is pulling back because of the adjustment for next year's EPS, which is creating again a big sell-off today, at least 67%.
And could it also be potentially some profit taking as well today, given the run-up it's had?
So magnificent.
Yeah,
Put
very
another
much so.
poll in
That's
here.
what I'm
And
saying is that that was such a huge move. It's like I said,
should
almost
Jim sing?
incredulous to see that happen.
Or should he not sing?
And the market needs to digest these numbers and the expectations because
Does Jim
they're
have
so
a wonderful
enormous that
voice?
Analysts really either
I think we've done this before and I won.
because they really
We need
can't
Jim
really
happy.
adjust their models based on these huge jump in numbers. So just expect a lot of
Because
volatility.
if he
in
can't
this game.
sing, he can't
And just
trade.
be mindful that the 50-day moving average is rising, price is retracing close to that. It hasn't filled the gap since the earnings.
Ain't that right,
day,
Jesse?
Which it certainly could, but just be mindful that the move was such an aggressive outside move that it was highly unlikely that it would just continue going parabolic from there. So that's why we're seeing a pullback since.
I think I ought to go in there and take a
the
big shit
September
before he
9th
comes
earnings
back in there and paints.
Oh, great analysis there. That is George Sillis, Senior Markets Correspondent. Thank you, George.
Woo!
Deep dive there. All right, let's get Tom and Kevin back in here to get into this one. So, Tom, you got the example trade for Oracle. Tell us a little bit about your approach here.
Yeah, I mean, George kind of nailed it where that parabolic move after the, $300 billion announcement.
There you go.
AI, the partnerships that they're creating, they're actually become, a threat to the other cloud computing companies also. They're number 4 behind Amazon's AWS, Microsoft's Azure, and Google Alphabet, their cloud offerings. So they're making headway there. They're building out all these data centers. So the way that I looked at it, and George brought up a good point as far as the technicals go, and that's kind of what I used for this. We're starting to see some material weakness after that pop, that parabolic pop in the stock where it hit $345. The 50-day moving average is at 272. So I'm using that as a base for this example trade. If you think maybe the stock's going to go higher,
Good morning, retail traders. Well, I am Washboardjim, the founder of the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being in and out. And I wish everybody a great day and follow me live on YouTube. And I do hit that like button. Also subscribe and ring that bell. You'll get my future updates. Good morning, retail traders. Well, I am Washboardjim, the founder of the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being in and out. And I wish everybody a great day and follow me live on YouTube. And I do hit that like button. Also subscribe and ring that bell. You'll get my future updates. Have a great day. Woo! I think I'm going to go into the kitchen. We had a little pullback here to the orb on the SPX. Guitar Center, where's that? South Glenstone Avenue. We got Ernie Williamson music, Palin music, the Acoustic Shop on Seminole. Let me call him first. Means he's a small business. Yeah, I'm James Howard. I got a ukulele and I'm wanting to see if you do repairs. I need new tuning pegs on it. Okay. All right. Okay, well, I appreciate that. I know right where that is too. That's on the other side of the other side of Battlefield, right? Okay. Alrighty, thank you. Yes, sir. You need to get into repairing guitars. What the hell's wrong with you? This was also that old Head and Shoulders. Yeah, I've got a ukulele that needs new tuning pegs put on it. I busted one of them yesterday, and I was wanting to see if you do repairs. Yeah. Well, I'd like to get an upgrade on them in a way. Yeah. What kind of wage do you charge to work on something like that? Yeah. Okay. Restringing it too. Okay. Thank you very much. Yep. $150 unless I do it myself. And that would cost me probably 20. That would probably cost me 40. But with new strings, might just let them do it. Can't live without my ukulele. Okay, the options are coming down. Good morning, retail. I'm getting my bathroom ceiling painted. Let's go over the watch list before I make my coffee. Or I'll go make my coffee and then come over the watch list. Come over it. What the heck? What are you talking about? You weirdo. You freak. Everybody want to come over my watch list. Woo! Today's Friday, so we'll do the 5-day. Let's see how accurate my support lines were. You know, I've not had one red trade this week. I think that breaks a record in a long time. Time for a steak dinner. Ain't that right, Bug? Jim's Steakhouse. Right when I get out of here. And then I'll go get a manicure and a pedicure. And I'll get a massage. And I'll get a tan. I'll call it a man's day. I have the perfect little Asian place just right up the street to take care of me. We're at the 63 EMA. This could bounce a little bit right here. Usually I have about, there for a while I was having 2 to 3, maybe 4 a week. I've been a lot more patient, I think, this week. A lot more patient. Second guessing my first guess. Like right here, I should have jumped in the 63. Why? Because resistance, 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 resistance on 5 minutes. So that's 40 minutes of not breaking the 63 on the body of the candle. And then we pulled right back to it. And it's up $5. I'm gonna go pee and I'll be right back and get my coffee going, and then I'm gonna do a watch list. Marley.
23 government ban on the products into
Nope.
the critical Chinese infrastructure. It will, however, reportedly keep supplying to Lenovo because it has significant data center exposure outside of Chinese borders. It's also going to keep selling these chips into automobile sector customers over in China. But this is a data center story right now. Why is this a big deal? Because China is the second biggest market for server memory. They are just doubling down and chucking heaps of money at this sector right now. Micron made $3.4 billion in revenue from China in the last business year. That's about 12% of its overall revenue. So it also employs over 300 people. So losing out on the data centers, which is absolutely booming over in China right now with the amount of money that they are chucking at this, has allowed other companies outside of Micron to actually step in and take advantage and very much benefit from this. And we were talking about some of these names yesterday across the memory space. So think of your names like South Korean SK Hynix, Samsung, and then also some of the Chinese players. And remember, this is all part of this broader sort of thematic that they do want the Chinese technology very much to, wean themselves off the reliance on the US. And that brings us back to this, much larger story and the picture here that if you remember, as far as the timeline is concerned, Micron was actually one of the first US tech companies to be sort of punished and targeted in this sort of broader sort of tit for tat. Now, obviously, we're seeing that with NVIDIA, but Micron had sort of been caught in the crosshairs very early on. However, that hasn't stopped, the sort of more bullish views that we've seen on this space. Yesterday we were talking about this name specifically, Jenny, about just the demand for memory and the tightening supplies, which is driving up these prices right now. So you've still got the folks over at Mizuho today raising the firm's price target to $240 from $195 and an outperform rating on the shares, and basically just upping the price target in the storage group, saying that the artificial intelligence demand continues to go strong, accelerate here due to the expansion that we've seen. The NAND spot pricing is up 7% week over week and is expected to rise 11 to 13% quarter over quarter through the first half of 2026. So the suppliers in this space are very much going to benefit from that, and Micron is one of those names.
Yeah, Micron right now leading, one of the leaders, one of the top 5 leaders, at least of the S&P 500 so far this year, with an amazing recovery of, phenomenal proportion. I know we did touch all-time highs yesterday. We pulled back about 4% from those levels, but another name that did actually touch those all-time highs in yesterday's session was AMD, which is also now pulled back about 4% accordingly, but another name up 90% on the year, another 43% just in the first several weeks of October. So this has been hugely driven by their OpenAI.
Jenny!
Now we're continuing to see this analyst reaction where
I love you. You mean everything to me. AMD, huh? That's twice you pumped that today.
last week. It's been a good few weeks for AMD.
It reminds me of Oracle. While we have these price target boosts, sort of more bullish notes out from analysts, don't always mean that it's shielded from sort of short-term pressure here, because as you say, a little bit under water right now, despite the fact that we've actually seen Bank of America analysts now raising the first price target to $300 from $250 now, and keeping a buy rating on the shares. Positive announcements over at the Open Compute Project Conference. So once again, walking away fairly positive and encouraged from that, seeing greater visibility into the deployment of the ramp outlook. This is for the MI450 series now in the second half of 2026, and also noting that this name is now behind all major open standard AI networking systems. They're also been talking about, just the diversification. So certainly in this space that we've seen, the fact that this analyst is praising AMD for taking a leadership role in very much an open vendor neutral AI networking space, making it easier now, obviously, for some of these customers to build AI data centers without being locked into just a single name like NVIDIA, etc.
NVIDIA.
Functionality,
She's saying Nvidia.
And importantly, they also say that within both the personal computers and server central processing unit spaces.
Oh, she looks different today.
Maintain a strong competitive position against names like Intel,
Whoa.
which is also interesting. But yes, I mean, this has had a remarkable run. I mean, you can see it in that chart.
She's had a makeover.
That deal with OpenAI, and analysts have very much been turning more bullish on this name since that
She's
time.
pulling a Ginny on us.
And I will say, encouraging about AMD versus, say, like
She definitely got a makeover. Oh, look at them. They're twins.
Those 53 analysts.
Almost identical.
The average price target does still imply about 3% upside. So I know that it helps a little lower today, but there is still conviction that we can see shares further accelerate even modestly, whereas a lot of these names like Micron, you take the average right now, I mean, it's like, we're basically pricing ourselves out based on current levels. So a lot of these names, either this is like the street not catching up, or there's then perhaps the concern like, have we run off too far too fast? Very difficult questions that I don't think we necessarily know the answers to. But our last name today is a name that has been an entirely different story for the last several weeks, and is unfortunately CoreWeave, our laggard of the group, down 6%.
Rob is here.
And now down in the month, down this week, and it does seem like the street is fairly still neutral overall, but this note out of Morgan Stanley today with a tone of caution.
Yeah, it seems like a bit of sort of sideways action here, largely for CoreWeave, over the course of the last few days and sessions. Morgan Stanley becoming the latest to sort of reiterate that this is now equal weight and saying it's cautious ahead of the earnings come November. They're saying that they see a likelihood, a high likelihood and chance of a strong beat versus guidance and consensus. Now that's the good news. That's the positive part of all of this. But there's a but. The caveat is what they say over at Morgan Stanley is a more difficult part when it comes to outperforming and not only earnings, but the loftier investor expectations. So that's the reason behind sort of keeping this equal weight. Remembering that obviously CoreWeave has been growing rapidly, the business is absolutely booming, we know that, and just yesterday actually it announced a new partnership once again, so we continue to see these announcements. Remembering this is a cloud infrastructure company that specializes in offering the AI data centers as well, so it rents out that capacity to other companies to train their models, but this demand we know has been very strong from the hyperscalers, and the spend is there, and that has allowed these other companies to save on costs of actually buying the hardware, but also having to maintain the infrastructure. So it is very much benefiting, but it just looks like a classic case over at Morgan Stanley of expecting good earnings, but not so much a massive run up in the stock just because the bar has just been set so high as far as investor expectations are concerned.
Yeah, I mean, this day I know it's pulled back substantially from highs. We were also like parabolic at one point, so seeing a bit of a recovery in some of these names that were, frankly, I think becoming very frothy. I think valuations were stretched, and now we're seeing a bit of a come down. But I mean, it hasn't really been felt by the overall market, to the market's credit. But I appreciate that for helping us break down the top of our show in the last several days. Sam Badas, contributor and host here for the Schwab Network. Now coming up next, it's time to dive into the charts, as we are diving into the charts and example trades of Novo Nordisk as well as Hims and Hers. Two names taking it on the chin today.
Hims and Hers.
From President Trump suggesting the price of these various weight loss and diabetes medications could be coming down substantially.
Oh. Well, make it affordable again. So we're going to go over the watch list. Well, I'm going to go get my coffee started. The Dow Jones is at 115. The NDX, the NASDAQ 100 at a positive 54. Oh. Oh yeah. Oh yeah. Yeah. Randy's back. Randy is back. Randy is back.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I see something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab is a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl?
Schwab, a modern approach to wealth management.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Welcome back to Next Gen Investing. It's now time to dive into the technicals with our chart master and lead market technician for the Schwab Network, being Rick Ducat, of course. So we're talking today for charting and trading purposes, Novo Nordisk and Hims and Hers. I would like to say this is like the new age versus the old age of all of these various GLP-1s, as Hims and Hers has become now a considerable threat. And you can really see that by Novo Nordisk's chart. And today, not exactly helping any of the price of the bulls here, as we're seeing a 4% decline on the back of some of the commentary from President Trump yesterday that we could see prices decrease.
NVO.
Calling out Ozempic. So as far as the compare and contrast here, walk us through your thoughts on Novo Nordisk.
Yeah, drug makers can often face kind of a tricky situation because so much of their revenue comes from one product, and when the patent opens up or when something disrupts it like this, the results can be pretty difficult to swallow for the bullish crowd here. Nevertheless, when we look at our chart here, downward sloping trend line here has been the trajectory for most of the year here, but we hit a bottom around the 45 level right here. Then we established another floor right around the 53 level after we recovered somewhat. So that's getting pretty close to where we are now today. You could have also drawn this upward sloping trend line here, connecting these lows, the closing lows at least, and then we have broken down below that as well today. So not the greatest day for shares here in this particular name. The upside boundary probably would be around 61, 62 or so based on the highs that we reached after our more severe gap down that we saw recently there. But we can also see that if we were to include some of our other studies here, our moving averages, yellow 21-day and orange 63-day exponential moving averages coming together right around the 57 level. That also intersects with our trend line. So that seems like an important breakout point to cross above if the bulls want to retest those levels near 62. Beyond that, you could also look toward our gap that formed here, 68.47 would be that level. We keep track of these gap areas because they often get filled in trading. Certainly not saying that's going to happen or that it's a sure thing, but that's there's a reason why we make note of these significant price gaps and keep them on our charts going forward here. We can also see that RSI is struggling. We had this very modest green upward sloping trend line that has been broken here. We have also fallen significantly below that 50 midline. So momentum taking much more of a bearish lean in this case here. If we were to also look at our other studies, volume profile and standard deviation channels, there's volume nodes here and here around 63, 50, 55, 56, and around 47 or so. So those would be the heavy trading areas to watch out for. If we do start moving lower, that would be the place the bulls might want to start looking for a foothold, hopefully at least. That would be the hope.
I have 47.
Trading area would provide some sort of downside boundary. Also,
yes!
Closely with our blue linear regression line. To the upside,
me and Rick agree.
You also see there is another pocket of volume right here near 68, but our
no, not that high.
Deviation channel there, one
60
deviation up from that linear regression line that I just mentioned there. That could provide another upside boundary in that general area.
Bullshit.
Okay, so with all this in mind, and we pulled back substantially from highs that we are now about a year away from. I mean, like the name's basically cut in half effectively. So when you zoom out and you look at the more longer-term trends, is this even more concerning, or is this like, relative context, perhaps just us coming back more down to light or down to earth after seeing a parabolic move to the upside, really around all of the GLP-1 hype from last year.
That's right.
It's an unfortunate move for anyone who got in at those highs here, but the area that we are at right now seems even more critical than perhaps it did at first. If you were to backtrack all the way back here, you can see pretty much lines up with a significant range-bound period from back in late 2021, early 2022. So that level around 54 so really sticks out as potential support. You can also see if we were to start moving too far below that level here, 45 was kind of the long-term lower boundary for this particular stock. So we're at an important point. This is the point of control for volume profile on a longer-term basis as well.
Okay, so all this in mind now, as we do look to trade Novo Nordisk, of course not on the greatest day of price performance, but when you look at trading the same for an example purpose, how do you think about a company that's come down so substantially from its peak, but I mean still commands the dominance of the various GLP-1s and glutide market? I mean, Ozempic is still
68's where the 200 is.
Yeah, for sure. It's
That's why he said that.
Not seeming to be losing its popularity either. So
right.
Oftentimes when you get these price shock events, you'll see that things can kind of shake out and get back to normal in a relatively short time. I'm certainly not saying that's going to happen, but that's kind of
Then
the
don't
thing
say it
behind
then.
What you might try with an example trade like we're going to discuss
How
here.
dare
So
you.
we're near significant long-term support. So the trade in question would be -1 November 21st, 50.45 put vertical at a 130 credit here. So 130 max profit is that credit received.
We could see a triple bottom on the SPY.
Close to that 1 to 3 reward versus
Or quad.
ratio that traders commonly look for as a general guideline here. Break even 48.70. That would be about 9.8% to the downside here. The expected move is a bit bigger in this case than that break even. It would be about 15.8%.
We did hit my support this morning,
Those 35
so I should get some credit.
here. But this would be a more softer target here. We just want to stay above that break even and keep that credit received.
No, I don't know.
Taking on the idea that we're already near significant support.
I might have done this after the fact.
Today, and there's
Can't
even
take
more
credit.
support just below the level that we were discussing earlier. So kind of a make or break point for this stock.
Okay, so now as we do not look at Hims and Hers, which is actually seeing some more substantial weakness today, but has seen a very different performance on a year-to-date basis. When we discussed this name, obviously seeing some weakness on the back of the same type of catalyst, and that was the fact that Trump says these prices could come down. But Hims and Hers is fascinating to me because it's really, I mean, at one point this year was seen as a major threat. And since we've sort of chopped around, but at least at this upper echelon of regional trading.
Yeah, so this one, like you said, chopped around quite a bit here. We had this very big spike earlier in our trading year here, topping out near 72.98. But as I said, kind of an example of what I was just saying. When you have these big price shock type of situations here, they can come back to where they were before rather quickly. We in a brief succession, retreated back to our previous area that we were trading in before. We also seem to find some stabilization near the long-term purple
Hims bounced up.
exponential moving average here. But earnings provided yet another catalyst, so kind of a roller coaster for this stock here. 65 was the high point that we reached here around that general point. That's where we topped out a few more times. That was our most recent high point as well before our decline that we've seen during the past few sessions here. We also have a notable downside floor. We have our green line here coming in around 41. That's where price has bottomed out several times. In the shorter term, though, thinking even more short term than that, we had an upward sloping channel between our two white dashed lines here. We have given up that channel. We have fallen below our moving averages here. 21 and 63 day have both started to slope downward here. So an important sign of potential trend change as well. Those come in near 53 and near 56 or so if you were looking for upside resistance. RSI also starting to move lower here, breaking below that 50 midline, suggesting a more bearish shift to momentum.
So as far as, again, looking at the longer-term picture here, and when you zoom out, it's a very different type of performance because all of its strength has really been felt in just the last 12 months or so. So not giving the same historical context as, say, Novo Nordisk, very different types of companies, but what does the longer-term trend tell you here?
Yeah, so when we look at our other studies before we get to the long-term chart here, we are pretty close to our point of control. The heaviest trading area on our volume profile study, that comes in right around 50. So this would be another of those key price levels here that the bulls would want to hold on to, this heavy trading zone here. But beyond that, though, other trading nodes include here around 43 and up here around 56. So those could be areas to watch as well. Finally, when we start moving too much lower here, our -1 standard deviation channel comes in at 45.72. So that would be another area where we're starting to see some confluence of technical factors here. Our volume node, our standard deviation line, our lows, and our 252-day exponential moving average in purple that we just mentioned here. Those are all between about 41 to 46 or so. When we do look at that longer term chart, we can see that, it's kind of difficult to make too much sense of any kind of trend lines or patterns here in this longer term view due to the extreme volatility here. But one thing we can see is on the bigger picture, the same area here, around 50 to 53 or so. That's where all the heavy trading activity is, and we're starting to kind of move to the downside below that level. So not the greatest, setup here for the bullish crowd.
Okay, so last but not least, as we do look to Novo Nordisk, Hims and Hers, for example purposes, we already just reviewed the Novo Nordisk trade. Hims and Hers, when we talk about trading the same, it obviously has volatility. Today is no exception, as we've only continued to sell off, now down about 14.5%. How do you think about trading the same?
So the news seems to be a little bit worse in the situation for them today. They're the ones who are kind of the backup makers of these types of drugs. So if the main source becomes more affordable and easier to get, that means they could perhaps suffer a little bit more. So more of a neutral type trade today. -1 November 21st, 70, 75, 35, 30, Iron Condor at a 130 net credit here. So this would be a more neutral look here, kind of spacing things out so it lines up roughly with our expected move. Very coincidentally, our max profit and max loss are exactly the same as our last trade, kind of a weird quirk here. So 130 max profit, 370 max loss here. Our break-evens would be 33.70 and 71.30. So roughly, about 34% to the downside and 39%
At least it's not
to the
Marley.
downside. Expected move is about 33%. So quite volatile, as we said here. That's a pretty big range for a relatively short time here. So
we do have a bull flag.
As you're selling the call spread and selling the put spread, price will just kind of stay put as much as possible.
We're at the orb.
Between those guidelines. So
We're just showing a lot of patience here.
Also taking greater advantage of that.
It's 12:30, 1:30 Eastern, so I really ain't got much time to get a trade in.
Yeah, and this today is one that definitely is always providing us some volatility to discuss. So Hims and Hers, for that reason, is always an interesting one to check in on, especially in regards to the broader weight loss and diabetes drug entirety world, as it's been one very lucrative for a lot of these bulls, although seeing some weakness today. Appreciate it, though, to Rick for all of the technical help as well as some example trades today. That'll do it for Chartmaster. But coming up next, we will dive into the latest with Oracle as the street remains fairly divided on what to make of their recent targets that are fairly long-term following that analyst day yesterday.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Dad, I have a question for you.
Yes. How come Grandpa doesn't sleep with me anymore?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me and my advisor, Jennifer.
How come Grandpa doesn't sleep with me anymore?
Helping with the estate distribution. The two grandchildren planning for their college educations. Someday it'll be their turn.
You weirdo.
Welcome back to Next Gen Investing. It's time to discuss the move in Oracle today, which is not what you'd expect if you looked at some of the sell-side commentary, because it has been hugely optimistic following
there's Marley.
analyst investor event, of course, that occurred yesterday. So joining us now is Marley Caden, host for the Schwab Network, to discuss more of what this reaction is, because it seems like, I mean, based on today's price performance, of course, it's the worst day since, like January of this year. But everything I've read from analysts has been hugely optimistic.
A lot of positive sentiment coming out of this day. You know, the analysts issuing a lot of notes, so many. It's like a laundry list at this point. I'll walk you through some of the highlights, some of the price target adjustments here. Citi still has the street high of 415. The next closest is 400.
Grandpa doesn't sleep with me anymore.
Price target to 400. Guggenheim also coming up to 400. Barclays coming up to 400. Jeffries coming up to 400. Most of them on this guidance that was highly encouraging. The forecast, the revenue for fiscal year 30. Lots of mentions of those EPS targets above street estimates. But they were really impressed with their annual conference wrapping up with this positive long-term outlook. And most of them mentioning the same things. I want to highlight a couple things, though. B of A saying that Oracle is well-positioned to keep capturing its AI infrastructure share, did not change its price target or its rating, maintaining a buy rating, $368 price target, so above the 336 average, but not considerably high, certainly not the 415 street high we're seeing. Now, they mentioned the same thing. They thought there were impressive targets for fiscal year 30, revenue of $225 billion, EPS of $21. But they said that the margin associated with the EPS target appears achievable when it's less clear is how Oracle can scale up data fast enough to achieve top-line growth, given spark-based funding for the energy and GPUs. And I think that energy and GPUs, part of their plan, is a big part of this discussion. There is land available. Buildings can be built and constructed, and with the right regulations and permitting can be done relatively quickly. It's an opportunity to demand and supply potential issues, and also this issue with energy, which is not big for data centers. There is a role to develop power. All these data centers once they're done. We have made news a lot to say that they believe Oracle is well positioned to continue capturing share of the large and growing CapEx spending plans. And we know from previous earnings season and, of course, this one, how important that has been to the conversation. And so their analyst, Brent Thill, is saying, you know, he was surprised that it wasn't there. Questions remain about CapEx requirements to meet growing demand. There was no forward-looking commentary on CapEx at the analyst day. They said CapEx will need to ramp up in line with OCI revenue growth, and he flagged that it does raise concerns about Oracle's financing options to support this expansion. So that is a possibility about why we're seeing some of this downward pressure on Oracle. You know, the other is that Oracle has, you know, over the last 6 months risen 125%, even with the downside move that we're looking at right now. So some of it is perhaps that we've already got so much upside priced in right now that we're just seeing a pullback on some uncertainty. see, but it is a pretty significant pullback, about 7%.
It is, and so I agree. I do feel like I can understand maybe the lack of some of the guidance that we were anticipating is what is the hitch, but also the fact that you have a company that has been, I mean, it's almost a 50-year-old established software name that is right now surging towards its best year. Really, we've seen the company yet. Like, I believe it is right now pacing for its best year on record, rallying more than 85% into the AI World Conference in Las Vegas. So I just don't know if anything that they could have said would necessarily have been able to please the high bar. And also the fact that now you have earnings expected to increase $21 a share, I mean, annually. So you're going to have to put up big numbers where profitability for this name has actually remained pretty concerning for those that are a bit more skeptical on some of its AI narrative.
Yeah, and but the expectations are still very high. One other thing that I saw flagged in just one note was the reliance on OpenAI. And this is another conversation that a lot of us have had with guests on our shows. A large portion of Oracle's revenue backlog is driven by that growing partnership with that startup. It's about $300 billion cloud contract. If you think about the potential that that were ever lost or reduced in some way, sort of what impact might that have? And this is sort of the ongoing conversation about the expectations versus execution. We lie somewhere in the middle right now, and anywhere there's uncertainty, you can always see moves to the downside.
That is very true. That was exactly what I was going to say. It brings us all back to our theme of this week, which is a lot of these valuations and
Oracle.
serious growth. So you have to be able to put your money where your mouth is, I guess, for the case of Oracle, taking it on the chin a bit today. Has come off of lows here, but now down about 16%, 15.75%, we'll say, from those highs. But appreciate it to Marley for helping us make sense of a pretty brutal day for Oracle shares. Now, we'll leave it there for FOMO, but coming up next,
She was pumping it yesterday,
into what we were
Jenny.
seeing from some of these major AI events this week, including Oracle, but also Salesforce, as we did see its Dreamforce lead to some optimism, as Salesforce is now pacing to at least close this week positive, up about 0.7%.
284. I got 284.65. Washboardjim has 284.65.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please. But there's a Carl's Way is the best.
Had a nice little bounce on SPX.
At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers only.
CRM, huh? You still here?
Welcome back to Next Gen Investing.
Sing
And now
HH?
to discuss some of these major takeaways from AI events that occurred throughout this past week, as we've seen some volatility in names like Salesforce, as well as, of course, Oracle, as we just discussed. But joining us now to provide some more clarity on some key takeaways from these events.
Sing, HH, are you still here?
Research. So, Corey,
on YouTube?
thank you so much for being with us on this Friday. Really excited to get your thoughts here. We'll start off with Salesforce as what's really driving some of the momentum behind its AI narrative, because I know it has not been seen as a leader in that space, as it's right now concerned with its dominance and its overall sales platform, that we could be eroding that real true dominance in their market share.
Yeah, it's interesting. You know, agentic AI was just that was all that Salesforce talked about all week long, and it seems to be the mantra coming from the CEO Mark Benioff. Agentic, 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 agentic. I mean, it was exhausting to hear the conversations about that. But it is truly a change in the way that the software works. I think for those who don't use Salesforce every day, it's hard to imagine. The rest of us who do use Salesforce every day, and businesses that just simply run on all kinds of Salesforce properties.
It's hard to say. I'd say
Salesforce is at a point where its growth is all about acquisitions, and these
235.71.
Actually, they don't get enough credit for how good they've done with
Low.
the acquisitions of things like MuleSoft and now Informatica coming up here. That they're trying
And your
to
first support's going to be right in here.
Those businesses have been growing faster under the Salesforce umbrella and under the Salesforce sales organization than they were before they got acquired. Was exactly what you want to see, which is Salesforce cutting the costs in these deals and growing the businesses faster than when they were independent. But that is not
239.15 with a low of
will be made. It is really going to be about a new and innovative product, and I think Mark Benioff knows that. Which
strong
is
buy at
was so much on agentic AI. They talked a lot
235.43
about average contract value and how the average contract
resistance
value of
to
their new
break
deals is bigger than their old deals, and that
I
that's
have
going to play out over the next 12 to 18 months
257.
into rising revenues for Salesforce.
But I think now I have to change it
so many of the deals it's had. I
to
always
248.38.
real M&A king, frankly, is how I always saw them when they were first emerging as this real leader.
Sport Channel.
But now, as far as their AI business, I mean, growth expectations there, how big has that become?
Well, there's what they say it is, and then there's the question of what it actually is. What is really AI and what isn't AI? And so, as part of the narrative, they're talking about some really big, multi-million-dollar numbers and growing in the very near future. But the proof's going to be in the pudding when you see how these products are actually being used. I think that all of our interactions with software and computers are changing really rapidly, and AI tools, we can call them agentic tools if you want, but as those AI tools are solving a lot of the problems for us in a faster and more efficacious way, Salesforce is certainly talking a big game here, but we'll see if what ultimately matters here is free cash flow. And you can't get free cash flow without profits, and you can't get profits without growing revenue. So they've set some really big targets for growing revenue, and now they're going to hit those numbers. And whether those are customers using things that have a little bit of AI in them or a lot of AI in them, it doesn't really matter at the end of the day. They've got to sell a lot.
I mean, absolutely. And so as far as now going forward with Salesforce, what do you foresee being their major headwind? Like, what is a near-term hurdle that they must, still prove themselves for to be able to say they're a real formidable force in AI?
So I think because of the tools of AI, we're going to see a lot of companies emerge out of nowhere.
You got another knife here.
Startups now that will be great big giant companies.
Okay, get ready for a double bottom.
AI that were not much 3 years ago and are now, the arguably most important businesses in the world. And so those average contract values are going to matter to Salesforce, but so will the number of customers that they have. They have to continue to add customers and figure out how to get those customers spending more and more as they grow. And I think that those average customer values, we're going to be paying very careful attention to that when they report quarterly earnings, as well as the number of customers in the platforms that they have.
Okay, and so now to shift gears to Oracle, which is, still, I'd say one of the most dominant forces in all of AI across the broader market. Obviously not seeing that same move today, but they're predicting right now some of their cloud business will be about 35% larger than the entirety of their business right now. This is insane to me that we're not seeing this then translate.
Wait, you've been reading my tweets?
Yeah, did you tweet about this?
I tweeted that yesterday.
That is so well, Gravevine's thing alike that, I guess. That was the most staggering part of the entire thing to me.
It's staggering.
So then why are we seeing this move to the downside today?
Now, I'm full disclosure, I own Oracle
Randy?
shares. I've done work with Oracle. I have some friends who work at Oracle who I care about deeply. So I'm totally biased. So take that into account. But what my big takeaway from Oracle AI World, forget today's move in the price. When you look at your long-term chart, which you guys have got on the screen right now, today doesn't that sell-off today doesn't matter much, I would say. The numbers they put up, the predictions they put up, and Oracle's been pretty good about beating numbers over the years. Not always, but beating numbers over the years. These are staggering numbers.
You
as
ready?
you said. They are predicting fantastic growth. And one wonders how a company that really wasn't in the data center business 7, 8 years ago in any meaningful way is kind of emerging as a leader here, competing with Amazon Web Services, with Microsoft and Google out there as well. And I think when you think about AI, what is the food that AI eats, right? What is the fuel that, to mix my metaphors, the fuel that runs AI engines? It's data. And no one is closer to data than Oracle. So Oracle's building these AI tools right on top of the data stack, where companies already have.
Come on, hurry up.
They don't have to go out and buy new tools to migrate the data into an AI engine and figure out how the AI can interpret the data and how it can access it and how fast it can get to it and what's public data and what's private data and what one user can see, and you build an AI query on, and another user's not allowed to see what's personal information for a worker that a worker's allowed to see, and the boss might not be a healthcare record.
Yabba dabba do.
These are complicated issues that sit at the data layer right where Oracle is. So they have a tremendous advantage if they can exploit that into being the AI tool of choice, not just the data center hosting.
You guys saw some of my paintings.
That they might present. And
He's
that
quite.
was a big takeaway. Again,
He's a
totally
painter
biased.
too,
I own
so.
a lot of the stock, at least a lot for the Johnson.
Different
family.
kind of painter, but.
It was a really impressive sort of many days of innovation and talking to people who are building out the data centers. I talked to people who are focused exclusively on
Boom, baby.
products for inside Oracle data centers only, and how they're rewiring the notion of how a data center connects to another piece in the data center in a way that suggests leadership, not just an and one offering that's similar to what their competitors have. I thought it was super impressive, and I think that those numbers that they put up as projections were, jaw-dropping, stunning.
I mean, they absolutely were. And even, I would say, my own bias aside, I mean, this is staggering growth for a company that is as massive and as long-standing as Oracle has become. And you mentioned the word innovative. It's never the way I would have described Oracle 5, 10 years ago, but that's truly what it's become. And so I think that I'm sure your answer here, but of the two, what would you really say right now is winning amongst the foray into AI?
Well, look, it's unquestionably Oracle just got such a bigger business, and the OCI build-out, the data center build-out, is so massive. The partnerships that they've made with AMD and NVIDIA, and obviously that the sort of Damocles here is, can OpenAI access the revenues, or the money, I should say. There's never going to be not even revenues, but can they access enough capital to pay Oracle what they've promised to pay Oracle? And it is an open question, and it's one that a lot of us were talking about in the halls of the Venetian in the last week, is, that we've gone from a world where, the two big to fail institutions that could cripple the global economy a year ago were banks, right? It was JP Morgan, it was Morgan Stanley, it's Goldman Sachs. Now the too big to fail institution is OpenAI. And if OpenAI cannot come up with the capital to fulfill their deals with AMD, Broadcom, NVIDIA, and Oracle, what happens to the global markets? I'm not saying they're not going to be able to, and I certainly hope that they will, but it is a more risky proposition to have the weight of the world's finances on the shoulders of Sam Altman than it was Jamie Dimon a year ago, and I think that's where the world's sitting right now, with the concentration in the big tech names into the S&P 500 and the global economy. And this is going to be a really interesting few years here to cover technology. I'm thrilled that both of us get to do it.
I know, we definitely will have no shortage of things to discuss. That's how I feel every single week. It's like, what a week, we say every single week. So fully in agreement there, but so appreciate your time on this Friday. Corey Johnson, Chief Market Strategist at Apostrophe Capital Research. Now coming up next, last but not least, it's time for Under 30. We're talking Stellantis with now a partnership with Pony AI to bring some of its EV fleet to Europe.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the CBOE, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com.
Morning movers, be the first to find out what's shaping early market action. Check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com.
And on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Welcome back to Next Gen Investing. It's now time for Under 30. We are diving into Stellantis now teaming up with Pony AI to bring its self-driving EVs to Europe. So joining us now is George Tillis, Senior Markets Correspondent for the network. So George, I mean, how big of a deal is this? How much does this impact Stellantis, which frankly is in need of some catalyst to the upside?
Yeah, it is. I was just looking at a 3-year chart, Jenny. I mean, the stock was trading around $27, roughly speaking, in March of 2024. So at least in the last year and a half, it's not been a good run for Stellantis, which is, one of the big 3 U.S. producers of automobiles, at least in the United States. They have the Jeep and Chrysler and Dodge brands, but nonetheless, there have been some challenges, I think, with their underlying business. Now, today's news with Pony AI is quite interesting, I think, in the context of a technology partnership. Now, for those who don't know, we've talked about Pony AI, I believe, on this segment, but it's essentially a Chinese autonomous mobility technology company. They provide software and engineering solutions to autonomous driving. Things like deploying robotaxi services and an operational platform, much like Uber Technologies. That stock has actually been down, if you look at it, since the beginning of this month, around the 3rd of the month of October. It's been down since its $25 peak. And I think it has to do with some of the beta names which are pulling back. I think this deal might actually be more accretive, Jenny, to be honest with you, for Pony AI, considering that if you just look at the revenue base for their business, $85 million last year. If you look at Stellantis, last year, $170 billion in trailing sales. But Pony AI really needs to amp up its technology scale, if you will, particularly in areas like Europe. They do have some deals in Dubai, as well as Luxembourg, to kind of to test, if you will, their technologies. But I think the AI robotaxi space, outside of maybe Tesla and Google right now, at least domestically, is going to be tough to compete with, because those 2 names are really moving quickly in terms of fully deploying the autonomous driving technologies using artificial intelligence. They're doing it in different ways, but maybe that's a different conversation for another day. But nonetheless, Pony AI is one of the top dogs in China for this kinds of technology, and I think Stellantis really needs to, blend in their manufacturing and core automobile markets with technology, and this actually might help them.
So is this more of a boom for a name like Pony AI, which just, like as you said, needs to strengthen? I mean, it's its financials. When a name like Stellantis, unfortunately, is just probably a bit more weighed down by the overall macro and the broader auto right now concerns that are going to, I think, be for the foreseeable future as long as we have this trade uncertainty.
Yeah, I think in the auto space, I mean, just look at Tesla. They keep reporting declining sales year over year. But, I mean, the stock is not performing all that poorly in the context of maybe Stellantis, because Tesla's not necessarily a pure automaker. It's a technology and software company. So I think if you look at Stellantis alone, I'm just looking at sales last year, 170 billion. That was down significantly from just 2 years ago, 208 billion. So they've got a lot of challenges. It could be manufacturing challenges, tariff challenges, and even price challenges, because people can't afford the vehicles that they once could, going back to 21, 22, when there was high demand and interest rates were low. So that's, again, a challenge for the auto space. But nonetheless, Pony AI is a small cap company that is dealing with some losses they have to deal with. And I think that's why the stock is down today, irrespective of the news, which one would say is positive.
Yeah, that is true. This was definitely at least a positive development. And Stellantis obviously seeing a bit more of that
China
today based on price. But we'll leave it there. Appreciate it, George, for all of the commentary today and, of course, all week long. That'll do it for myself for Next Gen Investing for today and again this week. Thank you so much for tuning in all week long. We have the watch list coming up next.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The platforms and tools
Oh, I haven't
webcasts are
watched Psy in a while.
designed to broaden your knowledge of platform features and resources available.
There's
from
fat
Schwab.
ass
You'll learn
Lachita
tips and tricks
James.
to help navigate
Lachita
Schwab.com,
James.
Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Nice bounce.
Welcome to Schwab Network, where real-time market
$11. The 66.50s right under the money.
Closing bell. We've got you covered.
So shall we talk about this?
inside the minds of
Falling wedge. This is on the 1 minute. Breakout. Pull back into an inverse head and shoulders. Boom.
biggest headlines, live analysis,
Pull back.
and sharp trade
Higher
ideas
low.
in minutes.
Double bottom.
Which shows
Boom.
you break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined
Three
way
white
to hold your
soldiers.
earnings.
So that would be a further downside area.
So who's that R guy? Does anybody know his name? Is it Raphael? The R
Streaming live.
that loves my music.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
I want to write you a song. They're now at $12.40. Jim, have you ever thought about selling? No, I can't. I won't. But you're nearing a triple top, James. I can't. I won't.
I'm Nicole Pedalides.
But
at
you're
New
so
York
up on your
Exchange.
stock profit.
Live interviews, market movers, and real-time coverage right from
Get in
the
there and
floor.
sell crap out of
Subscribe
it.
now at SchwabNetwork.com.
You're up over 100%. Boom! Ladies and gentlemen, triple top. Triple top.
Good afternoon and welcome.
My name
to
is
the Watchers of
Washboardjim.
King
Spelunk.
Hall. Coming up on 2 p.m. Eastern here at the New York Stock Exchange. Let's
That
dive
just
into
won't
what's
work.
coming up on today's show. We will take a closer look at the choppy trading we've seen in the markets this week and examine the uptick in volatility. Plus, Lucas Downey from MoneyFlows.com will stop by to share the latest institutional flow data from some of the biggest names in tech. And our panel will spotlight the healthcare sector after Johnson & Johnson earnings and
Triple
President Trump
top.
pledging to lower drug
Don't
prices.
stop.
All right, let's wind down and do a check on where markets stand with
triple
about 2
top.
hours left in the trading day. We've been watching markets largely on the plus side. You're looking at the S&P 500 hold on to a gain up more than 1/3% right now. Among the top of the leaderboard, you got consumer staples still pacing the gains, followed by financials.
Yippee-yi-yi.
Services essentially moving in lockstep with energy. The
Yippee-yi-yi.
Nasdaq 100 has a gain of 0.5% right now. The Dow Industrial is approaching that similar advance on a percent basis, up nearly 0.5%. The Russell 2000 still lagging, but off the lows of the session is off by 0.8%. Let's take a look at some of the other price action across asset classes.
Hey.
That's populate there. The dollar up a little bit, nudging a little bit higher. The dollar index up a little bit, approaching 0.2% advance there. Gold taking a step back, off by about 1.5%, trading at just above, or just below, really, essentially $4,300 an ounce. Crude oil, a little bit higher today, but it's really been taking this step back. It is better by just shy of 0.5% for West Texas Intermediate. Bitcoin lower by 1.5%. There are people who've been waiting for an entry point. Maybe this is that entry point below 107,000. One of the biggest stories in the markets. We want to welcome in Kevin Hayes, host of Fast Market here on Schwab Network. My buddy, my friend, one of my other hats.
Didn't I just see you?
I know, right?
Didn't I just see you about an hour
Did
ago?
we have time for lunch? Did you eat lunch? I hope you ate something. If not,
A little
we'll get
bit,
it
a
after
little bit
this. Okay, a little something to keep you going. All right, let's talk about Oracle, one of the biggest laggards in the S&P 500 today. Despite, you were seeing analyst after analyst who was more constructive on this after its AI World event, its big analyst day in Las Vegas. Despite all that hype, the stock taking a step back. How do you interpret this one?
Interesting.
It was weird. I got on
7% despite glowing analyst response from yesterday's investor day. Here's the thing.
I got on
Stifle analyst
X today,
Brad Rebeck. He keeps a buy rating.
and I think I had like 6 or 7 hate Trump
Barclays raised the firm's price target to 400.
things come up. And I'd delete one, there'd be another one. I'd delete it, there'd be another one. I'd delete it, there'd be another one.
From 360. So everyone moving their price.
Usually that don't happen,
Well,
but man, they were
big numbers that
flooding
really
today.
surprised people was this RPO now exceeds $500 billion as customer demand is running far ahead of supply. So despite some profit taking,
I deleted, I mean, I deleted 5 or 7. I keep thinking 7, but there was quite a bit.
the overall upgrades
Till I run out of time, I had to go work.
As you know, Diane, this stock has run a long way coming after their last earnings report. It doesn't have earnings for a while yet, but certainly bullish tones despite the stock being down today.
Hope I have enough room to go out and have that steak tonight.
We'll see if it can turn the corner on the pullback that we've been seeing today. So far, the pressure has
Might just
been
have
on.
Hawaiian
Again,
chicken,
as you
but
mentioned, a lot of these analysts really in the bullish camp. Let's talk
I'm really in the
earnings,
mood
right?
for a steak.
So the big banks had a slew of earnings this week. That was a lot of the focus.
It's
Even
cheaper
up to
for
the
me to go out and eat
retail
one than it is to
today.
buy
Things
one.
kick into higher gear next week for earnings. What are you watching in terms of next week's lineup?
Exactly. Earnings started this week with the banks.
I gotta see what he
some of the
did. He
airlines.
said he done
We'll
something
get
in
a
there.
couple more airlines
Think he's
next
spray
week.
painted.
Southwest, Alaska, and American Airlines. That'll come out next week. We'll finish up the airlines. We'll finish up some of the regional banks. Remember, that was some of the concerns. Those are dissipating now in the Russell 2000s. The financial sector is relatively higher, but the industrials are struggling. The Russell 2000 still down about 0.8%. But the other three industries, thinking about earnings season coming up and the pace and the high-profile earnings coming up next week, Netflix,
So we did.
Tesla.
You spray painted with some.
We'll also get.
I'm gonna take a picture of it.
Texas Instruments, GE, Aerospace, and Vernova will come out next week. Then Thursday we'll get Intel, a couple of the airlines. So there's, the profile of the names are starting to pick up as we move past banks, finishing up airlines, and we'll start to get into large cap tech. But then, the week after that, Diane, we've got a Fed meeting. We've got earnings on 5 of the Magnificent 7 coming out October 29th and 30th. Next Friday, we should get a CPI data, so the market will figure out. But the good news, to finish up this
Well, a lot of cleaning up to do in my bathroom, so I think I will go have a steak.
yesterday and this morning, but some of the concerns about the regional banks are starting to dissipate here. Now the S&P up about 0.4%. It's been volatile and whippy all day, starting to settle in here a bit as we get to the end of the day. Remember, it's October monthly expiration, so volume should pick up a bit, and we'll see how the day closes. But right now, as the day goes on, it seems like some of the risk off is starting to dissipate, and we're going to leave here with some pretty good fundamentals going into next week. We've got crude significantly below almost $57. You got the 10-year right at 4. You've got the dollar right around 98.21. So you've got some pretty good numbers going into the weekend. Earnings season, that'll take over all the attention come Monday morning.
All right, great stuff. Great setup for next week. That is Kevin Hinks, co-host of Fast Market. Have a great weekend, Kevin. All right, let's wind now and get the bigger picture outlook with Brian Mulberry, Senior Portfolio Manager of Zacks Investment Management. Brian, thank you so much for joining us today. You always have great insight. I'm curious to know your take on the market this week, your big picture take, especially what's been, really, you think about how we started this week and how we're ending this week. It's a very different way that we're ending. We thought a lot of the focus would be on earnings, but really it was about trade.
Yeah, absolutely. I mean, the two main drivers of this market so far have been AI momentum, driven by a huge amount of capital expenditures trying to grow
So
the
people on YouTube, this is what's going down today.
more power. And
First I had a big old hole.
Volume being invested is starting to affect other earnings in
And the guy's been working on, this is what he's done now. He sprayed that spatter on it.
But we also need to see a continuation of the
That's that stuff.
cycle. Meaning we got one rate cut, but
Kind of give it a texture.
pricing in with almost certainty that we get two more rate
And then he's
cuts
going to paint
totaling
it.
50 basis points by the end of the year. The combination of the spend in capital capex and an easing cycle is a good recipe for stronger earnings going into 2026. That's all very good.
What do you think
We'll
about
get
that,
more
Randy?
Confirmation of that next week, like we did this week with strong earnings, and the market probably continues to tip higher. The questions that are starting to arise are, where is the monetization of AI? Who's actually going to be profitable on these projects going forward? And are we starting to see some stress in the private credit market with the recent bankruptcies that we've seen from Tricolor and First Brands, and also a warning shot from CarMax a couple of weeks ago saying their defaults are rising as well. So a lot of good news out there, but certainly some issues out there causing the volatility that we've seen, especially from last Friday to where we sit today.
And I wonder if we have to pay more attention to those data points, given that we're in this economic data blackout, right? So the tricolor evidence, what we see in the CarMax numbers about loans, right? And if there are any trends there that we need to pay attention to. So let's talk a little bit about the AI trade before I get your thoughts, further thoughts on the Fed. So in terms of the AI trade, there's been this question now, are we in a bubble? But there are those who have the view that we are still in the early innings, right, when it comes to AI and the monetization of it. Where do you think we sit within the cycle as it relates to the AI growth story?
Well, I think not an asset bubble, meaning the stocks and these companies are producing very profitable earnings at this point. Revenues are still growing at a very fast clip, and we're seeing that get monetized into better profit margins. So that's a good structure, a good basis of the valuation that we're seeing. If you want to have the discussion about, where it might feel like a bubble, it's probably just in the sheer dollars of this capital expenditure. Between now and 2030, we have roughly $2.8 trillion that has been announced in projects, growing either the power grid or data centers specifically. All of those projects, that $2.8 trillion, that's real GDP. That business spending is a very positive lift when it comes to growth of the economy. The thing is, a lot of that momentum, that growth has been baked into where we are valued in this market. So the risk becomes, if anybody gets nervous and pulls away from those capital commitments, it could cause outsized volatility to the down, because people are already baking in $2.8 trillion positively impacting growth in the next 5 years.
Speaking of what's already being baked in, I want to go back to the point that you made earlier, Brian, about the views that we'll get 2 more cuts this year, right? I can see the case for the one in October, right? Especially given that the Fed will have to rely on, one, the data that's already out there, and then other private sector data, because I've heard from Fed, former Fed insiders that they do have other data points they can look to. But then if it, once we start getting that data, right, once the government reopens, because it will reopen, how will that set the path from there, right? Is the market underestimating the potential for a pause in the easing cycle?
Yeah, I think so. I mean, we know that the Fed has been data dependent. They've been telling us that for several years now. And in the lack of data that's available, they may very well have the ammunition to say, look, we're not exactly sure. Moment by moment, the picture has been changing, and without confirmation of the underlying data, they might be hesitant to make a change in monetary policy. I don't think the market has realistically priced in that possibility. It might not be a very big probability, but you have 92% odds of a rate cut. That's suggesting that the rates are already baked into where the market is right now. Now, there's an identifiable trend that labor is definitely weakening, and the throughput that we can make from Tricolor and CarMax is clearly the lower tier of the consumer is feeling stressed. They have stopped paying on things like car loans, and so there is enough weight out there from the high interest rate environment that they should have enough ammunition to ease interest rates the way market wants. But again, I'm not certain that it's a sure thing the way markets have priced right now.
I want to quickly get your take on the banks this week. So banner numbers, especially from the big banks, right? The superlatives I heard from different analysts, phenomenal, stellar, et cetera, you name it, that was the superlative. And they had, so many of them had record quarters. But then you had the cracks in the armor from the regional banks. And, obviously you mentioned Tricolor as
Okay.
well. What's your take on the banks this week?
Well, the bigger the better, honestly. What we heard from the very large banks is not only records, but records.
The tanks
in
got
different
stuck.
segments.
The tanks got stuck. That's what they get for shorting the market.
It just seemed to get better and better from quarter to quarter.
We're coming back to the triple top support.
The large banks that have different revenue sources and different customer sources, they're doing incredibly well. They continue to grow at a very fast pace. What we worry about are the smaller banks that are more dependent on one type of product and one type of customer. That's what we
Call it double bottom.
with Silicon Valley Bank back in the day. Just really one segment.
Off of a wedge.
And when it went sour,
Broke the triple top. Yes, dude. The double bottom at a higher low. I said, baby, let's go. It was 100%. And Leon Cooperman could only make 17% a year. He said the market was overbought. He must have had a real bad year. He was happy with 17%. Try 30,000%, my dear. Pull back to the 21. All on the 1 minute time frame. I'm a singing day trader. It makes me happy. I got sheetrock dust all over my house. I'm gonna have to clean. My bathroom had a hole in the ceiling and dead cats on the floor. 3 white soldiers off the 21 EMA. 3 white soldiers off the 21 EMA. How does he do it? It's not that hard.
Whether you're an experienced investor or just getting started,
You know, we've had some real good
Schwab
runs
offers
here
a
lately.
webcast that's right for you. Are you a long-term investor?
There was a lot of
Our
Debbie
investor
Downers in
webcast
here last
breaks down
night.
different investing styles, including growth, value, income, and more. Best of all, you can
Wasn't there,
ask
Randy?
questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Welcome back to the watch list. Time now for Options Corner, where we analyze unusual options activity seen throughout the day. For that, let's welcome in the Duke of Data himself, our lead market technician, Rick Ducat. All right, Rick, let's talk Eli Lilly. It's been under pressure today. This comes after President Trump called out these drug companies and working to lower the price of weight loss drugs. So, you know, little pressure on this. So what did you find in the options market for Eli Lilly?
Yeah, Novo Nordisk is the one that really was the focus today, but Eli Lilly makes similar drugs, so not exactly great news for them either here. Healthcare has seen such major disruptions this year as federal spending on healthcare was changed due to the GOP budget.
It's been an all-day job going in there painting that thing.
Continuing to be an area of interest for the administration as well.
I told the dude last night to get someone in here early because
you know, and
I'm
we do
going
see
out.
this move in Eli Lilly today, where there was
Mistake.
one very large trade that stood out here. In this case, the trade is a bit of a mouthful to say. Minus 2,910 December 19th, 880 strike calls. Minus 2,910 December 19th, 1,000 calls. And minus 1,940 December 19th, 720 puts. All of that came together at a 107 net credit here. That equates to about $10.3 million. So quite a hefty sum to receive.
I was
here.
muted all that time.
Large dollar for trades in general here. And this trade, if you look at the
that's
risk
funny.
profile at a glance, almost
I gotta
looks
redo that song again.
trade where we have that long flat area that results in us selling the calls and selling the puts here.
I'm wondering
this
if
is really,
YouTube's
quite
muted
different
too.
here because we
No,
have
they
the
got to hear it.
potential for unlimited losses
Shit.
to the upside here. We have our two sets of short calls here. And remember, this could be paired with stock. This could be with an existing stock position that we don't know about, so it could be covered calls. If they are covered calls, though, it would carry the risk
I
of
muted
unlimited
myself.
max losses here. If we were to get some kind of bad move to the upside, just for example, this trade at face value, it would lose about $25 million at that 1,000 level at expiration, and it would significantly accelerate from there. So definitely one
Trump
to
said fuck
consider
on
in terms of the
TV.
possible risks. 63 days to expiration. Break-evens would come in at 666.50 to the downside and 915.66 to the upside there. About 15% plus or minus here. Expected move is about 12.8% in either direction during these 63 days out. This trade was about 11.9% of the total volume in this name today, too. The total volume being almost 64,000 contracts at the time I checked. The sizzle versus the 5-day moving average of volume activity, 2.8. So very elevated activity in this name today.
Not the weight loss that Eli Lilly wants to see, I suppose. A little jab from the president there. Let's talk Intel. Those shares are up more than 80% this year, about 5% below last week's 52-week high. Tell me about the unusual activity that stood out that you saw today.
Yeah, you know, semiconductor sector as a whole taking a hit today. More, the subject seems to be commonly China trade tensions. Things did get a boost after ASML earnings, but coming back down to earth today. Not a whole lot of specific news about Intel lately either. The most I could find was a few price target changes. Wells Fargo raised their price target to 30 from 22. Susquehanna raised their price target to 31 from 22. Both kept their neutral or equal weight ratings here. So the trading question that stood out today, I believe this was the largest quantity trade that I saw at the time I checked. Minus 4,000 November 21st. 38 strike calls at a 336 credit. So $1.3 million credit received here. This would be a neutral to bearish play here. Selling these short calls here, the trader would be looking for a price to stay below that break even near the level of about 41.36 or so. So about 11.7% to the upside is where this trade would start to lose money here. The hope being that you would just keep the credit received. As with our last trade, this could be something that's paired with an existing stock position to give us covered calls. If not, once again, it would have the significant risk of unlimited potential max losses. The stock could theoretically go up to an infinite amount here, and you would be on the hook for those losses here with those short calls. But when we do look at the expected move here, plus or minus 25.5% over the next 35 days here. So quite a rather wide range there for a relatively short time for this chip maker name here. The sizzle, 1.8 versus the 5-day moving average of options volume here. But the total volume, a drop in the bucket here, only about 0.5% of the total day's volume was this one trade.
Let's talk about the last one on your list that caught your eye today, NextEra Energy. A little lower today, but it hit a 2-year high yesterday. Of course, this comes as that demand for AI remains front and center and the power for that. Tell us what you notice here.
Yes, just tremendous power needs, for this whole AI sector here. So a lot of these energy companies are coming back into focus here. Not a lot of specific news about NextEra that I found either here. The most I could see were just recent price target changes. Morgan Stanley boosting from 90 or
Has Lewinsky showed up yet?
Jefferies 85 from 77, JP Morgan 94 from 87. So mostly positive analyst coverage here that we're seeing so far. And the reason this trade caught my eye, though, is that it was a pretty large trade relative to the total volume here. This trade plus 3,500, November 21st, 70 strike straddle at a 757.
Yes, I bet he has.
Buying the calls and buying the puts in the same expiration and the same strike here. So that equates to about a $2.6 million debit. You'd be looking for a big move in either direction during the next 35 days here. Now, this trade is a bit more biased toward the upside, too. We're closer to that upside break even than the downside one here. The expected move is about 675 here, so about 8% plus or minus either direction here. So, yeah, this trade, you would be, because you're both buying the long options on both sides, the calls and the put sides, the worst thing for this trade would be to stay put and just stay in the middle there. That would be the max loss, would be that debit paid $2.6 million here. But as I said, the size of this trade, if you add both legs together, 7,000 total contracts. The total volume, only about 26,000 contracts here. So this was more than a quarter of the day's volume in this name here. So an outsized trade, something that I usually find very interesting because it suggests particularly strong conviction on the part of whoever
I'm loving the SPX today. We're at 2100. 6666. It is now 127. Real soon we're going to be doing something. Are we going to hold the 9 or are we going to drop? Seems like people would be cashing out, but they're not. Dadgummit. That's shit. That fan shut off in there? I wonder if I got Beppy Gambetta sign this. Yeah, come on in.
Hey.
I'm here.
I have returned once more into.
You did a good job in there, I looked.
Thank you. It's not always the exact outcome of it, but it's always close enough.
Yep. What the hell is that? What's a dog? Well, they're pumping AMD again. They're pumping AMD hard today. You got earnings coming out or something?
25 discrete inflows into this stock. And then whenever you just marry all of this together with, you know, the CEO coming out talking about that, you know, the latest deals are accretive to earnings and earnings are going to continue to accelerate, it's very easy to see why this stock needs to be rated higher. And that's what we've been seeing in our data, and we like AMD right now.
Okay. What else stands out to you that you've noticed recently in terms of the money flows?
Well, I'll tell you something that's really interesting. If you look at Friday's sell-off and you look all the way to yesterday, we've actually had an even number of stocks that have been under accumulation and an even number that have been
11-4.
If you look at the sectors where money is actually going into, I think it'd be surprising that biotech has been the #1 inflow sector for a number of weeks. So there's a lot of names that are obviously levered to lower interest rates. That is a huge, huge area that I think can do really well into 2026 as rates come down. Other areas that continue to gain momentum, gain money would be in the materials sector, obviously precious metals, industrials, and technologies we just covered. Areas that have had steep outflows. #1 has been financials, regional banks, especially with Friday. Yesterday's sell-off was a continuation of the big outflows that we saw on Friday. And then discretionary stocks, they have really been left for dead. That would be the #4 outflow group over the past week. So, but those have been themes that have really been in place for a number of weeks. But I wouldn't be surprised if we start to get more and more rotational type action as we go into earnings. That seems to be what we have been seeing over the past few months. Wouldn't be surprised if leadership starts to change in the coming weeks as earnings come through.
So, Lucas, let me ask you this. For the average retail investor who is watching this right now, how can they use money flow signals to kind of determine where there is sector strength and just to make smarter decisions about where to go, where to put their money?
Well, the first thing that you can do is you need to be looking at price action. And, you know, we focus a lot on volumes and how stocks trade. So if I was a retail investor, #1, I would be looking at the highest qualities of stocks that are going up. There's a lot of stocks that are going up. I think you just got to be very careful, not to be chasing
Thoughts on what?
The big fads that are out there. What we do is we take all of the inflows, all the outflows, and then we put this
We'll rip into close
on stocks from 100 to 0. And, you know, just like in grade school, if you get a high score and you have inflows, that's going to be the best stocks that you want to be.
It's acting pretty strong right
Companies that
now.
we talked about earlier today, they fit in that bucket. And so if I was a retail investor, I'd be definitely wanting to focus on
66,
where the money
80,
is going,
46.
Because listen, if you're on the wrong side of the money, even though indices are at all-time highs, there are a lot of stocks that continue to just be pounded day after day after day. So you really want to be on the right side.
Well, who doesn't want to be on the right side, right? All right, Lucas, we'll leave our conversation there for today. That is Lucas Downey, co-founder of MoneyFlows.com. Thank you so much for joining us today, Lucas. Appreciate it. You got it. Still ahead, we'll dive into the choppy trading we've seen this week with Melissa Armo and touch on recent weakness from Amazon. The Watch List will be back after this break.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardis and connect with me on LinkedIn or Instagram for more.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab. Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management.
Welcome back to the Watch List. I'm Dan King Hall. We want to welcome in Melissa Armo, founder and owner of the Stock Swoosh, for insight on the week that's been and the increased volatility that we've had this week. And let's start out exactly with that, Melissa. What's your take on the increased volatility that we had this week? There was talk that we'd see some of that this month, especially given that September showed up differently. What's your view or assessment?
Well, the last week,
I'll tell you what my assessment is. The fat cats were wrong again. They're so full of crap.
asked to make up its mind what its next move is. But remember, 1 week ago, we made brand new all-time highs. And then we had the largest sell-off that we've had the entire year in one single day a week ago. You can't ignore that. The market has been rallying and running up ever since the tariff reprieve in April. And if people have been going long and buying every dip, they've basically been up. I mean, the market has made multiple brand new all-time highs most of the year. I personally was shocked how many brand new all-time highs we had, considering the fact that a lot of the issues with the tariffs, mainly our biggest trading partner, China, have not been resolved. So there's a lot of things that are going on right now. One thing is earnings season, which is happening right now. And we've had some of the largest banks that reported this week, and many of those earnings were lackluster in how the stock reacted and traded.
Lackluster? What are you talking about?
JPM, if you look at Wells Fargo, if you look at Citi, a lot of these banks, Morgan Stanley, really have fallen since the earnings. So that doesn't really leave me optimistic for the market to continue and make another high anytime soon. It's not that we are going to fall harder. Maybe we will, maybe we won't, but I think it's going to be very difficult for the market to get back up over that area from 1 week ago, just like that. Do you understand what I'm saying?
Okay. I hear what you're saying about just like that. So so in other words, it's the take that you expect the volatility to continue this month. Okay, all right, so I can see that. But again, the last quarter of the year is often more, you often see more bullish activity in the last quarter of the year. Expecting that pattern to be the same this year? Or the last couple of months, I should say.
It's really going to depend on earnings. It's going to depend on several things. One, earnings season. Because remember, the overall market, there's two QQs in the SPY are made up of stocks and companies. So it's going to depend on earnings season. Again, we're through the beginning part of it with the banks. We have Tesla coming out. In the next 2 weeks, we have Apple, we have Amazon, we have Microsoft, Netflix is next week. All of these stocks are going to actually affect the overall market. And many of them the market will react how these stocks move. For example, if Netflix is down big next week, I forget if it's night or Wednesday night, I think it's Wednesday night is Netflix, then the market will most likely be down then as well. But so there's earnings.
I didn't look at Netflix today.
The government shutdown. The Fed has not seen unemployment numbers. We haven't been getting information. The government is still shut down.
They don't mean nothing.
Full mandate to try to keep unemployment low, and then also they're trying to bring inflation down, which maybe it's ticked down since 2020, but to be honest with you, I still think inflation is too high. They're saying they're going to try to get to that 2% target. They've been saying that forever. It's probably going to be more like 3%. So are they going to cut rates 2 more times this year? I'm not even sure if the Fed has made up its mind because I don't have the data because of the government shutdown. So that's number 2. And then number 3, of course, is the issue that's happening with China and the tariff.
Well, if they're relying on the data from the government, they're full of crap.
And again, sometimes President Trump tweets and the market sells off. Sometimes President Trump tweets and the market rallies. I think people need to really look at a chart, read the price action in chart. And for me particularly, I focus on gaps when stocks are gapping. And so if people are trying to make news-based decisions, then it's going to be a very difficult market to trade in because you could see good earnings and a stock fall. You could see bad earnings and a stock rally. And you could be one direction in the morning on a tweet and the opposite direction later in the afternoon in another tweet. So that will drive you crazy. You have to take a position and you have to believe in the position based on reading what's happening with the technicals.
Okay. So what do you believe in?
Well, I think personally that the market is not done selling off. I think we have had a tremendous rally. I think we have a long way to go down, and then maybe we sell off and have a Christmas rally like we have. Maybe we do have a bullish close to the year like you're stating, but towards the end of the year, in December, after we're through the biggest, heaviest part of this, after we're through another rate cut or 2, after we're through a deal with China. If we don't make a deal with China this year with tariffs and it gets pushed off into 2026, that's not giving investors the warm snugglies to make any decisions about what to do with their money going into next year. People want some decisions. They want to know what's happening, good, bad, or whatever the case may be. People want to be able to make decisions. A lot of companies have actually raised their prices because of these tariffs. I mean, again, it's not across the board, but I do think a lot of these prices and the increases in the tariffs have been passed off to consumers.
I want to ask you really quickly, Melissa, about your thought on Amazon, because compared to the rest of the mag sector, it's been an underperformer, and I know you've been across this one. What's your take?
Again, watching it in earnings, but I think it's lower. It was selling off today, even ahead of the market. It's been selling off the last week. It looks like it wants to break that 210 area. I wouldn't even be surprised if this falls all the way down to 205, 200. This could be a nice short-term short, whether people want to short it or do a swing trade or a put in it. Again, when you look at the overall chart there compared to some of the other stocks that are out there, it looks like it has a bigger move to the downside. Now, again, that's another one. Why is it selling off? Is that getting pressure because so many goods and things are coming from China? Could be. Could be. So again, you have to look at the companies that are affected. Like Apple's another one. Apple earnings are coming out in the next 2 weeks. Got to watch that one too. Again, what's going to happen to iPhone sales and what's going to happen with the tariffs? All of these things are tied together. We're so tied together now with every other country in a 24/7 hour news cycle. And of course, these are our big trading partners. And people want to make sure that they're going to get the biggest bang for their buck when they're investing in stocks. And if you said to me, I'm new, Melissa, I want to buy stocks, should I go long here, anything at all, I'd say no, wait, prices still could be lower. How much lower? I don't know. But again, look at what happened a week ago. If you bought at the lows last Friday or even in the post-market Friday night, you actually are up here now today. So don't think that we can't go lower. In fact, this morning, the futures were down huge this morning. Huge.
Oh, girl, who are you?
Way down this morning.
Yeah, but they certainly came back. As you mentioned, you talked about different tweets and things that can happen to offer some commentary from President Trump. But Melissa, we'll have to leave our conversation there for a time. That's Melissa Armo, founder and owner of the Stock Swoosh. Thank you so much, Melissa. Still ahead, we're bringing our panel to discuss healthcare, what we learned from J&J's earnings this week, and we'll talk the impact of the Trump administration's tariff policies on this sector, plus the comments from President Trump about pricing as well as it relates to the weight loss drugs. We'll be right back.
The final 90 minutes of the trading day, that's when markets make headlines and traders make decisions. From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close.
Here on the floor, I bring you real-time sentiment from traders driving the action.
And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings.
Live coverage of the close every single day.
This is
Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Sam Varnas, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Welcome back to the watch list. Let's talk the state of the healthcare sector. We had Johnson & Johnson this week touching a new all-time high after its earnings. Kenvue's been under some pressure off the back of a UK baby powder lawsuit. Plus, of course, the weight loss drug makers under some pressure today following some comments from President Trump. Joining us now for a look across the sector is Sal Hardy, Senior Vice President of Equity Research, CFRA, and Shams Afzal, Portfolio Manager of Carnegie Investment Counsel. Thank you both so much for joining us. Sal, I want to start out with you and your take across the healthcare sector. You all put out some thematic research recently. You all raised the healthcare sector to market weight. What made you more constructive?
Yeah, hi Diane, thanks for having me. So last week on Wednesday, we decided to raise our opinion on the healthcare sector to market weight from underweight, as we think there's improving momentum in the sector. As you may know, despite expectations for a turnaround since 2024, the healthcare sector has been one of the market's biggest laggards. But we may see this changing. We think since late September, there has been a shift in risk appetite for the healthcare sector, especially after the key drug pricing deal that was announced between Pfizer and the US government late September.
Shams, I want to get your thought on the broader healthcare sector. You say there's no shortage of headwinds, and there's in fact new headwinds today hitting, for instance, the weight loss drug makers, with the Trump administration say they want to lower drug prices. Of course, the consumers like that, but investors don't like that. What's your take on the headwinds?
Well, I think, you know, as you mentioned, there's no shortage of it between MFN, V28, which is obviously the restricting of a lot of the medical care code related troubles that we've been brewing for the last 2 years, and then not to mention tariffs on top of it. I think, you know, when you look at the channels between Medicaid and Medicare, I think it's going to be something that the Lillies of the world should be able to absorb quite well. As far as we know, 20% of its business is through cash. So if that area ends up being impacted by 70% by having to erode margins, I think that can be part of the equation. We still think there's upside on that stock, given that the market has been anticipating a lot of erosion across the board, and so far from what we can gather from either AstraZeneca or Pfizer's deal with the administration, that is still very much constrained on Medicaid and maybe spills over to Medicare. If it does get into the commercial channels, that's a whole different story. But for the time being, I think pharmaceutical industry is breathing a sigh of relief that it has been constrained very much on the Medicaid side.
Okay, so I want to go back to you, and just to catch people up if anyone doesn't know that acronym, MFN, Most Favored Nation. So let me ask you this about the weight loss drug makers.
We're getting ready to squeeze.
In particular, how do you feel they stand up, especially when you think about the pressure now from the Trump administration to lower prices?
Yeah, that's a good question. So our views are very long term, and we think obesity and oncology are going to continue to be the fastest growing therapy areas looking long term. We think Eli Lilly is still very well positioned, not just in the US, but also internationally. And looking long term, we think the company will continue to grow in this market. We think the company is also advancing really well to catch opportunities and new trends, new important trends, I would say, in the obesity markets. So, for example, expanding beyond indications and exploring new modalities. There are some, obviously, challenges ahead, but we think the company is well positioned. Again, it's not just an obesity player. It's very well diversified, very well focused on innovation. So we think those are also make a differentiator for Eli Lilly.
Okay, Shams, I want to get your take on J&J this week. They plan to spin off that orthopedic business. Does it line up with, kind of the pattern that they've had recently?
I think so. I think, when you look at where J&J's margins have been compared to the Amgens of the world, generally the innovative medicine division has really been a laggard, 34-35% margins compared to, let's say, an Amgen hovering around 45%, and many other names higher than that. So the spin-off of the consumer division did allow them to sort of, strengthen the margin profile overall. And now with the orthopedic division, which has been basically a laggard for as long as I can remember, compared to the Strykers of the world, we think, and I think the management is underplaying the improvement on the margin side. They're saying that 75 basis points worth of improvement post spin-off. We think the number should be at least 100 basis points, if not even higher. So it does make a lot of sense that it ends up focusing on the higher margin businesses and does get a pretty decent spin-off where maybe the standalone company has a better chance of being competitive against the Strykers of the world than it has been able to over the last 5 years or so.
All right, we'll leave our conversation there for today. Thank you so much, guys, for your perspective across the healthcare sector. That's Shams Afzal, Portfolio Manager of Carnegie Investment Counsel, Sel Hardy, Senior Vice President of Equity Research, CFRA. That's going to do it for the watch list. Stay with us. You've got Market on Close with Sam Vadas and Marley Caden coming up.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com. I'm Nicole Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at SchwabNetwork.com.
Good afternoon. It's 3 p.m. on Wall Street, and this is Market on Close. I'm Marley Caden, coming to you live from our Chicago headquarters.
Marley.
Hello, Marley. Happy Friday. We made it. I'm Sam
Marley.
Coming to you live from the floor of the New York Stock Exchange. Let's take a look at what is coming up on today's show. We'll discuss the bank earnings this week and the volatility in the financial sector. With the government shutdown in its 17th day now,
Marley.
with no end in sight, we'll hear about how it could impact food benefits and what that means for retailers. And we'll look ahead to next week's earnings. Netflix, Tesla, and Intel among the biggest names on deck. But for now, Marley, take us through what you're watching today.
Thanks so much, Sam. American Express reporting record quarterly revenue today, thanks to wealthy shoppers increasing their spending. The card issuer also raised their full-year outlook,
Marley.
putting them on track to close at an all-time high today. Shares up more than 7%.
I'm guessing you're 43
Meta
years
also
old.
rolling out some new safety features that will allow parents to see how their teenagers are interacting with the company's AI chatbots. The new function will allow parents to turn off AI characters altogether, to block certain characters, and also to see what their teens are.
It is now
discussing
Power
with
Hour,
AI.
post
The
1
news is,
minute.
Of course, following an FTC inquiry into how AI could potentially harm kids and teens. We'll also talk about how shares of pharmaceuticals like Novo Nordisk, Eli Lilly, and Hims are dropping today after President Trump promised to lower the cost of popular weight loss drugs like Ozempic and Zepbound. The president specifically mentioned Novo Nordisk Ozempic in a conversation with reporters today as a part of his broader goal to lower the cost of drugs here in America. Before we get to all of these stories and the moves that are going alongside of them, though, let's take a look at where the markets are. We had a very choppy start to the day, a lot more green on the board than last I was standing over here. The S&P now trading up 0.6% at 66.97. The Nasdaq
Marley.
0.7 at 24,832.83. On the Dow, we're trading up about the same, 46,268, about 320 points higher so far today. The Russell's still lagging behind, but not as much as it was earlier today.
Here we go, folks.
0.7%. The dollar slightly higher on the day at 98.18.
You're either
Gold dipping from those records we saw yesterday, but still above that 4,200 threshold, down about 1.25% right now. Crude oil trading at
there goes down.
23 a barrel, and Bitcoin still under that $110,000 threshold at 106,910, trading down almost 1.5% today. Big moves in Bitcoin and the crypto markets, but I also want to check in with Sam and see what some stories that were catching your eye today, Sam.
Well, we're waiting to see what comes out of this expected phone call between Treasury Secretary Bob Evans and his Chinese counterpart, Premier Curly Fung, and that conversation very much signaling progress after what has been a week of friction.
I didn't catch it.
whenever I heard Bitcoin, I didn't think that was still a thing.
Oh, it's still a thing.
Oh.
It's like $111,000 now. I know some people that bought it at 200. They sold it. They sold it already, but
That's pretty impressive.
yeah.
Is it a pretty good profit buying the stocks that you're doing?
Yeah. But I've been at it for a long time.
Gotcha. Yeah, I wouldn't have the slightest clue how to go about it.
Yeah. I mean, we're at all-time highs, and it's got to be real patient.
But then whenever it hits, it's pretty good for you.
Yeah.
Nice.
Oh yeah.
That's
I'm
good.
teaching other people how to do it.
What's a average investment?
What's that?
What would be a average investment?
My average is about 1,000 to 1,500 in a trade.
Gotcha.
And
Can you double, triple that profit?
oh yeah, double it. Get 20-30% a day, easily.
Can't go wrong with that.
Yeah, I'm calling them out today. They're like 200 or 300%.
Whew. Right.
I plan on cleaning that up pretty good after you're done with it.
Okay, I was gonna say, not the best cleaner, but you know.
That's what I do for a living, so it needs good cleaning anyway. So I'll definitely wipe it down.
Okay.
Well, will I be able to take a shower tomorrow morning
Oh, you can have one tonight as soon as the paint dries.
as soon as the paint dries? Yeah.
I was gonna say, give that about 2 hours or so.
Oh, that'll be plenty of time.
You know. Yeah,
You about done?
Oh yeah, all done.
Are you?
You're good to go.
It'll dry a different color. Well, is that pretty close to the color that it is?
Oh yes, exact match. The walls and the ceiling, all the same color.
You think you can put a little bit more in that one?
I got you.
There you go.
Oh shit.
Heck yeah.
I appreciate you on that one, buddy.
Yes, sir. I really appreciate you. I went down there and gave a good word for you.
Thank you.
Yep.
Thank you very much.
For I'm Washboardjim. I am the manager and the creator of the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being in the now. I'm going to give him the room link. I'll give him my YouTube and he can find it there. Chart patterns, moving averages, and being in the now. I'm going to give you something first.
What you got?
You ever get on YouTube?
Every once in a while.
Yeah.
I was going to ask if you do any local events.
No. Retail Traders, James Howard Retail Traders on YouTube. And type in Sneaky Snake.
Okay.
That'll come up. On your spare time or something, you can go watch some videos I have on here. This is my channel right here. So I'm live. I got all kinds of videos. You can learn how to trade.
Interesting.
Yep.
Shoot. Get a good few trades on my part. I might not have to do this business for a while.
Yep. Are you married?
No.
No.
No. Happily single now.
Very good.
Going on about a year and a half.
Oh my, sorry to hear that.
It's for the best.
Very good.
It was for the best.
Yeah.
After 10 years,
That's how long my last one lasted. 10 years, and I give her the house. I didn't want no more of her.
I
Just,
should have took
I'm
her
done
dog.
with you.
That's the only regret. I should have took her dog and pooped in her cat's litter box on the way out.
Yeah, well. Yep.
I have to keep moving around, otherwise my sciatica triggers up and I'm froze for a bit.
There you go.
Great meeting you.
Nice to meet you too, sir.
Love the song, by the way.
Well, thank you.
You take care.
Yep.
And I'm going to lock this door on the way out.
Yep, I'll never forget you.
See you, buddy.
Yep.
Take care.
Alrighty, he's back on the saddle again. Marley, is she pumping NVO? Man, it's the same stocks all day long, baby. Oh, we broke resistance. It's kind of hovered around this triple top. I don't know. We got higher lows. Almost like an ascending, well, it is an ascending triangle now, that thing. So yeah. It went from a, so we might have a better chance of breaking out now. There we go. 667134, and the option now is at 24. My God, $2,500 a contract. $6 from 25 to 525, 2,500, 27, 28. Oh my God. I don't F around. Trump. Boom, baby. I would take some profit off the table. Tonight I will have a steak sandwich. I could have 20 tonight. I might go for the big one. The ribeye or the tenderloin? What should I have? Anybody have any suggestions? Or I could go to that other joint. I've been wanting to try it out. What was the name of it? Oh, I forgot the name of it. I didn't write it down. Ooh. Jim Steakhouse. Wills. They don't look too good. That's an ugly looking steak right there, man. God. They gotta look better than that. For the price. Trying to reach. Best steaks in town. $95?
10-year yield picking up off the back of some of these concerns that we saw in the market yesterday, the sell-off given the financials and some of the bad loan worries. Let's take a look at gold, because this is the chart for you. Obviously, we've continued to see this week hitting record after record, but taking a little bit of a breather at the moment. So coming off a bit, this has been very much a safe haven play that we've seen many going into over the course of the last few weeks, and there are expectations that we could continue to see this rally, although it looks like they've hit the pause button on that for now. But no doubt this has been a very, very interesting story that we've been tracking as far as what it's telling us about some of the concerns around the economic uncertainties.
There's no economic uncertainty, baby.
Expectations, and as we know, we will be getting that CPI print out. Hopefully,
These people are so naive.
All eyes on that as well, as far as the
I'm going to say this one more time. The fat cats trade like they're in 1920. They don't trade like we do. They've been biting the bullet for the last 6 to 7 months because they have Trump syndrome. They don't understand you got a business president that's actually run a business running the country. And that's the way the country should be run, like a business. Instead, they've been fed trillions and trillions and trillions of printed dollars for free to cause us American taxpayers have to pay that debt off. And we're paying it off with inflation. They're talking about inflation now? Where in the hell have they been for the last 4 years? It makes me sick. And they're wanting to print another 1.5 trillion for illegal immigrants? That shouldn't be in here in the first place?
I'd love to just start with your takeaways from the bank earnings that we got.
I'm about to hit my target.
Were pretty much crushed almost across the board. What were some of the big themes that you saw?
Well, yesterday we saw bank sell-off, and then we saw an even bigger sell-off abroad. So that put a lot of pressure this morning on Fifth Third and Huntington for the regional bank news, and they both really hit it out of the park. And Fifth Third, had to deal with a loss, and that's what everyone's worried about. But if you take out the loss, their charge-offs were actually down, margins hanging in there, revenues they had a beat. So that was great news. And then Huntington came in even more swimmingly, if you will, with a real nice beat, a year-over-year double digits, growth, all good news. And that really set the tone for the whole banking market, because after Jamie Dimon's comment about cockroaches, I think everyone was looking for more bad news.
Yeah, it certainly has been one of the most quoted comments in a long time. I must have heard that one 20 times already, just because of the visual that it creates. But from what we've already gotten, what do you think is the single most important signal that you're taking? where the mega banks are the most discussed?
Well, one, there's an industry issue here. If you go through cycles, the investor tends to get confidence in the big banks because they're bigger, not necessarily because they're better, but that's the perception. And then it rolls down to regionals and community banks, and that's where we are in the cycles. There's a lot, the higher multiples are in the big banks, then the regionals, then the communities. So what we try to do is go, hey, do your work and start with the communities and regionals, and you'll get them a lot cheaper. So Huntington and Third Coast are perfect examples of both. Huntington trading at about 11 times forward PE. You've got nice growth rate, double-digit tangible book value per share growth rate, which is fantastic as an investor, and you're getting close to a 4% yield. With that drop yesterday and then a good correction back today, it's a screaming buy. And maybe even bigger buy would be Third Coast in Texas, great market. Huntington's obviously coming to Texas with its acquisition of Veritex, which is closing Monday. But Third Coast is the fastest growing tangible book value per share bank that's public in Texas. It's a small cap, maybe closer to a micro cap, 600 some odd billion market cap. But that trades close to 11 times PE, a low 1.28, I believe, times tangible book value growth. Those are both good buys. And then a market where people are worried about overvalued, why wouldn't you try to jump in one of those good, steady banks with high tangible capital ratios that are rock solid?
All right, so those are rock solid. We've heard from most of the banks at this point, both big and small. So as we're now turning our focus into Q4, what theme is the most important thing, do you think, for investors to be keeping their eye on?
Well, we all love as investors coming into earnings season to see how the big banks do, right? Because banks are, and all banks, because of the plumbing and wiring of the economy. So Huntington and Fifth Third set the tone this week. Next week, we'll get a whole bunch more regionals and then community banks and whatnot. So just look for these themes and see how many one-offs there are. See how many of these cockroaches show up. I don't think it's going to be as many as people think, but that's what we look for as investors. And what it'll do is it'll create some investing themes, at least in the banking sector, where, oh gosh, all banks sell off because they've been a fear trade since 2008. So you can set your watch to it. If there's a number of these things that show up, they'll all sell off, and you'll be able to pick out some banks at really good buys.
Well, Dory, we appreciate you being with us to talk bank earnings. That's Dory Wiley, the CEO of Commerce Street Holdings. And I'll send it back to Sam on the floor of the night seat.
Thanks so much for that, Marley. Well, coming up next, we're joined by the founder and CEO of R4 Technologies to discuss the government shutdown impact on SNAP food programs and what it could mean for the economy.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Market on Close. I'm Marley Caden in Chicago alongside Sam Vadas in New York. Apple and F1 announcing a 5-year deal for Apple TV to become the exclusive home of F1 beginning next year. The $150 million a year deal is the $80 million that ESPN was willing to pay from F1's prior deal. Huge uptick there. This comes after Apple released the F1 movie starring Brad Pitt. You can see some of the footage there behind me. This deal is the latest in the sports ecosystem as we've seen Netflix, Apple, and Amazon join the traditional broadcasters in bidding for sports rights. So we thought we might take a look at some of these recent deals, see where everything landed. Here's some of the recent ones. We just talked about F1. They've got their 5-year, $750 million deal here with Apple. We've got college football playoffs on Disney. That's a 6-year deal valued at $7.8 billion. You can just see, depending on the sport we're talking about, big differences here. The NBA, that's with Disney.
Marley,
NBC,
we don't
and
care
Amazon,
about
11-year deal,
sports.
$76 billion in value here. And WWE, this is a more recent deal with Netflix. This is a 10-year, $5 billion deal. Sports streaming,
God.
a huge revenue.
Shut up. I guarantee she used to be an anchor at CNBC. I just know it.
Technology to find the to-be-wasted food and match it to the food needy folks to make the SNAP dollars that they do have go 2 and 3 times. So really the way to think of it is whether the government is open or closed, everyone can agree on people need to eat. And this is what's really neat about where we are with AI technology now is we can use it to expand citizen services and do more with less and stretch existing budgets.
Okay, so we're in day 17 right now, Paul. I'm just wondering, how critical is things getting? I mean, just how far away are you from sort of running out of funding, and how many people exactly does that impact?
Overall, in the country, there's over 40 million people that are SNAP recipients. And
Jeez.
The budget shutdown.
That's way too many.
Through, and I think everyone is committed to making sure people can eat. Really, the big idea now is how to help stretch budgets and help the recipients do more with the budget.
I mean, I got a cousin. She told me personally, she says the more kids I have, the richer I get. And she hasn't worked a day in her life.
From the beginning when the crop is planted all the way through distribution.
And that's just,
and really the big idea.
I know, 40 million, 4 million, 40 million.
Hundreds of billions of to-be-wasted food. It's over 6.5 billion tons of to-be-wasted food throughout the entire system. So really the AI technology that we're deploying now is really game-changing to really drive federal, civilian, and
probably,
efficiency
I'd say probably
in the food
3/4
side.
of them can work.
It just stretches the existing budgets that the SNAP customer has. So $300 buys $600, $900 worth of food. So think of it, it dramatically improves affordability.
Okay, so then what is the sort of broader economic impact then of this issue right now? If the funding...
I had a choice when I was young to either go on disability because I have epilepsy, which I could have got real easy and had everything. I mean, just have it all. And I decided I didn't want that. I wanted to work. at a very young age. I'm a little jealous, yeah, envious, because I could have sat and enjoyed life and not been fished and.
You know, products have been purchased, contracts have been made for food throughout the entire system. So, there is actually a surge in capacity as demand naturally as people are nervous, especially in the food insecure populations, right? So, really, the big idea is to help alleviate that, to try to use this excess capacity through the system to make it so that food is affordable and that the shock is minimized.
Yeah, and then obviously sort of the broader economic fallout on inflation, etc. Just give us a sense of, how you've been helping at least reduce some of that.
Well, the really big idea, this is the golden age of AI, right? And I think this is where it's really exciting to watch governments now lean forward to try to innovate and use new modern technology to enhance and stretch and improve citizen services, really do more with less. And in this case, we all grew up not wanting to throw food away, right? Learning to not waste food. In this case, what's really exciting is now we have the ability to find this to-be wasted food and literally direct it to where the SNAP customers are at the store that they're going to. So this is really quite exciting to watch this new type of private-public partnership all being driven by the golden age of AI.
Paul, it's very exciting, and thank you for the work that you're doing there and taking the time to talk to us today on Market on Close. We hope you have a great weekend. That's Paul Breitenbach, the founder and CEO of R4 Technologies and also the co-founder of Priceline. Coming up next, we've got Options Corner. Rick Duquesne.
We got 41,730,000 on food stamps. Savings per taxpayer only $309. 37, almost 38 trillion in debt. So spending just keeps going on. Deutsche, 674 billion saved. That's $6,000 per taxpayer. State debt, $1 trillion per each state on average. Debt per taxpayer, $326,000. Debt per citizen. Now that's kind of fuzzy math. Unfunded liabilities, 104 trillion. Now I thought it was a lot more than that. Interest. U.S. total debt, 104 trillion. Under Biden, that was about 3 trillion, 2.5 million. We're at almost 74 100,000 under Trump for border encounters. $62 million U.S. retirees. Almost 13 million manufacturing jobs. It looks like it's down 5 million from 2000. 37 million living in poverty. 27 million without insurance. Okay, well, none of it sounds good. It was just two off my estimated guess. $2. Ooh, yeah. It's not been too bad of a week. Apple. Meta hit my resistance this week. Wish I saw that this morning, but it wouldn't have mattered. If it was under 700 at open, I'd have bought options. I'm getting a little tired. 10 more minutes left.
Sometimes, you know, you could have done better. The same goes for where you invest. Level up and invest smarter with Schwab.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
We're back here on Market on Close. I'm Sam Barnes here on the floor of the New York Stock Exchange alongside Marley Caden in our Chicago headquarters. There's just a few minutes left in today's session and for the week, so let's welcome in Kevin Green, Senior Markets Correspondent, to help out close today's session. So, Kevin, we're just obviously seeing markets finding their footing today and a little bit of more buying coming in the afternoon session here. What are you seeing as we look towards the close as far as the levels are telling you on the S&P 500?
Well, Sam, I mean, catching its footing a little bit, let's say that. I mean, we have seen still a lot of volatility within the market, but we are up on the session. Hopefully, we're able to hold this going into the close. Biggest risk that you have is selling or this de-risking happening going into the weekend, where you could see actually some pretty dramatic selling to the downside here. I'm not sure if that's going to happen in the next 5 minutes or so, but we have seen the sectors actually performing pretty well. This morning, we kind of highlighted the fact that the 66.45-ish area was going to be a key area of resistance. For the most part, it actually was until that last kind of push to the upside. President Trump had some comments around China that also gave us a little bit of fear here, and we're still kind of in this pattern, making lower highs, but also making higher lows. So at some point in time, we will come to the apex of this over the next couple of trading sessions and going into the close. Once again, similar type of trading pattern here, making higher lows, making higher highs in this fashion here. So overall, we're looking pretty decent. Market breadth looks actually pretty decent as well. Volatility has crushed here a tad bit going into the weekend, and I think that's actually a really decent setup for next week if we are able to close above the 20-day moving average for the S&P 500. Let's see if that's going to happen. We're about 10 points away from that.
Yeah, we're very close. You mentioned volatility there and the setup. You know, as I'm taking a look at the VIX, we have retreated pretty heavily, almost 15%, about 21. What were some of your observations in terms of volatility, especially as we saw in response to the regional bank numbers?
Well, the fact that volatility continues to rate on a day-by-day basis, rating higher on a day-by-day basis, that's something that you don't really want to see. Usually it does coincide with consolidations or even pullbacks in the market. And so hopefully next week we do see volatility completely crushed to the downside, hopefully around that 18 level. That's actually a pretty decent level if you are an intraday trader. But if you're looking at the volatility curve, or the VIX minus the VIX 3-month, we are now out of that backwardation. That's your first step. So we are seeing near-term volatility inch a little bit lower here. We are now in a normalized curve for the most part, and we'll see if this is going to continue until next week. I think the biggest risk that you have is any type of economic uncertainty starting on Monday or Tuesday of next week. If we do get this back and forth between China and the United States kind of heating up a little bit, that probably could re-rate volatility a little bit higher.
66666.
Netflix, Tesla, as well as Intel, that could also be really good drivers for the equity market if we do get good numbers on both the top and bottom line from all three of those companies.
Yeah, no doubt we're going to be watching to see how traders react to this latest in the US-China relationship, because this phone call, I believe, is going to be taking place at 9 p.m. Eastern between Besson and his Chinese counterpart. So let's see. But at least for now, as far as other pockets of the market, Kevin, what have been some of your takeaways as we approach this close in 2 minutes' time? I mean, oil at 5-month lows, you've got gold continuing to hit record highs. What really stands out?
Yeah, so I'll be kind of quick. The fact that we're not able to claim the 20-day moving average on the S&P 500 for the last 3 days, and we pretty much touched it for the last 3 days, that is standing out, consolidating. Now we have a defined range. Is this the first wave of a 3-wave type of pattern for the S&P 500? That could be the case. If we're looking at the E-mini S&P futures, you could also make the case that we have now gotten back into that channel. That was the big risk that we had early on this morning. We did see that flush to the downside, pretty much broken some really key areas of support here. We're trying to reclaim that right now, trading above that volume point of control on that volume profile here. So I think kind of going into the close, it looks okay, but I think there's some bigger risk for next week. Also, when you have gold, the big thing about gold today, it's traded at the lowest contracts. If you're looking at the gold gold contracts here, the gold futures, we did see the highest volume level since pretty much 2020, and at that point in time, that was actually pretty much the highs. I know this is a chart that's showing the daily price action when it comes to.
Alrighty. Well, not a bad day again. I went all week without no losses. I think that was excellent. I traded a little bit less. That's probably why. My average was 5 a day, which usually about 7 or 8, with some good days being 10 to 12. But I think I basically waited for the good setups, or tried to. I'm going to get out. I got a lot of dust I got to clean up. So I think I'm going to work on that for a little bit. Mop the floors. Just going to get it all clean tonight. And probably watch YouTube. But, you know, I can't complain about this week at all for being a rough week. So we're going to go over just a couple things. It's 5 day, 5 minute. So, sell off Friday. We maintained support. We dipped down this morning into my channel I had here. And I wanted to hold that bad, and we held it. Then we bounced up and broke my resistance. I had 659.95 long, and we busted past that. So that was pretty good, about $6 on SPY. So I say we closed pretty good. We have a triple top. So it was a good comeback today. Yesterday we sold off and hit, come down and double bottomed and dipped a little farther than that. SPX 5 day, we held higher lows all week into a symmetrical flag with a triple top. So that was a good day. I'm getting tired. IWM, I didn't even look at it today. We had that pull back right to my support line that I did yesterday. So we held that. That was good. And the QQQ, kind of lower than the highs. QQQ turned out to be a good week. Back up here, could have gone a little higher, but made up a loss today with a double bottom on Tuesday. Sell off again after hours in pre-market to perfect. And it opened up pretty good until the open. Bounced off the 200 on the 5 minute. So that's a good day. It's not as bad as everybody thinking it is. You're just listening to a lot of negativity. When the market's down, people get kind of negative, and I always look at it as an opportunity, as long as you don't get stuck in them. But I always, to me, this country's been run better than it ever has. There's a lot of waste out there. A lot of waste. And I didn't really think it was that bad, but I'm hearing stuff. The money we spend on other countries just for what, homosexual parade for $3 million and just all kinds of weird shit that we're spending money on. And they cut a lot of that out, and that's what these Democrats want. They want that back in the bill. And we got all them illegal immigrants we got to take care and babysit. I mean, can you imagine going into a country and you can't speak their native language, English? I mean, I would have a heck of a time if I went to somewhere that didn't speak English and I tried to get work. I'd expect someone to take care of me, which we will do. I mean, I complained about it, and it just kept going on and on and on. It's just, I don't know. I don't think I'll ever get over it. How many illegal immigrants were in this country in the last 4 years. Just looking at the millions that came in, thousands every single day. I feel sorry for the women. Mostly were men. But that's that. I just don't think it's my responsibility to pay for their bedding. Five-star hotels and free food and free health care and free education when I have to work every single day. But what can I do? I got my 30 acres. I just don't like the weather here. Weather sucks. I loved it when I lived in Hawaii. Man, every day was 82 degrees. Never felt hot. Nice breeze going on. Didn't have air conditioning in the house. Didn't need it. Well, I'm going to get out of here. I'm getting a little tired. Might take a nap before I get started working. Keep your chin up. I'll catch y'all later. Do your homework, study chart patterns, moving averages, and being in the now.